bid there. So look, there's always risks in the market. There's always something to be worried about. There's always things to be bearish on, and there's things to be bullish on, and that's our job. And I think this year we've navigated that pretty well, being in the right places, and I think we're going to continue to have to shift what we want to own, not so much how much you want to own.
You've acknowledged the one thing that could be a headwind for equities is interest rates. You wrote about it over the weekend. What is it about 450 that's challenging to this equity market? Because based on the rally we've seen over the past few weeks, we don't see much of a challenge.
Well, it's stabilized at 450. So we've identified this level like almost 2 years ago, and it's been like a charm. I mean, as soon as you cross 450 on the upside, the correlation between stocks and rates goes negative, and vice versa. Now, I do think that we kind of went to 470 in the April period, and then they calmed down again. I think the market is getting comfortable that they have enough tools, because the Treasury Secretary has talked about that, to keep it 450 or below if they need to. And I think we talked about this last time I was here. 475 is like the worst place, because that's where markets get really nervous. 5%, I actually get bullish, because then I know that they're going to come in and intervene with either liquidity injections or they're going to use these other tools that the Treasury Secretary has talked about. So we're optimistic that that could be managed. And in other words, that risk could be a risk for 5 or 7%, but ultimately that risk will get managed too.
Do you get clients asking you now about the debt auctions? Asking the equity strategist about the debt auctions that take place in the week?
Well, I don't really ask the equity folks, but I mean, people do ask about it for sure. I mean, and once again, we have seen many auctions, soft auctions for the last 2 or 3 years. We've seen this occur, and then they get control of it again. I don't want to dismiss the risk from the back end of the market. That is still, to me, the risk. I mean, it's the risk not only for markets, it's a risk for the U.S. Like we have too much debt, and this is a focus. And if we don't, I mean, ultimately, if we don't, cut the budget over time, and maybe the market is now giving them a lead, like, okay, we'll give you 12 months, But if we don't get serious about, budget reconciliation and actually reducing the size of the budget over time, this is an issue that's going to stay with us.
Mike Wilson of Morgan Stanley, 3 words over the weekend: don't fight it. Don't fight this market. Mike, thank you, sir. Appreciate it. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Anand. Hey, Yahara.
Hi, John. We start with the latest out of Los Angeles. The Trump administration has deployed 700 Marines there to respond to protests around immigration raids. Meanwhile, the state of California is suing to try to stop the deployments with the National Guard already there. President Trump backed comments from border czar Tom Homan that California Governor Gavin Newsom could be arrested if he interferes with the response. Meanwhile, Blackstone is planning to invest as much as $500 billion in Europe over the next decade. In an interview with Bloomberg, CEO Steve Schwarzman said he sees the region as, quote, a major opportunity. His comments are the latest sign of more investment firms turning to Europe. And this is an interesting one. China has invited American social media influencers to join a 10-day, all-expenses-paid trip to the country next month. This is part of Beijing's efforts to boost people-to-people exchanges and showcase the, quote, real China. They will enlist influencers with at least 300,000 followers to collaborate with Chinese content creators. That's your Bloomberg Brief. John?
Recruit them into the propaganda machine. Yahara, call it what it is. Up next on the program, the Morning Calls Plus, Ben Kello of Baird on his downgrade of Tesla ahead of its robo-taxi test later this week. That conversation's up next, live from New York. You're watching Bloomberg TV.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
The open in about 1 hour and about 12 minutes away. Equities into that positive by 0.2% on the S&P, up by 0.2% on the Nasdaq 100. Those of you just joining us, welcome to the program. If you're tracking trade talks between the US and China taking place, day 2 over in London at Lancaster House. They've just taken a lunch break. That's going to reconvene again in about 40 minutes' time. So 2 p.m. local. Look out for that a little bit later. Let's get you some morning calls. First up, Redburn, double downgrading McDonald's to sell, saying weight loss drugs are suppressing consumer appetites. That stock is down in the pre-market by 1.2%. Your second call from Loop Capital, raising its price target on Disney to $130, citing a more stable environment as it gains full control of Hulu. Keeps putting up prices. Stock is down by 0.5%. That's me editorializing. You see how expensive Hulu is now?
I don't have it for that very reason, so yeah.
Getting more expensive. And finally, UBS reiterating its neutral rating on Apple, noting a lack of AI announcements at its worldwide developers conference. That stock is down by about 0.1%. Let's stick with the Mag 7. Tesla set to unveil its long-awaited robo-taxi on Thursday. Ben Callow of Baird downgraded the stock to neutral, writing, "We believe Musk's comments regarding the robo-taxi ramp rate are a bit too optimistic. This excitement has been priced into shares." Ben joins us now for more. Ben, welcome to the program, sir. Appreciate the update from you off the back of this call. Ben, I want to say up front, you are constructive over the long term on this name. Just walk us through why the change now.
Yeah, I didn't want to make it about the spat or dispute between the president and Elon Musk. This was something that, we had contemplated for quite a while. I do think that, the valuation has got ahead of itself around robotaxi. It's a very big event for Tesla. It's been in the works for a long time. I do think that two things, it's going to be higher competition when you get out there, Waymo, others. I do think the rollout will take longer. I do think that at first it will require more people, so people in control centers, making sure that the cars don't get into accidents if there's something like that. And so the economics will not be as good as they could be over the long term. And so I think that as we get through this, the hype dies down and it becomes reality, and rolling this out will be very difficult. Not to say that Tesla's not done very difficult things in the past. I think there are other risks, though. I mean, key person risk outside of the president and Musk's spat. I think that retaining talent is something that I worry about. We did see the head of Optimus, the Optimus program, leave recently. The best thing about Tesla is their employees, innovation there. I think they'll always be able to recruit very strong engineers. This makes it a little more difficult. And then just very near term, I do think that numbers are too high for deliveries. We're seeing, a lag in all auto sales, but, with Tesla and, the brand damage that has occurred in different regions, I think that that's a risk as well. And then we have tariff risk, and we can go on for other risks as well. And so we thought it was time to just go to the sidelines for now. We do remain constructive in the long term. Short, intermediate term, though, I think there's downside to the stock.
So, Ben, let's unpack some of this. So 3 buckets of risks. We've got lofty expectations, key man risk, and competition. Ben, can we just sit on competition for a beat? Where is the competition coming from? Who do you worry about?
Well, in China, I think is the most fierce competition on the electric vehicle side. In the United States, I think that, the ride-hailing robo-taxi service is going to have competition from the likes of the incumbents of Uber and Lyft to Waymo to others. There are several other companies out there. Amazon has a company that is working on autonomy as well. And so I think that the economics will not be as lofty as some people think. Additionally, it is also a consumer product. And so when we worry about brand damage for vehicle sales, you have to wonder about any kind of brand damage when you start getting into a car without a driver. And then third, in Europe, I think you have a host of competition, and lots of bears over the years have talked about competition, and it hasn't really gone anywhere. But now you have the likes of BYD selling into Europe. Tesla sales were better in the last month than BYD, but BYD is catching up with them. And then you also have Germany that are making a big push for their domestic OEMs, auto manufacturers, giving some types of credits or breaks on their cars to try to catch up with Tesla as well. And so you kind of have it coming in all different directions right now.
On the driverless vehicle side of things, we also learned this morning that Uber would be partnering up with a company called Wave to try to launch robo-taxis in the UK. Ben, a really tried and true business model for tech had been prove it works in America and then export it abroad. When it comes to a robo-taxi for Tesla, is that option, is that business model for growth not as available to them because of the brand damage you've been talking about?
I think it is. And I think one thing, about the key person risk and Elon, this double-edged sword. I remember, during the Biden administration, Elon gets on a plane and goes and meets with Xi, and just out of the blue. He had, his reach stretches very far. I think that, there are difficulties in China about data. They have made progress there. Europe is a little more, the EU is a little more bureaucratic, I think, and more difficult, like a patchwork, to get approval there. In the US, one of the fundamental things that the relationship between the Trump administration and Musk had going for it is to try to have a blanket federal rule about advancing autonomy versus the patchwork state way that we have it right now. So I think they'll be able to move, outside of the United States in this. I think it takes time. One of the advantages they have is they're going for this all visual, all camera approach versus, much higher cost for a Waymo. A Waymo vehicle costs over $200,000. And so it's much more capital intensive. There's still a big debate whether, Tesla's approach will work in the long term, but that remains to be seen.
Ben, just before you go, I know you don't want to make the downgrade about the spat between Elon Musk and the president, but I'd love a comment from you on that. Do you think we made too much of a big deal of that about what it means for the stock? What was your general reaction to how that played out?
Well, I think it's bad for our country. And I love our country. And I think that, being public in this dispute like that, and it got pretty racy, I don't think that's good for anyone. Tesla, SpaceX, Elon's other companies, some of the most, if not the most innovative companies in our country right now. And, getting, down and dirty in the sandbox doesn't do anyone any good.
It's hard to disagree with that, sir. Ben, appreciate your time this morning. Thank you. Ben Kallo there of Baird. Tesla in the pre-market doing a little bit better, positive in early trading. Up next on the programme, we'll catch up with Matt Lazzetti of Deutsche Bank with key inflation data due out this week and why Matt Lazzetti means maybe this economy has maybe adapted to interest rates of 4.5%. We'll get into that in just a moment. Live from New York, you're watching Bloomberg TV.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
The opening about 60 minutes away. Equity futures on the S&P 500 positive by a little more than 0.1% on the S&P. Similar move on the Nasdaq, higher by close to 0.2%. With 1 hour until the cash open, with your morning movers, let's get back to Yahira. Hey, Yahira.
Hi, John. We start with J.M. Smucker. Those shares are falling 8%. The packaged food company just reported results and profit forecasts disappointed. This is because the company behind Folgers Coffee and Jif Peanut Butter said tariffs are hitting its coffee business and consumers are pulling back. Yet despite that consumer hesitance, it still plans on raising prices. We'll see how that works out for them. But one bright spot at the company that they did mention is that apparently Uncrustables are flying off the shelves. Not the same enthusiasm for McCrispy chicken strips at McDonald's. Our next stock, which is down 1.3% after it was hit with another analyst downgrade this morning, this time by Redburn. Yesterday, it was Morgan Stanley. And then there was Loop Capital, which flagged that people were complaining about those McCrispy chicken strips, saying that not only were they smaller, they also had less bread. So they also cut their rating. And turning to something outside of food, because I'm getting hungry, we turn to Meta Platforms. Those shares are up 1%. And this is as we here at Bloomberg report that CEO Mark Zuckerberg is apparently frustrated with their chatbot models. And this is because of this, he is personally building a secret super intelligence team, even holding recruiting events at his homes in Palo Alto and Tahoe as he tries to assemble the best of the best to try and achieve artificial general intelligence. John?
Yahira, thank you. Thank you very much. Three of the movers to look at going into the opening bell about 60 minutes away. Later on this afternoon, we start working our way through some debt supply. 3-year notes, $58 billion worth. On to tomorrow, 10-year notes, $39 billion worth. After that, $22 billion of 30-year bonds. Of course, all of this taking on additional importance after the tax bill advanced through the House and onto the Senate and all the debt concerns over the past few months or so. That's the debt supply story. Also some economic data, a double dose of inflation data this week. CPI due tomorrow, PPI after that. Mike McKee has more for you. Good morning, Mike.
Good morning, John. I'm going to say something you haven't heard me say in a while, and that is that the CPI report tomorrow could actually be important to the markets. Not going to change what the Fed is going to do next week, but we may get our first clues as to some tariff pass-throughs to consumers as companies try to deal with the uncertainty and the tariffs that we have already seen. The consensus is we're going to see a rise on a year-over-year basis in both the headline and the core. It's the first increase since January. The survey, though, says the risk is to the downside. If there is a surprise, it may be a little bit less inflation than we anticipated. But we will be parsing all these categories for tariff effects. The pass-through is expected, at least according to Bloomberg Economics, in food at home. Yahira mentioned getting hungry. Grocery prices are down, according to the USDA, which does its own monthly survey. Furnishings, apparel, electronics, all those are imports that we could see higher prices feed through into and used in new cars because of the tariffs that the president has put on automobiles. On the other side, we have declining gasoline prices and natural gas prices, so energy could be lower. Core services could be lower as well. Airfares and lodging probably have fallen because travel has fallen off. So those are things to watch tomorrow. There's one other thing that all the Wall Street economic nerds are going to be watching, and that is the Trump pass-through to the survey itself. Because the Bureau of Labor Statistics had to let go people and people have quit, it did appear last month like the survey had a larger than expected response rate because perhaps they dropped some survey places from the list. And that would require them to impute more prices than actually getting the specific price levels. So there may be some questions about the data tomorrow. That's something to keep an eye on.
Mike McKee, thank you, sir. Could be the calm before the storm. Mike McKee, thank you so much. Matt Latelli at Deutsche Bank is with us around the table. Matt, good morning.
Good morning.
It's good to see you, sir. Let's talk about whether it's too early to see that kind of inflationary impact from the tariffs tomorrow or not. Is it?
So I think from a broad-based perspective, it likely is. I think if you look back to the previous CPI, you began to see it showing up in some of the data points. But that's been offset by some of the discretionary services items where we've seen weakness, such as airfares. You saw it in the PPI data last month, and it typically takes a few months for that really to begin to show up into the CPI. And so our baseline expectation is you get a little bit more evidence of it in tomorrow's print, but really it takes the June, July, and then August data to get stronger evidence of tariff pass-through.
What would you need to see to say, you know what, I think this could be sustained, this could be sticky, it's not a one-off shock?
So I think it's going to be hard in this environment. I think typically if you go back to what we saw of the post-COVID environment, initially there was this view that it might be transitory or temporary. And that view was dominated by the fact that it was narrow on a few items, used cars, other core goods at that point in time. I think to think about it being stickier, you want to see it broadening out across the basket. So probably not just in core goods items that you can readily identify for tariff effects, but other items. So for example, as you get vehicle tariffs, you're likely to see car repair pick up with some lag. Car insurance inflation is going to pick up alongside of that. I think those are the effects that you'd want to see to get some sense that it's a little bit stickier than anticipated.
There was an expectation that in this 90-day pause with China that you'd see a lot of shipments come in, that people would front run it and make the data messy, et cetera. We haven't really seen that. There hasn't been a lot of action in the ports. Is this still an economy in suspended animation, and when does that change, if so?
I think for a lot of ways it is. Now a lot of this halting or stalling out is just give back for surge in imports that we had in Q1. And so particularly in the trade data, you've had this massive volatility where net exports were very weak in Q1, are going to be very strong in Q2, lifting the GDP data. But I think the market kind of understands that. I think but we're now in an environment of where's the pass-through to the other components of especially what the Fed cares about. The labor market, are we seeing layoffs take place and hiring dip? So far, I think the answer is not yes. Last week's jobs report was mixed but resilient enough, I think, for the market. And then secondarily, when we begin to see it in the inflation data. Again, I think we've seen it in the PPI data so far, still waiting to see it for the CPI. We're not surprised that you haven't seen it yet. Our baseline expectation, if you go back to 2018, 2019, is that it was always going to take until the June, July, and August data to see the effects.
I just want to flag some of the language you used. When you asked, has there been weakness in the labor market, you said not yes. You didn't say no. Are there pockets of weakness that you're looking at that your concerns might bubble up into something more concerning?
I think you still have this labor market, which has been identified by a low hiring and firing environment. If you look at the JOLTS data last week, the hiring rate remains low, but layoffs remain extraordinarily low as well. That's always been a fragile equilibrium. Now, nothing has broken. That equilibrium has persisted. But there was worries, at least initially, that the tariff shock, the uncertainty that's come along with it, if financial conditions were tightening, that could lead to the layoffs that could kind of break that fragile equilibrium with the labor market weakening more materially. We didn't see that last week, but I think that's still a risk as you look ahead.
You mentioned something in a recent note about interest rates maybe stabilizing around 4 to 4.5%. Can we sit on that story just for a moment? Because I thought it was a fascinating note. Do you think we've fully adapted to an interest rate with something close to 4%? And what does that tell you about how much this Fed might cut if we see some weakness down the road?
Yeah, so I think the main chart of that piece was showing, if you look at where the Fed funds rate has been, we've been at 4.3% since December. If you look at headline PCE inflation, at least, it's at 2.1%, basically within spitting distance of the Fed's target. And you look at the unemployment rate, we've been stuck at 4.2% for several months at this point. That 4.2% is exactly in line with what the Fed thinks the long-run unemployment rate is. And so if you look at that chart, it looks like you've settled into what economists would call a steady state for the economy. It actually looks like you've simulated the economy through a model where you're at kind of equilibrium and everything is working its way out. No, we've been in the high R-star camp for a while. We pegged at the nominal neutral rate between 3.5 and 3 3/4. So we've always expected this cutting cycle to be shallower. But we're just proposing the possibility that there's not much evidence that we're very far away from neutral at the moment.
This conversation was kicked to the sidelines because of the tariff story over the last few months. I get all that. But is the Fed moving towards you? Do you see the Fed moving closer towards you in the coming meetings?
I think so, and we'll get maybe some evidence of that next week. We'll get the dot plot next week where I think there's broader expectations that the Fed will signal a more hawkish stance. We'll be looking at the long run dot. Does that continue to migrate higher? My guess is that it does. So they've been at 3% for the long run nominal neutral. That probably continues to move higher. I think the balance of estimates that we look at are kind of closer to 3.5%. But I think to really fully embrace the idea that neutral is materially higher, you have to get beyond the tariff concerns, the uncertainty shock that we've had, and have a labor market that still looks resilient 3 to 4 months ahead.
Since you took us to next Wednesday, let's sit on next Wednesday. How useful is the rest of the SEP from the Federal Reserve?
I think it's an environment where, Chair Powell likes to, I think, downplay the signal from the SEP when it's kind of convenient. This will be an environment where it's probably very convenient. I think the market will, if they only show one cut next week, which I think is broadly anticipated, the market will move to what do next year's forecasts show. Does inflation rise a little bit? Are they showing some stickiness there? Are they showing less cuts through next year? I think that could signal kind of a more hawkish stance, but I would also anticipate that Chair Powell kind of tries to walk that back in the press conference. I think they don't know, we don't have huge confidence about what policy is going to do this year because there's still tariff-related uncertainty, fiscal policy uncertainty. A view towards next year about what policy is going to be.
He's not going to be there through much of 2026. Does that complicate signaling at the top of the Federal Reserve?
I think for now, they're kind of more focused on the near term. And so they're sending a strong signal that they're in a wait-and-see mode, that they're well-positioned to respond to risks. And I think that signal will continue. Certainly over the summer months, as perhaps you get some evidence of who President Trump may appoint to the board, I would expect that in replacement of Governor Kugler in January, that could be the next potential Fed chair. Certainly the market focus will shift to that.
Matt Lozzelli of Deutsche Bank. Matt, appreciate the time. Looking ahead to inflation tomorrow on Wednesday, then a week tomorrow, we get that Federal Reserve meeting, we get the statement, a news conference, and an update to the summary of economic projections as well. If you are just joining us, welcome to the programme. Equity futures almost totally unchanged through most of this morning. A bias to the upside over the last month or so. Again this morning, up by something like 0.2%. With an update on stories elsewhere, let's get your Bloomberg brief with Yahara Anand, who has more. Hey, Yahara.
Hi, John. Trade negotiations between the U.S. and China are continuing for a second day in London. The U.S. signaled a willingness to remove restrictions on some tech exports in exchange for assurances that China will ease limits on rare earth shipments. Treasury Secretary Scott Bessent said they had a good meeting yesterday, and Commerce Secretary Howard Lutnick called the talks fruitful. Meanwhile, here in the U.S., Health Secretary Robert F. Kennedy Jr. dismissed all 17 members of a key federal vaccine advisory panel, accusing them of conflicts of interest. Before joining the Trump administration, RFK Jr. was known as a vocal critic of the committee, which advises the director of the CDC and helps shape national public health guidelines. And Apple unveiled the most sweeping redesign in its history at its Worldwide Developers Conference. The design, called Liquid Glass, will unify user experiences across all devices from iPhones to MacBooks. As part of its rebranding efforts, the company also confirmed that it will use years, not version numbers, to identify its software. Less confusing. That's your Bloomberg Brief. John?
Yahara, very much so. Yahara, appreciate the time as always. Thanks for this morning. Up next on the programme, we'll set you up for the day ahead. Plus, we'll catch up with Terry Wiseman of Macquarie with key Treasury auctions coming up. 10-year supply, 30-year debt too. Plus, the conversation continues in London, negotiations between the US and China. We'll touch base with Anne-Marie on the ground in Britain's capital in just a moment. From New York, you're watching Bloomberg TV.
Hey Shades, if you're still hanging around, man, you have a good day, dude, and I'll catch up with you after work. We're back at it. Oh man, you blew your XFAs. I'm sorry, dude. You're working. I'll be here today. All right, take it easy, man, if you're out there. I'll be here all day.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appear, immediately I ask whole corporations study how will you bring generative AI to their job.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
The cash open, the opening bell about 44 minutes away. Equity futures into that just about positive by close to 0.2% on the S&P, and the Nasdaq a similar amount higher, up by 0.17%. Bit of a snooze in the equity market through most of this morning. In the bond market, things could get interesting tomorrow. 10-year debt, day after 30-year supply. This morning, yields come again down by 2 basis points, 4.45, close to 5% still on 30s. Danny at 4.91. Tony Rodriguez of Nuveen on a program earlier. Nothing to see here, nothing to worry about.
I think there's a sense that, hey, that's a pretty attractive yield. Yes, there's some volatility there, but perhaps we look back at this period and say around 5%, that was the buy of a lifetime. So you have an auction coming up. Maybe that's enough not to entice really outsized demand, but enough demand that we don't get worried about it.
More on treasuries in just a moment. Still close to 450 on a 10-year maturity. Looking ahead to those debt auctions. Also looking ahead to this as we count you down to the opening bell. Your trading diary is shaping up as follows. Today, the US and China holding trade talks in London. Day 2, that continues. Tomorrow, CPI data plus. Treasury Secretary Scott Bessent testifying on Capitol Hill. He's in London right now. On Thursday, PPI and another round of jobless claims. And Tesla's robo-taxi launch over in Texas. And then going into the weekend, another read on that political survey. The political poll that is now the image sentiment, consumer sentiment survey. Day 2 of trade talks very much underway between the US and China earlier on this morning. Anne-Marie joins us now from London with more. They broke up for a lunch break, Anne-Marie, just moments ago in the last hour or so. What's left to negotiate for the day ahead?
Well, it's a great question, Jonathan. There really is no update here because after more than 6 hours of talks yesterday, 2 hours this morning, they did break for lunch. They should be reconvening around 2 o'clock local, so just in the next 15 to 20 minutes or so. We still don't have an agreement in place. And the last we heard from the president was that China is difficult to deal with, and he kept it pretty open-ended on how much he was willing to lift and ease some of those export controls, especially when it comes to advanced semiconductors. So we are still waiting to hear on what the update is. We should remind our audience that whatever we get out of this was really about reigniting confidence between this relationship after just about 10 days ago, the Treasury Secretary felt that talks stalled between China and Washington, and this had to do with what they agreed upon in Geneva. The United States wants to see a more accelerated pace when it comes to the licensing of rare earths and magnets, and what China wants is the easing of those export controls. But really, how much is the U.S. willing to give in? Will it be the most recent export controls, or are things like the H-20 chip on the table? Kevin Hassett says they're not. But let's see what they come out with today. Talks still ongoing at the moment.
Anne-Marie, a theme for us so far this morning, just a reminder of the bigger picture, how long it took to secure a Phase 1 deal in the president's first term. I remember things getting hairy in July of 2018. It took 18 months to sign that Phase 1 deal in January 2020, and then we got into the pandemic, and then that Phase 1 deal was quickly forgotten about. How different are things going to be this time around?
Well, trade talks, trade deals take a lot longer. They take years, not days. We're in the first inning of this relationship in Trump 2.0. To your point, Jonathan, Trump's first administration, and we were talking about a purchasing agreement that started in 2018 and it ended in 2020. That was a purchasing agreement. When you look at the contours of what they are discussing at the table for this agreement, there is a whole host of issues and potentially different tools in the toolbox that the United States and the Chinese are going to use. At the table today, we're just talking about really rare earths and export controls. And now you have national security taking center stage. So actually, Trump 2.0, the negotiation seems even more complicated than during his first administration.
MH, Anne-Marie, we're still hopeful we get you back in the studio tomorrow morning. I know the flight is booked later on this evening. Let's see if this wraps up in time.
Me too.
Anne-Marie from London, thank you. We're also keeping one eye, a few eyes, both eyes on Treasury auctions tomorrow. 10-year notes, 30-year notes, all coming up over the next couple of days. Terry Wiseman of Macquarie joins us now for more. Terry, good morning to you.
Good morning, John.
Should we worry about 10-year and 30-year supply?
We should worry a little bit more about the 30-year auction. I think the pattern in the last few months, based on what we've been seeing out of the indirect bids and purchases, has been that foreigners are stepping away a bit from the long end of the curve. We've actually had strength from indirect bids at the shorter end of the curve. What that tells me is that foreign investors presumably are moving out of the longer end of the U.S. curve and going into the safer zone in the shorter end. I think in part because they've lost some confidence in the dollar, in part because they lost some confidence in the ability of the U.S. to manage its deficit. I think these are all part and parcel of the narrative around why the 30-year yield has gone up as much as it has recently.
The price surely matters. Does 5% help? Does 4.90 help on a 30-year?
So what I tell clients is that if you look at bond yields, there's really two approaches here. There's a cyclical approach, and based on the cyclical approach, on the presumption that global growth is slowing, on the presumption that U.S. growth is slowing over the next few months, in part because of the tariff shock, you should expect yields to come down. From that perspective, even the 4.50 we're seeing on the 10-year has room to come down, maybe down to 4.25%. But I think from a longer-term perspective, 5% may not be enough, or 4.5 on the 10-year may not be enough. We may have to see higher yields to equilibrate demand and supply in view of a lot of things, a lot of narratives, a lot of trends out there that are inflationary and tend to move people away from a willingness to buy nominal assets like U.S. Treasuries. What are those tendencies and trends? It's deglobalization, it's demographics, among two important ones that are going to tend to produce some inflationary pressure, not just for the U.S., but for the world over the next few years. And from that perspective, it's I'm not saying that the 30-year should go to 7, but I think we're only seeing the leading edge of the nervousness that's coming with the realization that we may be stuck in a higher inflationary regime going forward.
So if it's not 5 and it's not 7, where is the level that makes sense in this environment that you would be more willing to dive in?
So a lot of this depends on whether or not people's perception of the deficit in the U.S. is going to remain adverse and pessimistic or optimistic. It's a little too early to say, in part because we don't know whether or not the Senate's going to push back on the House's bill. But let's say the Senate does not push back on the House's bill and there is more nervousness about long-term supply. I can certainly see the 30-year moving higher in yield.
Torsten Slok yesterday argued that it's an issue that you have half of the fixed income being issued from the government, that it crowds out other investment for both consumers and corporates. Is that a real problem when you have so much of the issuance skewed towards government debt instead of corporate debt?
In a country like the United States, where savings rates are relatively low compared to other countries, and it's difficult to motivate more savings out of consumers and businesses, I would say yes. The more issuance there is, the more likely there is going to be pressure on upward yields. And yes, to some extent, this will crowd out private investment. That doesn't mean that what the government does with its money has a lower rate of return, and therefore we should promote necessarily private investment at the expense of whatever the government is doing with its money. But yes, to the extent that yields are higher, there is crowding out. It's more or less standard economic theory at this point and accepted by the markets that more issuance you have, the higher yields will be. And of course, it's not just the supply issue. There is the risk premium as well, right? We've seen CDS, sovereign CDS spreads in the US move to 58 or 55 basis points. It's now rivaling Greece. I think to some extent that reflects nervousness about the fiscal outlook. And yes, that's an aspect beyond supply, of course, of the U.S.'s fiscal outlook.
You're in a great seat because you don't just cover interest rates, you cover foreign exchange as well. I'd love your view on the FX part of this. You talked about foreign investors maybe leaving behind the long end of the curve and shortening up duration and coming into the front end. Some of them just worrying about foreign exchange and pulling out of dollar-denominated assets wholesale and retreating to domestic markets. Now, price action shapes narrative, it also reinforces behavior. How much of that just becomes self-fulfilling, that people start to see this dollar weakness and it just accelerates those moves in months to come? Things seem to have settled down now, but do you expect to see bouts of this in the year to come?
But that's a technical argument. It's a technical description of what can happen in the FX market. I tend to lean more on the fundamental outlook. The fundamental outlook is not necessarily good for the dollar. In fact, I would say it's adverse for the dollar because we're coming off a 12-year period of dollar appreciation in real terms. I keep repeating this to everyone I see. If you look back to 2012 and you compare it to end of 2024, we've had a 40% real appreciation in the value of the dollar. So we're starting from a situation where the dollar is rich. We're also starting from a situation where people all of a sudden are very much concerned about policy uncertainty emanating from the U.S. And I think that's going to be an important driver of perceptions around the dollar. The dollar's brand value has certainly faded over the last few months, in part because of the uncertainty, the abruptness, the aggressiveness, the pugnacity of policies coming out of Washington. So I think we're on a long-term downward trend for the dollar. It doesn't mean to say, of course, that there aren't a certain class of investors that are inclined to buy on the dip. I would not necessarily be one of them. I'd keep my eyes on the next 2 to 3 years.
Terry, appreciate your time.
My pleasure, John.
As always, thank you, sir. Terry Wiseman there from Macquarie. Looking ahead, some key economic data points, and I'm not talking about CPI and PPI. We're talking about 10-year auctions and 30-year debt supply. Coming up tomorrow, we'll catch up with Torsten Slock of Apollo, Bob Diamond of Atlas Merchant Capital. We'll speak to Seth Carpenter of Morgan Stanley, David Kelly of JP Morgan Asset Management, and Danny's off to California, right?
I am. Off to L.A. to cover the Bloomberg Credit Forum with Lisa. So we'll be hand in hand. Sorry to leave you alone around the desk, John.
Looking forward to the coverage. Hopefully, I said it earlier, hopefully Anne-Marie makes it back in time for the programme tomorrow morning. She'll be covering the talks in London between the US and China. From New York, thank you very much for choosing Bloomberg TV. It's a quiet start to the week. It gets busier tomorrow morning as we look ahead to CPI data. From New York City, this was Bloomberg Surveillance.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Literacy is a big problem in the United States. I think 14% of adults are functionally illiterate, which means they can't read past the 4th grade level. That's a large percentage of the population. Nothing the Library of Congress can do can completely solve that problem, but are you surprised at how many people still cannot read in this country and how many people have another problem called illiteracy or illiteracy, right, which means they can read, but they don't choose to read.
It's a challenge with the digital age because people they're reading on tablets, so we do count that as reading. If you have an e-book, you're reading the book, and I've been often asked if I'm listening to a book, are you reading? Does that count? But there is a concern that the amount of reading, actual text that people are doing is diminishing. And so how do you work with other organizations? So the Library of Congress connects to public libraries, school libraries, and we do joint programming with them.
Why do we actually have all these thousands of libraries anymore when people are often doing things digitally and they don't need to go to a physical place to get a book?
People are using public libraries as, and someone has said, as opportunity centers. And libraries are offering collections that are beyond books. So libraries are circulating and responding to communities in so many ways.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We are 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, the AI race. Meta assembles a super intelligence team while Apple expands its deal with ChatGPT. U.S.-China trade talks continue in London for a second day as the two sides look to ease tensions over key tech and industrial goods and a bargaining chip. We'll explore how Boeing has emerged as President Trump's preferred trade tool to gain leverage in negotiations. What are the stocks that we're watching right now?
Let's go back to Meta because this is an interesting one. Meta recruiting dozens of experts to achieve artificial general intelligence, which can theoretically perform tasks as well as humans. This is a clear priority for Mark Zuckerberg, who is personally hiring the team and also arranging the desks to sit near him. Perhaps that's why you've Meta shares higher by about 1.2% right now.
Yeah, in terms of Apple, at the Worldwide Developers Conference, it's super boring, not impressing analysts on the street despite an advanced partnership with OpenAI, a refresh of their operating system. Can't they do better than that right now? Investors don't think so, and the shares are unchanged, Katie.
Well, keeping the conversation going on AI, ARK Capital's Cathie Wood spoke with Bloomberg about the promise of AI at the Greenwich Economic Forum last night.
Generally, we think the cost of innovation is collapsing here. AI training costs are dropping 75% per year. AI inference costs are dropping 85 to 95% per year. And generally, AI is, we think, going to level the playing field.
For more on all things AI and tech, we're joined by Bloomberg Tech co-host Caroline Hyde and Mandeep Singh, global head of tech research for Bloomberg Intelligence. Caroline, let me start with you and just ask you why Apple can't do better. I mean, they've come up with very little, and investors really aren't impressed.
Yeah, I mean, some analysts going as far to saying it was a dud. There seems to be a much calmer, more soothing way of delivering us updates, but none of the flashbang wallop that we're used to. And this is indeed trying to make iterations, trying to say, look, all your products are going to work better together. It's going to have a new look, a new feel. Liquid glass is going to be more beautiful aesthetically. And indeed, you do get more fun I don't know about you, I'm vaguely interested in my emojis becoming, two emojis becoming one and a Genmoji experience, but that is not the AI that we want. Yes, translation is going to be super useful. Yes, we're going to be able to perhaps have more an adept experience, but where is the Siri upgrade? That is what seems to be being delayed. We got hints that, look, it's not going to be until at least next year. And meanwhile, others are leading the pack when it comes to Alphabet, what they've integrated into their Android more broadly. So I think that there are, around the edges, some sophisticated changes. Yes, you've got the gaming platform coming into being as well, but this wasn't enough to drive any sort of stock reaction, and a lot of analysts are disappointed.
Right, you look at Apple shares yesterday, they actually fell by 1.2%. So investors clearly not excited about these non-AI upgrades, Mandeep. As an analyst, was there anything that caught your eye, or is it really about what they didn't say?
Yeah, I mean, from my perspective, Apple is positioning themselves slightly differently than Google or Microsoft because their big bet is on on-device AI. Now, I agree with Caroline, you know, there wasn't anything about Siri. So if you're talking on-device AI, that's a #1 surface area where they should be showing, you know, a lot of use cases. But that being said, they launched this foundational model framework, which is essentially saying anybody who has a large language model can work at the operating system level. Obviously, Apple will oversee the deployment of that LLM. And these models on device will be a lot smaller than your large language models that are working on the cloud. So look at it this way. Apple already has all the apps that give you AI functionality through their App Store. They're trying to position themselves on the on-device side because no one else has a surface area when it comes to on-device AI. Apple still controls all the devices in their ecosystem, and they want to play it at that foundational layer, which is what they are focusing on.
Look, it's becoming, technology is becoming such that I go to ChatGPT for pretty much everything. Yeah. And in order to do that with Apple, especially if I'm driving, I have to figure out a way to open up the phone, get into ChatGPT, switch it into voice mode. I mean, couldn't they have done that? Can't they just hire the 50 smartest people in the world and make it happen instantaneously?
Well, so that's where the size of the model does make a difference. You're absolutely right. You know, they can hire the engineers, but the way these models are evolving, they're pretty big in terms of, you know, the size of the model, the number of parameters. So you really have to solve for not only the large language model, but you also have to distill it down to the level where it can run on device because they're using it on your sensitive private data. They don't want it to be mixed with all the other data that's sitting inside a large language model. So that's where the sensitivity for a user data running on device, it's a lot higher than an LLM answering, you know, general search queries, which is what ChatGPT is doing right now.
Right. Well, they can't hire the 50 smartest people because that's what Meta is doing when it comes to super intelligence, this ambitious team that it seems like Mark Zuckerberg has a real personal hand on.
Where's Tim Cook's invites to these various array of AI innovators to Lake Tahoe, to Palo Alto, to go and dine with him, because that is what Mark Zuckerberg is doing. He has gone founder mode, as we know. This is all about really getting to grips. He's stripping back delegation. He wants to be hands-on when it comes to generative AI because he's been disappointed. Look, Llama 4 didn't live up to the expectations of just how sophisticated the new integration of generative AI was, and indeed how much better it performed compared to the previous open source models, technically open source, some would say, perhaps not, that they've been developing. So he wants to get Behemoth out there. To do that, he gets the 50 smartest people, whether you're an AI research head that he needs to hire. What's so interesting, and I'm sure Mandeep's got plenty of opinions, on the Scale AI news coming out just recently, the $10 billion investment they're going to make in that company, the fact that Alexander Wang is going to be becoming part of that team, that you said, Katie, is going to be sat really close to Mark Zuckerberg in the Menlo Park office.
I mean, assuming they come to the office every day, which if they're the 50 smartest people in the world getting paid so much they can't believe it, I don't believe they're going to all show up to work every day from 9 to 5.
But they get the chance to sit next to Mark Zuckerberg.
Yeah, but look, having 50 cooks in the kitchen, is that really going to help, Mandeep? Is that the way to solve this problem?
I think in this case, you need, you know, smartest brains. Not one person can figure out everything related to AI.
Will they all work together seamlessly? I mean...
Well, Mark Zuckerberg has a playbook. Remember when TikTok really took off? That's what he did. He assembled a team that really created the Reels product and made sure that it caught up with TikTok. So I'm not surprised he's going back to that familiar playbook where he's personally involved in everything that's going on at the product level.
Katie, is Reels as good as TikTok?
No, no. I have to say the content on TikTok, you'll see it on Reels 2 weeks later, to be a bit brutal there. But I mean, you know, it's catching up, and a lot of people, sort of the old people, use Reels.
So that's the way Mark Zuckerberg can become second best, is what you're saying.
Maybe
Good for
have
them.
a WhatsApp party. What's it called? A recruiting party. Formed this whole WhatsApp group among all of his key leadership that he wanted involved. They're getting messages on this noon, day, and night.
I'm sure they are. I want to go back to what you were saying about Scale AI, though. When you wrap together this news about the super intelligence group, it seems like that's related to perhaps the Scale AI investment. And then you think about what we were talking about last week, that Constellation, that investment that they're doing in Constellation as well. It seems like Meta just is moving super aggressively here, and it's interesting to contrast that with what we're getting from Apple this week.
And also the fact that they're going into usually areas that they'd stuck away from. Remember, they've got to deal with Anduril. They're going to be offering their technology for defense as well. Alexander Wang's already been helping advise the government. There's a more federal integration here that, of course, we know Mark Zuckerberg is making moves on in his relationship with overall the administration. So I think that we are seeing all in on all things generative AI from Meta, and indeed becoming almost a data center owner. I mean, they become a technical hyperscaler. Yeah, they're not going to be offering you cloud, and that's what's interesting with Scale AI investment. Is this just going to be $10 billion in money, in investment, or is there any offering of data GPUs? Because that's certainly what we saw a bit more with the Amazon and Alphabet tie-ups with Anthropic that we've seen. And of course, Microsoft has led the way with its integration with OpenAI and its relationship. This is Meta getting in on that act and wanting the data superiority that we get with Alexander Wang's Scale AI, and more broadly, how they're thinking about using and building models for that company too.
Yeah, it's certainly a statement of intent by Meta. It's going to be fascinating to see how that plays out. Great roundtable, you guys. That is Caroline Hyde of Bloomberg Tech. You can catch her at 11 a.m. and Mandeep Singh of Bloomberg Intelligence.
We should point out that Meta is crushing it year to date. I've just put them up on a screen against Apple, Microsoft, Amazon, Google, and Meta is doing the best of the group. So you can see the gain. The year to date is only 19%, I guess. But
only
of course,
19%?
Well, they've come back so much from the lows that we saw in the middle of April.
Yeah, and you consider that in a relatively flat market, 19%. A lot of companies would certainly take that. Let's take a look under the hood, though. We do have some movers on our radar. Novo Nordisk, for example, jumping after a report that activist hedge fund Parvis Asset Management has built a stake. This is really interesting because, remember, Novo replaced their CEO just in the last couple weeks. That was certainly a surprise move. And
Don't
now
miss a chance to say his name.
Lars Frogard Jorgensen.
Love it.
Yeah, there we go. Now we have news of an activist in that company. We'll continue to follow that. But JM Smuckers.
These are your people.
These are my people. These are all the stocks I'm interested in. Smuckers profit going to take a hit as sales are weighed down from its Hostess brands. People are buying fewer Twinkies. They are still seeing growth, though, in Uncrustables, Matt. I'm sure you're familiar with that product.
I actually bought a box of Uncrustables to find out what all the hype was about, and I haven't found a time to eat them yet.
Anytime.
It just seems
Uncrustables
incredibly unhealthy.
No,
to pull out pre-made peanut butter and jelly sandwiches from the freezer and then munch them down.
It's super efficient. You just take them out. You have to let them defrost first. Don't eat them before they defrost.
McDonald's downgraded by Redburn. It says weight loss drugs are an underappreciated long-term threat, which is like, who was underappreciating that? We've been talking about it for like 2 years.
I was thinking this is very much a sell-side call from 2023 or something like that. But McDonald's shares down about 1.5%. You know what else is happening today?
Yes, I do.
It's day 2 of trade negotiations in London. We're live from the Lancaster House next. This is Open Interest.
All right, let's see what we got here, guys. We're watching the ES right now.
From finance to defense.
If anyone out there wants to see the NQ chart, we can pull that up also. But kind of drifting at the highs right now. We got 17 minutes till the open. I'm not seeing a whole lot of news for today.
In San Francisco.
Watch Bloomberg Tech.
9:30.
Only on Bloomberg Television.
Defense Secretary Hegseth speaks.
What is the issue between the type of information that's being collected?
That's not really going to be anything.
And the marking issue that you're
The
describing.
Treasury bills
What mark-to-market assets do is it forces
are
honesty
being reported at
into the situation.
11:30. That
We're
actually
talking
had an
right
impact a
after
couple of weeks
the DeepSeek
ago.
model surprised
But other
everybody
than
in its
that,
efficiency. It took
there's just
hundreds
really
of
nothing
billions
going on
off of
today
market
for
caps
news that we're
because it
expecting.
legitimately raised
You never
concerns
know
that
what
maybe
can happen.
The future of AI was different. I
16
guarantee you that
minutes.
if you look at other portfolios that aren't marked, they
EU
can move.
Commission
If private assets are going to eat the world, as they say, with the equity market halving in the number of names, you come to a world that is increasingly an echo
Still
chamber.
trying to
Imagine you
sanction
have a
Russia.
firm that has some public assets and some private assets. If you see your public assets in AI going down by 20%, you're going to be thinking
AI.
very, very deeply about what your private
All
assets are
right,
worth.
so it might be a
differently
pretty
than someone who
slow
just has the
day.
latter.
Let's see what happens. We're just over the VWAP on both the ES and the NQ. This is the NQ chart.
Nobody covers earnings like Bloomberg.
VWAP is right here.
What is going to be the
We're in a
consequence
fair
for US
value
markets?
gap. We're in a
We are basically deep in the European
resistance
earnings
or
season.
a sell fair
Take a
value
look at how
gap.
we're faring when it comes to Asian markets.
I'm thinking we get a rollover. Maybe we bust through the VWAP first thing.
Let's get now to high interest. Look at what's making headlines around the world. The U.S. is no longer wholeheartedly endorsing an independent Palestinian state, according to U.S. Ambassador to Israel, Mike Huckabee.
Trying to get
He
back
said
in the
a
groove here. I've been
years-long
gone for 2
societal
weeks.
shift is needed before the option of a Palestinian state is realistic. He spoke with Bloomberg in an exclusive interview from Jerusalem.
Someone wants to declare that this is the exact strip of geography that is going to be the future Palestinian state. That's where the complication comes from.
Well, maybe the word is exact. That's the problem. Are you suggesting that somewhere other than mandatory Palestine area that it could be in Saudi Arabia or something? Or are you suggesting?
I'm just saying that I think every option should be and could be on the table.
Marines are in Los
Of course,
Angeles
former governor of Arkansas,
trying to
who's previously been an advocate of Jewish
get
settlements
control
in
of
the
the
West
illegal
Bank,
immigrants
which
that are there,
as we know,
and all
considered
the
illegal by many states and
Democrats.
international agencies. President Trump ordered the mobilization of 700 Marines to Los Angeles to break up demonstrations against his immigration crackdown. The turmoil
I don't know why you would
comes as
just
LA
burn your
saw
own
a
city down.
fortnight of
I never
clashes
really
between
understood
police
that, to be
and
honest.
demonstrators rallying against a rising number of raids by immigration and customs enforcement agents. California's Governor Gavin Newsom called sending in the Marines, quote, a blatant abuse of power. The protests are spreading beyond California with rallies in San Francisco, Chicago, Washington, and other major American cities. The White House said it will not tolerate an insurrection that puts law enforcement's lives in danger. Meanwhile, Defense Secretary Pete Hegseth will testify before a House panel today. It's his first time on Capitol Hill since being sworn in 5 months ago. He's expected to face tough questions on defense spending and signal chat leaks, but overshadowing much of that testimony will be the Pentagon's decision to send active duty troops to Los Angeles to quell recent protests, something that is normally considered illegal. And it's the second day of trade talks between the U.S. and China underway in London. Upon arrival, the Commerce Secretary Howard Lutnick gave us his gauge on the negotiations ahead.
We've been all day yesterday, and I expect to do all day today. So they're going well, and we're spending lots of time together.
And that was Commerce Secretary Howard Lutnick speaking to our chief political correspondent, Anne-Marie Hordern. Anne-Marie joins us now live from Lancaster House. And Anne-Marie, my understanding is they went until about 8 p.m. London time last night, start around 10 a.m. London time today. Is what was reported as well. So are we expecting any material breakthroughs, or is this really just going back in time to the agreement reached in Geneva last month?
Well, this is all about making sure they can go back to that agreement reached in Geneva. Remember, following the Geneva talks, we did see a bit of escalation on both sides accusing the other of reneging on what they agreed upon in Switzerland.
All right, I got leads coming in, 12 minutes to the open.
Said negotiations had
Let's see
stalled
what
with
direction
China.
we go.
And then we had that phone call between President Trump and President Xi Jinping of China, and that really marked the pathway to get to the talks today. Now, they went for more than 6 hours yesterday talking. They had about 2 hours of talks this morning. There was a break. And then just at the top of the hour, He Lifeng, the vice premier who's leading the Chinese delegation, came back into Lancaster House. So the talks continue now, but they bleed into the second day. And it is crunch time, at least for the Treasury Secretary, Scott Bessent, because he is testifying tomorrow on Capitol Hill in front of the House Ways and Means Committee. So he has to leave London within the next few hours to make sure he's back in Washington, D.C. So far, we haven't heard any breakthrough so far, just that talks are ongoing. But if they do get to something concrete, it'll likely look very similar to what they agreed upon in Geneva, which potentially is going to be the United States lifting some export controls that came on after Geneva, things like jet plane engine parts, some chemicals, and nuclear materials. And also, the United States wants to see an accelerated pace of licensing of rare earths and magnets, which China has 70% of the market. And that's critical for U.S. defense and high-tech industries.
So what do we know, Anne-Marie, about the willingness of the Trump administration to give China, high-tech, AI-capable microchips in exchange for critical rare earth materials that are needed for automotive production? Like, are we willing to trade a little bit of national security for some commercial success here?
Well, that's a great question. I think we're trying to figure out what the U.S. red line is when it comes to national security and it comes to export controls in the semiconductor industry. Kevin Hassett, the National Economic Council director, had said there will be an easing of export controls, but not high-tech advanced semiconductors like the H20 NVIDIA chip, which, by the way, was produced to be China compliant of export controls under the Biden administration. At the same time, the president said yesterday, basically leaving it open-ended, saying we'll see. So when they come out from these negotiations, and if we get something a little bit more concrete, we will actually understand where the U.S. red line is, and that is going to tell us how far they are willing to go in the future. Because let's not forget, this is the first inning of Trump 2.0 trade war with China. During Trump's first administration, when we had the Phase 1 purchasing agreement, the trade war started in 2018, and it didn't end, Matt, until 2020.
All right, Anne-Marie, thanks very much. Anne-Marie Hordern there, Bloomberg's chief political correspondent, of course, also co-host of Surveillance, flying around the world following these trade discussions for us. Coming up, Cole Smead of Smead Capital tells us whether U.S. stocks are a bargain right now as investors anticipate strong earnings growth in at least some of these stocks through the year. It's not clear to me, exactly where we're looking for strong earnings growth. Is just tech stocks?
I have an
Just
idea.
tech
Yeah,
stocks?
it's tech.
Yeah.
Tech. Double-digit growth expected there. Not so much in some of the stuff that Cole likes.
Not in
though.
the oil patch, right?
No, not necessarily. So
Even
we're going
financials don't really look.
No, really tepid pace of growth expected there. We're going to get into it next, though, with Cole.
Yes, this is Open Interest.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
The U.S. earnings growth is there. We're seeing about 13, 14% earnings growth, but no one cares. Actually, U.S. quality stocks are the worst performers within the U.S. equity market and for the global market. Quality is on sale. The U.S. is on sale. The Sell America trade that we've seen for much of this year has made U.S. assets of the best value we're seeing per pound for pound for the earnings growth you're getting. So earnings growth is the only thing that's going to get you there.
That was Matt Miskin from Manulife. John Hancock speaking about earnings growth right now. And let's continue that conversation with Smead Capital CEO and Portfolio Manager Cole Smead joining us at the desk. Great to see you in person.
Good to see you guys.
So we think of you as a value guy. We know you like energy. We know you like financials. And we were playing around with 2025 estimated EPS growth. I believe we have a bar chart to illustrate the point. You take a look at what's at the bottom. It's energy, negative nearly 15% expected. You compare that to big tech up top at 20%. How do you square that into a bullish position in energy?
Yeah, the weird part is Wall Street loves earnings, and Wall Street analysts are really good at doing one thing, which is predicting quarterly earnings. That's what they're great at. It makes me think that as a child, if they drop too many things, they'll call out the number of things they drop, and their parents are like, you should be a sell-side analyst. That's really good. So I say that because ultimately, what's going on in the stock market right now is the returns, the cash returns on capital of the S&P are actually in decline. Now, why am I saying that? Because earnings, you only depreciate a small piece of your capital base. In reality, what do we know what's going on with AI? They are CapExing this at obscene levels. I'll use Meta, they're at $70 billion just this year. And so why I'm pointing that out is let's use a company, a cheap stock, quote unquote, to some value people like Google. Google's probably gonna do about $53 billion of net cash creation, but that's taking $73 billion of free cash and backing out $20 billion in stock-based comp. Wall Street doesn't count that.
Right.
So I point that out because on a business like Google, an asset light, one of the truly great monopolies in the asset light world is only actually producing about 16% cash returns on book. Now, what's weird about that? That's too low. That's way too low for a business of that size and that scale. You get that at 6 times book and 40 times free cash. I can go and buy oil companies that are producing 11 to 13% return on invested capital, and I pay less than invested capital.
All right, I got to wrap you up, but we're going to bring you right back. Cole Smead staying with us. This is Open Interest.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates a complementary diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We are, I think hovering is the word right now. I'm not supposed to say churn, but that's really what's happening in this market. S&P futures are up, but only 0.1%. NASDAQ even less than that. And the problem is the market is in waiting mode. It wants to see what the U.S. and China get out of their meeting in London. It wants to see the CPI report tomorrow. Really, I think, wants to see the 30-year bond auction on Thursday, as hard as that is to believe. By the way, Fortive ringing the bell on the New York Stock Exchange, which is fairly interesting. But this is, I think, fascinating. Lincoln Electric is ringing the bell at the NASDAQ. The company's like over a century old. I think it may be 150 years old. It's been listed on the NASDAQ since 1995. Not only are they crushing it in the last 5 years, as I always check with my comp function, up 150%, in the last 30 years, they're up with reinvested dividends 5,000%. So absolutely crushing it.
Yeah, really electric performance there from Lincoln Electric. I had to. Let's talk about Meta, though. This is an interesting one. Not exactly up 5,000% today, but it's up slightly higher on news potentially that Meta is recruiting dozens of experts to achieve artificial general intelligence that theoretically can perform
here we
tasks
go.
as well as humans. As we talked about with Caroline Hyde and
Got a
Mel
quick
Dean,
spike up, a little bit of volatility.
who is personally hiring the team and arranging desks to sit near him, which sounds
Let's see if that candle was just to liquidate and clean people, clean positions out for the grind down.
Developer conference. Not that you would know.
We got fair value gaps up against each other right now, so you've got a supporting
from the stock here, it's up only a
long fair value gap and a short fair value gap right on top of each other. We're on the VWAP. This is a volatile area. For me, I'm going to give it an hour, hour and a half. My trade box doesn't turn on until 10:15.
So we'll continue to,
so this is a wait and see which direction we're going to go. Everything's kind of binded up in a sideways range. Just see if we pick a direction to maybe try and get a little trade in. But we're on standby right now to see how this works itself out.
Yeah, a little bit, but I would put it in the context of yesterday's drop on Apple being more substantive and significant than probably we discussed. Like literally one session a market does not make, but just go to 1 p.m. Eastern time on the tape. And when Craig Federighi, Apple's software chief, started speaking very early in the presentation, he said, we have no updates on Siri. They will come later in the year, and stock goes straight down. So, you know, I actually find the rebound today a little bit more interesting. And the reality is this, that Apple has a much catching up to do in AI. None of the announcements from WWDC, other than third-party access to its own LLMs for developers, because that's important for Apple's ecosystem, moved the needle, and we are in waiting mode with it. And yeah, it underwhelmed, for sure.
All right, Ed, I guess that's all we need from you now. But
Sure.
we will
Bye.
stay tuned to your program today. Ed Ludlow, co-host of Bloomberg Tech, and there's a lot to watch in tech today, right? Because you've got Mark Zuckerberg apparently like hosting dinners to hire the 50 smartest people and sit them near him. At Meta, they also are investing $10 billion in an AI data startup. Plus, you've got TSMC's massive jump in revenue. I think it was a 40% jump
40% in Meta,
in one month. So there's a ton to watch, Ed and Caroline, for today.
Yeah.
But probably just not Apple.
But there's a ton to watch when it comes to us and the discussions that we're going to have.
Yeah.
So let's keep it going.
Yeah, Cole Smead is still with us here, CEO and portfolio manager at Smead Capital Management. And Cole, I just wanted to, we were talking during the break about this idea that now is a good time for aggressive, smart financiers in the oil patch to go and round up some of their maybe tired old competition.
Yeah, it's to use Boone Pickens' old line, you can dig for oil cheaper in the New York Stock Exchange or the Toronto Stock Exchange than you can in West Texas, okay? I'll give you a very recent example right now. There's a company up in Canada called Strathcona Resources ran by Adam Watrous. He's a very successful investor, counter-cyclical investor. He's out buying a business called MEG. They're both heavy oil businesses. What Adam just did is sold gas assets up in the Montney to buy heavy oil. That's interesting because the market seems to be really excited about gas for AI and electricity. So what is he doing? He's arbing even the difference in the gas to oil market. So he's doing that. People are kind of caught off guard, and really he's going to close that deal. It just shows you that the smart money is moving on this. Once the Hess, deal with Chevron and Exxon gets settled out, whoever loses that will go after an asset. That looks pretty obvious. So we're going to continue to see consolidation. But again, the question is who wants to own and run the future, and who wants to just kind of watch their kids as they retire.
Yeah. So, okay, so we've covered energy. I also see when I take a look at some of the names that you're feeling good about, I see a lot of builders in there, which also caught my eye. We talk all the time about what a weird spot the housing market is in. What is the case for home builders at this moment?
Yeah, so there's about 5 months of supply and demand meeting right now, which is pretty historically normal. I'll give you a little stat. You'll see if you go out on X, you'll read a lot of these super bearish articles on housing and whatnot and write-ups. I call those bear porn, for lack of a better term. And they'll say, oh, look, we've never had more new homes for sale than at any point since.
Oh, hey, how you doing, Luther? I've been on vacation the last couple weeks. This is my second day back, so I'm trying to get back in the groove. I do work full-time from home. I have a corporate sales job. I don't know how long you've been watching, but yeah, so there's a lot of volatility in the futures. Right now we're watching the S&P 500 ES futures chart, and usually for the first hour there's a lot of volatility. So if you're trading, and we do prop firm trading here.
I'm interested to know what you think.
So when you're on margin trying to qualify a prop firm account, like random volatility is really not your friend. You kind of want to wait for a good setup with steady volume instead of spikes in volume. You see how this candle, this is a volume chart down here. We've got a huge, okay. Oh, cool. All right. All right, brother. That's cool. So yeah, so this is a Top Step account I'm on. I use Top Step. It's a 50K account. I'm up 380 on it. I got to get to 3,000. So my trade box here is set up to start calling the direction at 10:15 to 10:30, because when you get really big volume spikes, like you see this candle here, the last candle was about 2,800. This candle was 16,000. So it makes it choppy and unpredictable. So I don't, as a rule, I don't trade into the open. I don't trade before news or in news, and I don't trade after 3:30, 3:20 during the close, because the close can get a little hectic. As a general rule, will I break it sometimes? Yeah. Will I? There's always exceptions, but that's the general rule.
So I was at the meeting with my dad. We left 15 minutes before the meeting.
If that makes
And
sense.
we were out in the concourse, and we got there, and we looked at each other. Just one of those
But
things
the
where
thing
in
is,
my
it's
career,
you
we
really,
looked at each other
you
and had,
know,
like, a moment,
because of the
and it was
movement,
like, it's the end of an era. We just kind of looked
it
at
really
each other, and
kind
we,
of
like,
baits you in
Funny enough,
because you want to get in on the action. You use Trade-Evade. Okay, yeah. Ninja Trader and Trade-Evade are the big two in brokerage platforms.
First meeting in maybe over 10
Yeah.
years for myself.
Yeah, it's easy to get your stops smacked out and blow an account up.
You have the greatest investor of all time. Greg Abel,
So I
very good
usually,
operator. He's wonderful.
I'll wait, usually, unless like I'm on tilt or I'm, you know, or I've got an account that's about to hit its 30-day rebill,
It'll be interesting to see where that
and then
goes,
maybe
but
I'll
again, for a long time,
take
we've
some
been able to compound
chances.
capital at higher
But
rates
right
in
now,
other
I'm
places.
I'm trading
But
pretty
look at what
straight.
Buffett's doing. Buffett's
Not
arguing
taking,
this is like
you know,
2000.
not taking
at my
extra
best
risks,
guess,
just waiting
we're
for a
somewhere
good
between
setup
March
and just
August of
trying to
2000.
take
We
my
almost got back
profit.
to the old high in August.
So
Everyone just remembers this nasty bear market for 2 to 3 years.
it's
But
what,
there was a massive bear market rally 5 months in,
9:39,
and you know what
9:40.
happened? People got crushed. That's what
A
this
lot of
looks
the
like.
times at around 9:50 to 10 o'clock, you'll see a reversal.
Questions I had coming out of that announcement.
from-
you know, you mentioned that Greg Abel obviously
You'll see a
very
reversal from
confident
the
as
initial
an
direction at the
operator.
open.
He's not classically an investor like a Warren Buffett, like a Charlie Munger. And I wonder how
But
you
yeah,
think
those
about
first
that.
couple of candles at 9:30 and the action that starts happening, it really, you're like, man, I want to get in on that. But if you're, you know, it's easy to get an entry and then get snapped right away, because it can go your way, but if it comes back against you before it does, it's kind of like, it's really gambling, you know? Yeah, it is a trap. It's a total
But then again,
trap.
we're not allowed to hear from him at meetings or whatnot. He's done some select podcasts and done some select comments here or there.
Totally.
But Ted is kind of in the.
Are you on the what instrument are you trading? Are you
I'd love to see him up
ES or
closer,
NQ?
but again, that's just
I
because
also
I think
have
he's a
the
really
NQ
outstanding
chart if
investor.
you want to see
All right,
that.
Cole, it's always great to see you. Really enjoyed this
ES?
conversation.
Okay,
That
I'll
was
just
Cole
leave it
Smead
there.
of Smead
See,
Capital. Meanwhile, let's get a check
I go
on these
between the
markets
ES and
specifically the
NQ
makeup
because
of this rally, because the S&P
depending on
500,
price action.
it's up a little bit
So the
more right
NQ
now. We are
moves
firmly
more,
above
but
6,000 at
it's
the
only
moment,
worth
higher by about
$5 a tick, where the
0.2%
ES is
You take a look at the
$12.50 a
pretty
tick.
good. We have
But the
more than
NQ
300
will
names
move
in
more.
the green right now
So
on
if
the
the price
S&P 500.
action
Take a look at what's
is
leading. Meta, as
steady
we've been
and not
talking about,
jumping
Tesla
around
too,
5 to
a little
10
bit of a
points on the
rebound there
NQ,
after
I'll
a
look at the
pretty
NQ
bruising
for a
week.
trade.
Apple, Eli Lilly.
But if
What's
but
not
if it's
doing so
if
hot
things
right
are
now,
really
you have the
choppy and
likes
there's a
of
lot of
Microsoft
volume and
Berkshire
news
Hathaway
going on,
moving
the
up, as we
NQ
were
is
just
hard to
discussing,
trade on
down about
margin
0.5%.
because
Not big moves overall. Let's take a look
you know,
at
5 to
sector
10 points, you
makeup,
can't
though,
really
because
have
you
it
see
come
up
back
at the top,
against you
For Cole Smead, we have energy up by 1.2% at the moment.
because you don't have enough
Communication
room to
services,
let
a
it
lot of
run
is
like
coming
that
from
typically
MetaMat.
on
And
a
there's
prop
not
firm
too much
account.
on the downside.
But
Again,
if
small moves
if the price
overall,
action
but
is
the
nice and
losers of
steady and
today
it's only
at this
popping
moment are
around 1 to 2
industrials
points,
and
like right now the
financials.
price action's
All
pretty
right, so
steady on the
there's a
NQ.
picture of what the stock market looks like. 10 minutes into the
Then
session,
I'll
it does
look at
seem
a
like
trade.
we're in
Otherwise,
wait-and-see mode, and
I
there's a lot
stick
that
on
could
the
come out
ES. I try and
move
get,
this
you know,
market,
2, 3,
especially
4
on
points
trade. And we're
on
going
a
to talk
trade.
about that when we come back. Boeing has struck record
Lately, the
deals
mistakes
as a
I've been
result of
making,
these
or at least
trade
before I went
talks.
on vacation,
Since
I'd
Liberation
hold
Day, we'll
trades
discuss the
too
pros and
long,
cons of the jet maker
and it
as
would
a
come back
bargaining
against
chip
me.
with Jefferies
I need to work on
analyst
just
Sheila
taking my profit when I
Kahyaoglu.
have it, even
This
if it's
is
only a
Bloomberg
couple
Open
$100. You know, it's better to just, you know, pull up the stop while you're, you know, to break even or while you got money and not take a chance of it going back against you. Because right now, it looks like the ES is only moving anywhere 3 to 7 points, you know, from a direction change. It's not really moving a whole lot. So that's kind of what I'm trying to do today.
Welcome back to the circuit.
There really isn't a lot of
This time,
news
we're
today
taking
either.
you
I was
to the
checking
frontier.
the news out earlier.
Do we have a camera, or do we? We don't want to lose you, Emily.
There's just not a lot going on today, so it might be a pretty slow day.
What we're undergoing right now is sort of
Volatility
the
is
largest
a
infrastructure
killer.
build
I'll
in
set
human
my
history.
take profit. I'll set the right take profit, but it moves so much I hit the stop loss.
Personally grapple with the pace
Yes,
of it all?
that's what I'm talking about. Like the entry and taking profit when you have it is everything. You know, really focusing on a good entry and taking the trade off when you have profit, because it can come back against you, hit your stop loss, and then hit your target. But you can't let it run, because, you know, if you understand, well, it sounds like you're getting to understand margin, and when you're on margin through, you know, through a prop firm, you just can't let it run all day. Even though you might be right, you can't let it go 20 points against you before you're right. You know what I'm saying? So that's why I'm trying to really get in a better habit of, if I get 1 or 2 points, you know what, I'll follow it up, I'll take some profit, because if it goes back against me, I can go back, I can get back in again. You know, like look right here, this is our pullback. This is the old 950 pullback or reversal.
Right here on Bloomberg.
The VWAP too is like, I'll talk more about the VWAP as I go, but the VWAP is a very volatile area. I don't take trades around the VWAP.
At terminal speed, nobody covers jobs
Yeah,
like Bloomberg.
I mean, just take your profit, watch a candle or two, and then if your setup is still valid, try and get a better buy-in. You know what I'm saying? That's kind of, that's what I've been trying to work on, because I got spoiled, because during the whole tariff thing, the last couple of months, we were getting huge moves every day, you know, 10, 15, 20 points. And it gets you in the habit of holding your trade longer, because you have more movement, but that's kind of gone now. I think the tariffs have been, have been priced in. So I think the tariffs and a lot of the things the Trump administration is doing, it's really beginning to be priced in. I really thought we were going to take a bigger hit for longer, before we headed back to all-time highs, because I thought we were going to challenge low 3,000s for at least a month.
It's time now for our top calls. Some of the
And that was going to be the base before we started heading higher, but really we only dipped into the 3,000s on the ES for like 1 day, and then it was right back.
Its productive mall portfolio. Next up, Wall Street upbeat on that.
Yeah, I did too. I really did too. And I'm not, you know, I'm still kind of a bear. I'm kind of a perma bear overall. I watch so much news.
And also, KeyBank
Yeah, it came right back, and I thought it was going to be a longer grind back. I thought we were going to flatline around 3,000 to 3,500 for a month or two. Everybody was going to kind of build their base, and then we were going to grind back, but that never happened.
And presenting in underappreciated longer,
you know, give people time who got out to get back in at the lower prices, and you never had a chance. It was all within a day or two it happened.
And a lot of people who have them, so I suppose that could grow, right?
Yeah.
I still want to get a hold of some of those, but I was never going to go to McDonald's anyway.
I think it can still happen, because Paulson, the Fed chair, you know, he's not doing Trump any favors by lowering rates. You know, the illegal immigrants are starting to burn the country down and forcing, you know, ICE in the Border Patrol to have to get, you know,
I guess Sheila is really,
you know, they're making it hard. Everything is making it hard. So it could still, you know, the Ukraine war is still going. They still haven't figured out the China stuff for the trade. There's still a lot out there that could pull it down.
So is this the idea that they can
catch
up now?
I think so too. I really think that they're gonna fight him. They're gonna fight the whole thing, and they're gonna pull it down. I still think we're gonna go down. It's just not happening as quick as I thought it would. I really thought it'd be a bigger assault, and it's not having the impact.
Given the pandemic. And basically air traffic,
if that makes sense.
At the end of last year,
the whole world is fighting Trump's
so we've missed out on 5 years of growth.
Policies and ideas for the future.
Gaining momentum in its 3.7 deliveries and its 8.7 deliveries, but they're half of what they were still at peak. And so that's what's providing the runway, and the share price up 60% since April 1st lows, given the tariff talks.
So you're positive on Boeing, but I'm curious to fold in the trade backdrop into all of this. It's day 2 of trade negotiations between the U.S. and China in London. We know that China
I just
has
don't know where the
halted
dip is.
orders of Boeing, and you talk about this favorable backdrop and the momentum that they could gain and pick up
seems
going
like all the
forward.
fact-
But how big of a wrench could be this fact that Boeing is starting to be used as a
Yeah, we moved to the next contract next week,
It's actually
right?
a huge one. Aerospace is a
forgot
$100
about
billion
that.
surplus in the U.S. It's one of the only manufacturing surpluses in the U.S. So we were on Bloomberg back in April, and my favorite notes we've
That's
written
important
is
to pay
how
attention to.
Boeing
You don't want to
continues
get
the
stuck
positive trip-
on the old
chip
contract
repair
too long.
negotiations. It's easy to buy a $70 million, $200 million aircraft and chip away at your deficit. China hasn't ordered a Boeing.
I mean,
plane
there's
since
so many
2017,
factors that
but
can
that
go
doesn't
bad
necessarily matter.
happening
Because
right
given it's a
now.
global
It,
duopoly, we need 1,700 new planes per year. So you could 50-50 that between Boeing and Airbus.
I really
China
thought we
could
were
take
going to get
15%
cut
of
in
that
half.
demand and give it to Airbus. And
And that
Boeing
was
still
going to
has
be the
other,
base,
carriers
and
that
then
come
by,
and
within a
leadership
year,
next
be
week is
back
like
to the
catalyst.
6,000s.
Isn't
That's
this
kind of where I
company just
thought we were
broken,
going.
though? I mean, they haven't been able to figure out space. They go like
But I
double
don't know where all the
overtime,
strength is coming
triple
from.
over
It's like,
budget. They haven't
it's
been able
like
to figure out
everybody,
Air
I don't know
Force
where all
One.
this buying,
Point that the
like
president
where's all
has
the
to go
money
get
coming
a
from
used
to hold the
plane
market
from
up?
Qatar, and the 737 is just constantly a disaster. Like the last great plane they made was the 747, and when was that? That was like in the 80s and
I
70s.
don't know if I would call that 747 the last great plane. I would say the 787 is pretty awesome, but in general, I would say
The last iconic plane that they made, right?
it's a global duopoly, right? So no one else could build planes. Embraer's out there; they have the regional aircraft, but aside from that, it's Boeing and Airbus that you have to choose from. So it's quite difficult building aircraft. The engine is the other big piece, which we are very bullish on GE as well. That stock is running 15% of targets. They're going to have an analyst day next week where we think they could raise guidance quite a bit and even double.
But
EBIT
if
in
we
our
bring all our
worst case scenario in
manufacturing back to the
2030.
United States,
2030.
and we actually have
Way too many
a
employees? Do they
reasonable
have
trade
so
deal with
much
China,
management that doesn't
end their
really know what it's
Ukraine
doing?
war,
Do they need an Alan
get
Mulally
Russia
again? Like,
involved in the
what's wrong
global
with this?
trade.
The stock has actually
I
been
mean,
performing since Kelly Ortberg.
if
took
that can
over in
actually
August.
happen before
They
the
had
end
a
of
bit of
his
issues in the
term,
second
I
half,
mean,
given
we
they
could
had
be
the strike.
looking
They
at
hadn't
7,000,
negotiated
8,000
a labor
on the
contract since
ES.
2008. So that was pent up anger.
But how much of a
they've
fight
been
is it
doing
going to
well.
be to
And,
accomplish all of
Kelly
that?
Ortberg and Stephanie Pope, who runs the commercial business now, really have been focused on 6 KPIs.
You know, we're
So
basically,
what
we're
makes
going to
an
be at
employee's
war
life
with the
difficult?
Fed
I
by the
think
fourth
that's what
quarter
we all,
because
enjoy
they're just
when
not going to give
somebody
any relief to
appreciates what makes
interest
their life
rates.
difficult and fixes it.
That's
They've
going to
been
create
very much
inflation.
focused on that. I was in Charleston
We got
2 months
spending
ago,
bills that,
and it was
like, they're
simplistic
just.
changes. Instead of
I
doing an
understand
aerospace
priming the
manual that
pump and
maybe
getting,
might
you know,
be outdated
paying,
and difficult to
but we're, you know,
understand,
we're
YouTube
still
videos
adding
on
$2
how
or
to
$3 trillion
assemble
or
parts if you
something crazy to the
So
national
just
debt.
simplifying things for the employee workforce is what we are hearing and seeing.
So Ortberg's turnaround plan, it seems like it's starting to bear fruit. You can certainly
What do you
see
mean,
that in the stock
capitalize
price.
on the
I do
move?
want to
Like
get your
on the
thoughts
move
on
down,
state
then
and
back up,
defense
or?
spending, because you cover Boeing, but you cover a number of other names as well that seem pretty reliant on defense spending. Lockheed Martin comes to mind, for example. And I mean, you think about all the wrangling going on over the tax bill right now. Going forward, what's your best guess as to what?
What do you mean,
defense spending
Luther? What do you
actually
mean
looks
on the
like?
move?
We're not bullish defense. That's one area I come on all the time and appear very bullish on Boeing and aftermarket names and GE. But the one area I'm not bullish in my coverage is
As
defense
investors,
bonds.
yeah. Well, I'm out like
One buy
my
rating is probably
401k
best. The reason for that is even though the defense budget has grown
and cash
over the last
accounts,
5
like
years,
I'm not
only would
in
have guessed it
anything
would have
for a
essentially gone up
long-term
40%
position. I was
under the
waiting
Biden
for the
administration.
market to bottom out
Earnings are not growing for the defense
and just
funds.
find
lot of these
a
contracts
long,
that
you know,
are
a steady
growing the
company
revenues
like
come
Alcoa
at a
or
loss
GE or
position
something.
or
And I was just
lower
going to park,
margins,
you know,
and
I
that
was
is
waiting
really
for
a
like,
deterrent to profitability
you know,
growth
5 to
of
10 year
EPS
lows
So
on
yes,
huge
there's
companies once the
several
market
top-line
bottomed out, and I
questions,
was just
whether
going
it's
to
the
push my
budget,
money
whether it's
in
the
and just
reconciliation
basically
bill,
sit on
whether
it
it's
and let it,
European defense
you know,
spending
and
going
let
up
the market
5%.
come back to,
But the names have not been seen.
you know, that
they
was
haven't
kind of
been
my
able
plan,
to
and it
leverage
never
them.
really, you know, so far it
interested
hasn't
in who you
really
think is going to be the beneficiary of like the German
materialized
rearmament,
like that. You
right?
know what I'm
Or-
saying?
And Canada apparently.
Like
is gonna
Alcoa
be
is at like
rearming. So, like,
$29 right now. I was waiting for it to,
They're
like, I
gonna
was
spend
hoping
real money.
everything
Germany
would,
certainly looks
you
like
know,
it's going to.
they'd hit the economy and Trump with
European defense
everything.
names will go up to
We'd get the
5%
big
and 3.5%
pullback. It pulled those big stocks down to like $15, $12, $10. then get in, let
not
everything
so much
build up,
aircraft, 'cause you'll pick the
and then
ones
and then ride it
pick
to
it.
like
The
$70,
F-35
$80.
is
Last
okay through
Trump
2030,
term, Alcoa
nothing to
hit
say about
100.
that, but you might pick
So that
a
was kind of my
Eurofighter
plan
instead of an F-35
for, you know,
as well.
long-term plan for,
Where we think you could see
for,
them
you know,
this
my
year is about
retirement
Raytheon
cash.
Defense. They have
Because I'm not in
exposure
anything right
portions
now. I
and
pulled
sales to
myself
Europe.
out
And as well
fourth
as Northrop,
quarter
we were just with the management team
of
week.
last year
They sell
at pretty much the
communication
highs.
system for missiles called IBCS.
Um,
Their first sale was to Poland. They're working on 12 other countries.
So I'm still on the sidelines. So that's kind of how I was going to try and capitalize on that prediction, if that makes sense.
Classically has been
But it's got to, it can't
Europe
like
as
just,
well.
you know, we can't
Just a
have
fascinating
two
discussion,
two
Sheila. It's always
days
great
of
to see you.
news,
Really appreciate you
have it
making
spike
time.
down
That is Sheila
1,500, 2,000 points, and then come right back the next day.
Yes, she
I mean,
is.
as an investor, you can't really capitalize on a move like that.
Coverage
You know,
and
I
a ton of
couldn't
red
anyway.
headlines out of the air show next week.
I
Yeah.
hope so, because
So
there
that's
is
kind of what I
plenty
was
to talk
hoping for.
about.
I was
So
hoping
we'll
for
keep
that
an eye out for those
nosedive into the
headlines.
low
But,
3,000s
coming up in the
and
next
kind of
hour,
bottom
we have the
out
CEO
for
of Beta
a few weeks,
Technologies,
month or two, and then that's, you know, I was going to look for the best opportunity to get bought in, and then that was going to be my long-term hold until the next election. That was my plan, and it just hasn't worked that way yet. But as far as futures, if you're on a paid account and you catch one of those big moves, you know, 500,000 point moves in one day, I mean, you pretty much got a balance on your account. You should never be able to blow up, you know, if you're limiting, you know, if you've got a reasonable daily loss limit. Yeah, that's what I'm hoping for. I'm thinking it can still happen. There's so much stuff going on right now that it can dogpile real quick, and then people will start jumping to safety to wait and see. And then once that starts happening, you'll see money start to get pulled out, you know. But you've got these big corporations that Trump is, you know, going after. They basically have enough money to cut the market in half in one day on a short.
Key investors, top executives, global
You know, all they need is a catalyst and a little bit of help, and they can put a big hurt on things for a while.
Only on Bloomberg.
You know, like BlackRock, pharmaceutical
Tune in to Bloomberg
companies.
Business Week Daily.
We got to talk crypto.
From the
You know,
magazine that helps global leaders stay
There's a
ahead.
lot of these companies that have a
Bringing
big
you
investment in
insight on the people,
manufacturing in
companies,
China. All
and
these
trends
companies
shaping
don't
today's
want the
complex
direction
economy.
that Trump is trying to take the
Plus,
country,
global
and
business,
it'll be a
finance,
fight
and
the
tech
whole way.
news as it happens.
The floodgates
Yeah.
of innovation are going
Don't
to
fight.
open
All
up
we're
in
trying to do here, brother, is
backyard.
just scrape a little off the top for ourselves. Nobody will notice. We're just trying to scrape a little off the
It's a
top
multi-trillion-dollar
so that maybe we
industry.
can retire
We'll show
early.
you what's happening in ETFs like no one else. ETF IQ.
Once the whales make their big
on
move, and then
Bloomberg.
I'm just gonna wait and see, and then get my stuff in. Just a few pennies. That's right, my friend. Hey, I got a sales call I got to make here in a couple minutes. I'll be back on the mic in a little bit. I got to go in and out during the day because I work from home
right now at
full time.
6,015.
I have a sales job.
And the NASDAQ
All right, Luther,
now
I'll
is
talk to you in a bit.
20,836. The interesting thing here is, and I'm going to call out my producer, Will Shaker has such genius ideas sometimes. This may seem like a little thing, but it's big to me. He put Novo Nordisk right here on top of McDonald's, which is great because an analyst from 2023 downgraded MCD shares on GLP-1 concerns. You see all the tech stocks up, Tesla, Meta, and Apple. Even Apple up 0.5%, as Ed says, rebounding from the drop yesterday. And then Stellantis right now gaining 2.25%. They're going to bring back the Hemi. Coming up in the next hour, Seema Shah helps us break down the winners and losers from trade developments. This is Bloomberg.
in Davos, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look, what's happened is because the interpretations of AML, Anti-Money Laundering, BSA, Bank Secrecy Act, KYC, know your customer, know your customer's customer. There's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, so we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes up in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity. Ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Defense Secretary Pete Hegseth is getting an earful from lawmakers on Capitol Hill right now over the deployment of military members to Los Angeles to keep anti-ICE protesters at bay. Minnesota Democrat Betty McCollum.
The president's decision to call the National Guard troops to Los Angeles was premature, and the decision to deploy active duty Marines as well is downright escalatory.
Writing on Truth Social, the president says the city would burn if he hadn't acted. So far, so calm as the protests enter day 5. CBS's Maurice Dubois is in downtown L.A.
It has remained calm, but yesterday it got dicey. There were confrontations right here on these very streets. Huge law enforcement presence, officers trying to get control, urging people to clear the area. The Marines we just told you about, they're being charged with protecting federal property and personnel.
Police in southeast Austria now say a 21-year-old former student who never graduated used 2 weapons to open fire on a high school in the city of Graz today.
There are crisis management teams to help people, even for those who haven't been physically harmed. But still, there are several fatalities.
They say 8 students and a teacher were killed. The gunman also died. No word yet on a motive. Austrian Chancellor Christian Stocker has declared 3 days of national mourning. Pushback from medical experts a day after Health Secretary Kennedy removed all 17 members of the CDC's panel of vaccine experts. CBS News contributor Dr. Celine Gounder.
Removing the entire ACIP committee at the same time all at once is highly unusual, and it injects political instability into a process that's traditionally been nonpartisan, not political, and rooted in science.
As the Trump administration gets set to resume federal death row executions, the numbers are ramping up in the South. CBS's Jim Krasula.
4 executions are scheduled in the U.S. this week, with 2 of them today. Alabama, South Carolina, Florida, and Oklahoma are scheduled to put inmates to death this week. That would bring the national total of executions to 23 so far this year. There were 25 executions across the U.S. last year, according to the Death Penalty Information Center.
Satellite photos show the number of emperor penguins in one part of Antarctica has declined more than 20% over the past 15 years. Researcher Peter Fretwell suspects climate change.
If the sea warms up, that sea ice, which
freezes over every year and melts every year, doesn't last long enough for them to complete their breeding cycle or to molt properly. And that really gives them a lot of problems.
Dow down 20 as the World Bank sharply downgrades its projection for global output this year. This is CBS News. Seems a lot of people aren't having kids because it costs too much.
The UN Population Fund survey found most people want 2 or more children, but 1 in 5 say they will not have their desired number. They cited financial reasons, infertility, lack of time, or lack of a suitable partner. Demographer Anna Rockhurch.
It seems that the whole humanity currently is entering the era of low fertility.
The UN fears some countries will overcorrect like they did 40 years ago when they worried they had too many people. Now they're looking to boost fertility again. Michael Wallace, CBS News.
Scientists are studying a funny-looking light pink fish with orange gills, hoping it'll one day help humans regrow severed arms and legs. The axolotl, popular as an aquarium pet, a pop culture icon in video games, is an expert. The fish can grow back not only body parts, but tissue in the heart, lungs, and even the brain. The study in the journal Nature Communications today. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience, also streaming live on YouTube. Also, we are on the smart TV thing, the Roku's, all that kind of good stuff. You just have to search Bloomberg Originals, and that's where you'll find us. Alex Steele and Paul Sweeney, we are with you. Looking forward, we're going to check in with Tyler Kendall, Bloomberg Television Washington correspondent, to get the latest on the U.S. and China trade negotiations taking place in London. Julie Beal, Chief Market Strategist and Portfolio Manager, Kane Anderson Rudnick, get her market call here. Ira Jersey, we're going to talk to him about interest rates and what the Fed might do in a couple of weeks. Then we're going to check in with Janet Lauren, Bloomberg Higher Education Financial Reporter. She's got a really interesting story about the University of Texas system. They're cashing in on AI, crypto, and power. Great story about how universities are trying to shore up their finances here in an uncertain funding world. Right now, let's kick it all off with John Tucker and a Bloomberg Business Flash.
All right, guys, this Bloomberg Business Flash brought to you by IBKR. Will U.S. oil production exceed 13.4 million barrels per day for April 2025? At IBKR Forecast Trader, the yes was recently at 39%. You can start predicting today at ibkr.com/forecast. Last trading day for this contract, June 29th. Major stock averages are higher at a little change, still waiting for any signs of progress in the trade talks between the U.S. and China. The Mag 7 index up 0.7%. You have Taiwan Semiconductor Manufacturing, the main chip maker for NVIDIA and Apple, reporting a 40% jump in May revenue. That's because customers pretty much stockpiled chips ahead of the tariffs. Those shares up to almost 2.5%. Mike Wilson at Morgan Stanley, meantime, remains bullish of stocks.
We bottomed in terms of the pain of that initial announcement and how bad those tariffs were. So unless it really re-escalates in a negative fashion, I don't think the trade issue is even going to be enough to kind of take the momentum out of this market right now.
The worst performing stock in the S&P 500. Let's go there. You've heard of them. J.M. Smucker. They say the tariff-fueled price hikes will weigh on their profit. Those shares down close to 12%. Paramount Global planning to cut several hundred employees today. They blame a continuing decline in the cable TV industry and the broader economic landscape. Auto lenders are providing extended terms now with loans of 85 months or more. That's 7 years. It's another warning flag that affordability does remain the central topic when it comes to buying a car. Now, according to Experian, the average car loan is now close to $42,000.
Oh my God!
And the average monthly payment $748.
Wow, that's
a lot.
We checked that. Well, let me do the major stock averages. S&P 500 up 10, the Dow down 23, the Nasdaq 100 up 35 points. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
That's making my 2019 Jasper Subaru looking pretty good after that.
I'm going to try to keep my car on the road forever.
No kidding.
I mean, the average age of a used car astounds me. It's like 10 years or something.
It's older
11?
now because it's been stretched. Yeah.
Okay. Yep.
I mean, to be fair, we do have to do a lot of work on it, but anyway, it's only 6 years. All right. Thanks a lot, JT. Alex Steele, alongside Paul Sweeney. Let's get to some of the market drivers within the overall indices here. Bloomberg Cross Asset reporter Isabel Lee is joining us. All right, what are you looking at?
I'm looking at JM Smuckers. It's not a good day for the stock, down by 13%. So the company said U.S. tariffs that are increasing the cost of their coffee business would weigh on profit for the coming fiscal years, estimated at $1 a share. So Citi analysts said they were already concerned ahead of the results, but then when they heard the results, this was even below the most bearish outlooks that they had heard. So this is a big deal for Smuckers because it owns Folgers and Cafe Bustelo coffee brands. I don't know if you guys drink those.
Folgers? No, because I'm not my grandmother.
Oh,
like that.
Whoa.
I was like, what you would
Harsh.
drink. I just mean like for me.
By the
it's
way,
like super
you're supposed to
old school.
say J.M. Smucker is in a jam.
Jam.
Oh, I see.
I see. Yeah, that was really
Never
great.
mind.
Okay. Nice age reveal here. So last fiscal year, the company generated a third of its revenue from coffee. And since June last year, Smucker already increased its coffee prices 3 times, and they're expected to boost them again in August. This is why I've been hearing a lot of people saying they have to find alternatives to coffee.
Well, to be fair, my grandmother would be 120 or something if she was still alive. So I'm just saying, that's what I think of Folgers. All right, let's go to McDonald's.
McDonald's. So this one is also in the red. Shares are down 1.5%. So this was after the burger chain was slapped with its only sell rating. We have Redburn Atlantic saying that the shifting consumer patterns due to weight loss drugs are cause for concern. So Redburn gave McDonald's a 2-notch cut from its previous buy rating.
This was a story 2 years ago.
I know, we saw this coming. Like, obviously, people want to be thin and maybe even healthy. Then they will cut down on fast food and sweets and donuts.
So this is what we were all worried about that didn't happen for the last year, and now it's happening.
I think it's because this is concrete. It's their first sell rating, and other analysts remain largely split. McDonald's has 22 buy equivalent ratings, 18 hold, and an average price target of 332. So the analyst there said that McDonald's can see as much as $428 million in annual impact to revenue. So it's a street low.
Number 2 with a Coke. It's been my order since I was 14.
This is actually true. So when we were in D.C., well, he went to Shake Shack. We were in D.C., gets to the burger, finishes it in 5 minutes, and we're eating the salad with the pita thins and the olives and the tzatziki. Anyway, we digress. And speaking of, Novo Nordisk.
This one is also interesting, but it's in the green, up by almost 5% or more than 5%. So that's the highest level in 2 months. And it comes after a report from activist hedge fund Parvus Asset Management building a stake. And this comes after we know that the company has really been struggling. And it seems like Parvus is interested in influencing the appointment of the new CEO. So Novo last month replaced its CEO, which shocked everyone because the company's culture is very close-knit. They've only had 5 CEOs in their century-long history. But now investors seem to be cheering the move because Novo's drugs are Ozempic and Wegovy. They've become household names, but they've struggled to just really make it big and compete with their rivals.
Very good, Isabel. We appreciate, Isabel Lee, very good. Thank you so much. We appreciate it. Talking about the markets here, and again, kind of a mixed market here, but let's get to what's going on down in Washington, D.C. We've got some pretty, I don't know if they're high-stakes talks between the U.S. and China. It feels like every time maybe they get together, it feels kind of high-stakes, but I'm not sure if anything's going to get done in terms of trade negotiations taking place in London. Tyler Kendall joins us here, Bloomberg Television Washington correspondent. So what do we know, Tyler, about these talks? Are there any expectations that anything concrete can come of them?
Yeah, hey, Paul. Well, the expectation really is that both sides are trying to make sure that they can ensure that the other side is going to live up to the agreement that was reached in Geneva amid allegations that they're both violating those terms that were reached then. And I spoke to President Trump yesterday, asked him directly how the talks were going, and he said that negotiating with China is not easy. And when I pressed him on whether or not he gave his negotiators any sort of limitations when it comes to export controls, he didn't rule anything out. And that's because export controls really are at the center of the discussion during these talks in London, as both countries put restrictions on products that the other needs. Now, the U.S. has signaled that they would be willing to perhaps loosen or lift some of the export controls, but that would be in exchange, of course, for assurances from China that they're going to speed up these export licenses when it comes to critical and rare earth minerals that are so essential to U.S. supply chains. People familiar do tell us that the U.S. would focus in on some of the new restrictions that we've seen put into place in recent weeks when it comes to some of the software related to AI chips, also jet engines, and perhaps some chemicals that China relies on too, that the U.S. has been restricting in recent days. So we're going to have to see how it ultimately shakes out. Alex and Paul, there's a lot of focus here on how the Commerce Secretary Howard Lutnick is part of these talks, and perhaps that indicates that the U.S. is willing to put those export controls on the table. But it's important to note that just last week we had quite the split screen here in Washington. As President Trump was on the phone with Chinese President Xi Jinping, we had Howard Lutnick on Capitol Hill testifying to lawmakers that he actually thinks there needs to be a stronger enforcement of export controls. So there is sure a lot to work out on that.
And at the same time, we were just reporting that J.M. Smucker's profit forecast was hit by U.S. tariffs. I mean, partly higher coffee costs, et cetera, but also U.S. tariffs. So some companies are already seeing the impact, and I'm wondering if constituents are talking to their representatives on Capitol Hill in a different way than might have been there, say, 4 months ago now.
Definitely. And there still is tariff uncertainty, even as there was a debate whether or not we've reached the peak of that uncertainty. And Bloomberg Economics actually does put into context how high stakes these talks really are, saying that if those levies that are currently in place remain in place, it has the potential to cut U.S. imports from China by 70% over the medium term. So we're still talking about some really big impacts here. Even with that said, the goal of these talks in London does not appear to really be bringing down those tariffs. It's also unclear if the White House would really give up that sort of negotiating leverage at this point, considering that this is going to be a much more wide-ranging, broader deal that they're going to try to negotiate down the line. Of course, for context, it took them 18 months last time to reach the Phase 1 China deal. This time, we're really talking about these export controls, these other issues that have been popping up, including, as you well know, China has raised concerns about the U.S.'s plans to revoke Chinese student visas, something that President Trump said last week wouldn't be an issue. He said that Chinese students would be welcome in the U.S., but at this point it remains to be seen how substantially the State Department would really change its policies that are going into place.
You know what? I wonder how the mood is in Washington, D.C. about potential economic headwinds coming from tariffs. For example, Troy Lutka, who's over at SMBC Nikko Securities, just sent out a note, and he's saying small businesses could be hit hard. And he's saying that unemployment as a result of tariffs could rise to 5.3% versus today's 4.2%. I think if that were to happen, a lot of folks out there would be voicing their concern to their representatives. Again, what's the feeling in Washington just about tariffs in general, economic uncertainty in general, Tyler? Are people starting to tire of this?
Well, lawmakers definitely are hearing from their constituents on this. And if you ask the White House often likes to point to that there are different parts of its economic agenda that they're ultimately pursuing here. Look beyond tariffs. That's why they also want to see this focus on the tax bill. That's part of why we are seeing that expedited self-imposed timeline to get it done by July 4th. White House officials often say that, yes, for example, we are looking at increasing the debt when it comes to the reconciliation package, but they're looking to stabilize that debt to GDP ratio, and that ultimately it's going to be this longer term growth, even if there's going to be some sort of shorter term pain. Now, whether or not that squares with the data that we get and how much pain consumers actually can get before we start to see a pushing back really does remain to be seen. But it is top of mind here in Washington as lawmakers try to do their part when it comes to that reconciliation package.
All right, Tyler, thanks a lot. Tyler Kendall joining us from Bloomberg. And to that point, the NFIB actually rebounded, increased for the first time this year. Taxes are still the single most important problem in the survey for the first time since the end of 2020. But nonetheless, the NFIB optimism definitely rebounded there. All right, coming up, we'll get the take on the markets. If we just grind around these levels, like for how long, eventually does that bring back money into the market? And what does that actually look like? Julie Beal, Chief Market Strategist and Portfolio Manager at Kane Anderson Rudnick, will be joining us. Plus, there's an auction today, Paul.
Oh,
it's a 3-year. Oh, yeah. Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist, will be joining us on The Outlook. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with his Bloomberg Business Flash being brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Major stock averages mixed to little change. I've been saying this for I don't know how many days. Still waiting for some word on trade talks between the U.S. and China taking place in London. Right now, you have 7 of the 11 major industry groups in the S&P 500. They are pushing higher, and we're being led by energy. Enphase Energy, best performing stock right now in the S&P 500.
Energy.
That is up 4%. By the way, have you taken a look at gasoline prices, speaking of tangentially?
No, because you're going to tell me.
No, it's really been jumping.
Has it?
Yeah,
Okay.
it's over $3 at the Wawa. Anyway.
Did you not watch my piece on gasoline on Wall Street Week on Friday? Because you can find it on YouTube, and it will help explain what your gasoline
After work
prices
Friday, what was I doing? Was I watching Alex's show,
You could
or was I on the beach?
completely watch it on the beach.
Okay.
You got time in this next segment. Check it out.
Meta CEO Mark Zuckerberg personally recruiting a new team called the Super Intelligence Group. He's so hands-on with this effort, he's even rearranged the desks at the company headquarters. The goal is to achieve artificial general intelligence, AGI. It's the idea that machines can do a lot of jobs, at least as well as humans. And a cybersecurity breach at United Natural Foods was the primary distributor for Whole Foods. It's disrupted deliveries, also forced the company's systems offline. S&P 500 up 13, the Dow down 5, NASDAQ 100 45 points higher. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
All right, thanks so much. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our Interactive Broker studio right here in Midtown Manhattan. Also check us out YouTube. Also on any of your smart devices and smart TVs, you can check us out on Bloomberg Originals as well. Again, I feel like I've given this market check for the last week straight at this time every day, and that is that the S&P is up 0.2%, volume's a little bit mixed, the NASDAQ is up 0.3%. Julie Beal is Chief Market Strategist and Portfolio Manager at Kayne Anderson Rudnick. Julie, if you have the market holding up but not going anywhere, what are you supposed to do?
I think this is a pretty good time to make sure that everything you have is working the way that you want to, right? This is a good time to review earnings as they've come out and think a little bit about what's the forward-looking outlook. The biggest challenge, I think, in this market is the recognition that it's pretty emotional, right? So we've gone from absolutely euphoric at the beginning of the year to totally despondent around April. And now we're kind of in this place where it's euphoric from a valuation standpoint, but it's not feeling that way for most portfolio managers. And I think there needs to be a recognition of how far the market has moved, because that indicates that there is a lot of weakness. There's not a lot of conviction in where we're at.
So where do we go from here, Julie? Do we hide out in government treasury bonds? Do we just try to play defensive dividend-paying stocks? Or do we say, hey, everything's going to be all right. I can take some risk here, because the market's really has whipsawed so far this year.
Yeah, I think right now still your best place is to be invested in the market and to be focused on quality, because you just really are not going to be able to predict any of the outcomes, right? I think we've all given up trying to predict. I think these poor economists on Wall Street that are having to revise their GDP weekly, it's a brutal job, right? It's like checking in with my 7-year-old like every 10 minutes is brutal. But I think that it's a real recognition that we really don't know the direction. It's very, very hard to gauge the size and the scale and the impact of what the tariffs are going to be, nor any of the tax policy that we have coming out. And so I think you're just really better served sitting very still in higher quality companies and trying to ride this out.
What is higher quality right now? Like, how would you define that?
For me, the highest quality businesses are going to be those that have very low levels of debt. That's absolutely critical when I think that, if you have a view that the long-term picture for interest rates is probably not going down materially in the near term, then I think it's really important that you have very, very pristine balance sheets. You need to have good levels of cash flow for businesses that are able to invest when things clarify. And then I think the most important thing is that you have a lot of durability to the earnings. I think I want to have a lot of clarity that regardless of what's happening in the tariff environment and the fiscal environment, that these companies are going to continue to do business. People are still going to want their services. They're protected from a competitive standpoint, because I think these are the types of businesses. They're not typically your flashiest, sexiest businesses, but they are typically the ones that are with you for the next 10 years with very consistent earnings trajectories.
Julie, do any sectors or maybe even factors screen well for you guys right now in this time of uncertainty?
I think that it's less about sectors, right? I think it's much more about within each sectors you can find good quality companies, right? So even within consumer discretionary, which for most long-term investors is a tougher place to play, you can find companies like an Ollie's Bargain Outlets, right? That's providing a lot of value for their customers and has more protections around it than your average retailer. If I think about tech, even in the space of tech, most of it is software is usually the place that I think has the greatest quality. But within software, you have to be very selective because typically the valuation is higher. So your margin of error is a little bit sharper and you have to be a little bit more careful.
There's a couple fun pieces out about how, say, PIMCO versus BNP are looking when it comes to the bond market, like the belly or the front versus the long end and stuff. How do you look at treasuries as a hedge at this point?
I think right now it doesn't make a ton of sense to me to be taking a ton of duration. I think you're not necessarily really getting paid for the level of uncertainty that you're taking on. You're getting a pretty nice, rich yield right now early on. And I think that is probably a better place to be. Even as an equity investor, I look at some of the yields people are getting on shorter duration fixed income, and it's sort of like, ooh, I got to be competitive. Like, I really have to sharpen my pencil to deliver.
Is cash a bad place to be these days?
It's like I always think as a PM, I'm not really paid to hold cash.
Yep.
And I think that it's really hard to be able to predict when exactly the market is going to move in a certain direction. So, I typically have 3% cash in case I absolutely fall in love with a company and I want to be able to pull the trigger on it quickly. But typically, I really recommend being fully invested.
Yep.
It's difficult, right? In markets like this, you kind of want to have the sensation of, oh, I want to be ready in case there's a pullback. But when you look at your attribution, you see that even having a 5, 6, 7, 10% cash weight when the market is solid is a huge drag on your performance, right? I think you're better served to stay invested in things that, are higher quality like a treasury than just being in straight cash.
Right. Julie, thank you so much for joining us. Really appreciate it. Julie Beal, Chief Market Strategist and Portfolio Manager at Kayne Anderson Rudnick, joining us via Zoom from Santa Monica, California. So some good stuff out there. Ira Jersey checks in with us. I'm not sure why we're talking to Ira Jersey. He's a U.S. interest rate strategist, Bloomberg Intelligence.
Okay, auction, dude.
Oh, man, we're not going to go there. But everybody on Wall Street wants to hear what Ira Jersey's saying. But I think I could do an Ira's job here. We're kind of range bound. 10-year Treasury, I don't know, 4.25, 4 to 3/4. Ira, it feels like your market, it's kind of range bound, which suggests maybe there's really not any conviction one way or the other. Is that what you're hearing out there?
Yeah, so it's funny. There's this push and pull of some people who think, oh, the economy is going to weaken significantly and there's going to actually be decent demand for treasuries, versus another group that says, oh, the fact that we're going to have higher deficits and continued with this fiscal largesse in the U.S., and that might push rates higher. You're seeing this push and pull between those two camps. That being said, the Federal Reserve also being on hold, maybe all of this year, according to the way the market's priced right now, does suggest that we just kind of hover around here, at least for the time being, unless there's a significant turn in the economy. And Friday's jobs data just, doubly proves that the job market is slowed, but doesn't seem to be slowing further. So therefore, in a steady state world with the Fed on hold and the economy fine but not great, the rates don't have to do much of anything really.
Okay, so we got the 3-year today, 10-year tomorrow, 30-year on Thursday. I feel like I don't quite remember a time when the 30-year was this talked about this far before the actual auction. How do you think things are going to go over the next few days?
Yeah, so the 3-year today will be maybe, from a foreign demand standpoint, maybe the most interesting actually, because remember the real angst back in April was as to what were foreigners going to be buying, were they selling? You saw a lot of volatility overnight in the Treasury market. So that's one reason why there was a lot of fear that a lot of pension funds and private investors would stop buying the 30-year. But central banks and other policymakers, right, both fiscal agents as well as monetary policymakers globally, own treasuries in order to conduct their monetary and currency policy. So demand for the 3-year will be probably the key as to if the trade war and all of this other angst is really affecting the decision making of those policymakers. The 30-year is mostly interesting because it's the most risk that we have out there on the curve, on the yield curve, because a little tiny movement in the yield of that moves a lot in price, right? And that's the what we call duration, the price yield relationship. So when we wind up with so much debt coming out on the same day, it has to be, you have to watch it. Last month's auction, though, went pretty well, so I don't see why this auction won't go okay as well on Thursday. So I'm really focused on 1 o'clock today right now.
How does who sells the government debt? Is that the Fed?
Treasury?
The Treasury Department.
How does the Treasury decide which maturities to sell and when? How does that work?
Yeah, so every quarter they come out with what's called the quarterly refunding announcement. We had one about a month ago, and then we have another one in late July, early August. And when they decide, based largely on where demand is, right?
Okay.
So one of the reasons why they're issuing a lot of Treasury bills right now, there's around $6 trillion of Treasury bills outstanding, is because there's a lot of interest in short-end paper from things like money market mutual funds, which have $7 trillion in assets. So when you wind up having this supply-demand relationships as in favor of demand for those securities, the Treasury Department then comes out and says, oh, we'll issue more of those securities that are in demand. And you've seen that over time. It's usually pretty incremental. They don't just change things on a dime, but they do make incremental shifts based on who's buying what and where.
Wait a second. Is Paul going to start to buy into Treasury refunding announcements? Because this would be a thing. And then pretty soon he's going to start talking about debt ceiling impact and issuance, and then he'll start talking about auctions. I think we've corrupted him slowly.
Bid to cover ratio.
Oh, he's going to get into
Remember
it.
that?
Ira, I think we're starting to move him. This is huge. Hey, Ira, thanks a lot. Super appreciate you always. Ira Jersey, a Bloomberg Intelligence Chief U.S. Interest Rate strategist. All right, coming up, we're going to talk again about higher education and the drama that continues to unfurl. Apparently, oil-rich University of Texas is cashing in on AI, crypto, and power. We're going to break that down with Janet Lauren, Bloomberg higher education and finance reporter. In a market where broadly we're not seeing that much movement, but Charles McGilligot over at Nomura says that, look, if we continue to just have these little moves here, we're going to start to see the fund flows get back in, like CTAs, commodity trading advisors, and that will push the equity market higher regardless of any sort of fundamental news. And if volatility stays quiet, those volatility funds may need to come in as well. Volume, again, pretty mixed. This is Bloomberg. Happy Tuesday.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Right now, the major averages are a little changed to higher. S&P 500, 16 points higher. That's up 0.3%, 6,021 on the index. So that would put it about 2% away from its all-time record. Dow Jones Industrial Average, 17 points higher. The NASDAQ 100 right now up 50 points. That is up 0.2%. Ahead of the auction. That's for you, Alex. The 2-year right now, 4%, pretty much unchanged. The 10-year yield, pretty much unchanged, 4.46. And then 30-year, what is that, tomorrow or later in the week? Anyway, the 30-year ahead of that auction, 4.93 Thursday. Worst performer in the S&P 500, J.M. Smucker down over 11%. U.S. tariffs and higher coffee costs reducing J.M. Smucker's profit forecast by roughly $1 share this fiscal year. Meantime, Matt Mishkin at Manulife remains focused on earnings growth.
We're seeing about 13-14% earnings growth, but no one cares. Actually, U.S. quality stocks are the worst performers within the U.S. equity market and for the global market. Quality is on sale. The U.S. is on sale.
And Citigroup set to put aside hundreds of millions of dollars more than it did last quarter to account for potential losses on loans and credit cards, a sign of likely worsening consumer health. And shares of Citigroup down just about 0.5%. Oh, here's one for you. Human line judges are going to be absent from Wimbledon this year. Instead, they're going to have cameras. 12 cameras will stand courtside to call whether the ball lands in or out. The Grand Slam Championship opens June 30th.
Technology is awesome.
Fully adopt electronic line calling, courtesy of Sony's Hawkeye Innovations. There's also apparently a shortage of line judges since sports, even tennis, you can bet on it now online. They say it's getting increasingly difficult to do because they're getting all sorts of threats.
Really?
Even death threats.
And you know where the betting is? It's not in the big matches. It's on the second and third tier circuits where there's less. That's where the big betting is in tennis.
I believe it. 100%. Yeah.
So.
But that's where you get the upsets, right? Like the beginning of the upsets and all that?
So there you go. We check the markets for you all day long.
Yeah, you
right
do.
here on Bloomberg. I'm John Tucker. That's your Bloomberg Business
He did a little
Flash.
dance. That's why I said that. Do you have your tickets yet?
Yes.
You did? Okay,
Yeah, for
nice.
first Tuesday, U.S. Open. Boom.
Boom.
Arthur Ashe Stadium. John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Also on your smart TV. Search Bloomberg Originals. Janet Lauren, higher education finance reporter, Harvard reporter, joins us in Interactive Studio today, but we're not going to talk about Harvard and the fight it's having with the U.S. government. This time we're going to go down to Austin, Texas, University of Texas, cashing in on AI, crypto, and power. Janet, how is the University of Texas system based on Austin? How are they benefiting from AI, crypto, and power?
Well, thanks for having me on. So I actually went to Midland, Texas for this story.
That is landman country.
Oh,
people.
yeah.
That is the patch.
Have you watched the show?
Oh, yeah. Have I watched the show?
That's where he's learned everything he knows about oil.
So the University of Texas system has land 2.1 million acres in the Permian Basin that the state of Texas set aside for higher education in the 1800s when the land was supposed to be worthless. But then something happened in 1923, struck oil, and for the first 100 years, the University of Texas grew its endowment with oil and gas. And now in the next century, they're looking for revenue from above the surface. They've started with a few wind and solar facilities. They have a crypto mining center, and they're looking to expand to, augment their revenue from surface ventures.
So that's so fascinating to me. How quickly are they diversifying? Like, how quickly is the money moving? And I wonder what policy in D.C. is also sort of filtering down into what the university invests in.
Well, the university actually isn't really investing in anything. They are the landholder, so they're signing lots of leases.
Sure, but they're like choosing to then maybe sign it for one part of energy and not another, one might say.
Well, they're looking to find new revenue sources. They've had a few wind and solar facilities on the land, and they just signed a preliminary agreement to lease about 200,000 acres or 10% of their land to a company called Apex Clean Energy for wind and solar, and their customers include companies like Meta and the Army and eBay. And right now these are, these things take years and years and years to build. The wind and solar facilities I saw that are up and running for a couple of years, those deals were initially signed several years ago, but it just takes time. And there's new transmission lines that were just approved in Texas, in 3 of them at $10 billion to move power into the Permian. So these wind and solar are producing them, and then these lines will be able to take them.
It's Texas is such an interesting place in the world for many reasons. One of which is when I think of Texas, I think of big oil. The oil rigs and cowboys and all that kind of great stuff. But it's also like one of the biggest renewables places.
Yeah.
I mean, they've got a lot of wind and they got a lot of sun and they got a lot of land. So how does Texas kind of balance those two things?
Well, they need an all-in approach.
Okay.
And the University of Texas has, really grown its endowment. It's, $48 billion, coming close to Harvard.
Yeah.
Wow. And I did a story a couple of years ago about their record year in oil. A few years ago, they got over $2 billion in oil and gas revenue.
That's amazing.
And
No
it's
wonder
just
they can have
cash
these good
into
football
the
teams.
into the endowment.
Can other universities replicate the monetization of their land in a similar way? Like, what other universities have this kind of option?
Everybody in Texas knows never sell your mineral rights, but you can't really come close to this. I mean, Rice in Texas, they also have revenue coming from oil, from land, but nothing even comes close to this. University of Oklahoma, I did a story several years ago about, people gift them land, they keep the mineral rights. With fracking, they got, huge increases over time, but, you just can't compare anything to 2 million acres in the Permian Basin. So they are one of the largest, landholders in Texas.
Still, you have a great chart in here that just kind of shows the growth of revenue from their oil and gas business, which is still the vast majority of it. But this surface piece, it sounds like it can be totally incremental.
Yes, and the head of University Lands, which is the unit of the University of Texas system that runs it, initially he's saying we're kind of looking for a couple of singles here and there, test the waters, and now they're looking for bigger projects where they can have wind and solar power generation, on larger swaths of land to generate more money. Now, keep in mind, under these projects, the wind turbines that I saw, they have oil underneath, and that business is also working, so it's all concurrent.
All right, I have to ask you this question. Alice can answer it for me. There's a picture here, an operator flaring excess natural gas at a well at UT managed land in Peyote, Texas. So there's gas escaping from the well, and they just kind of let it on fire so it doesn't go into the atmosphere.
Yeah. I mean, in theory, they want to capture it economically, because if you capture it, you can then use it. And also, with any sort of environmental restrictions, you got to capture it, but those restrictions are changing, let's say.
And down the road, maybe you can use that natural gas to power a data center.
It's like you got to make it economic, and if you can use it for something else, that's where you got it. Silly question: what are they using all this money for? Like the sports teams, like what Paul was just saying?
Good question. So the money from oil and gas goes to basically building things. It's not for operations. So if you look at their campus, and we described in the story a couple of buildings, $50 million for Texas A&M's new business school, tens of millions of dollars for new hospital facilities. They run a bunch of medical schools, different types of technology within those medical schools and those health systems. I forget the number of schools between the two systems, but it's something like 20 plus, MD Anderson Cancer Center.
Yep.
So they build buildings.
They build stuff. We had John Mowry on, his CIO of NFJ, which is based in Dallas, a money manager, and he was just saying the growth of Dallas, it's always been a growth mode. But man, the last 10 years has just been extraordinary. And for so many reasons, the pandemic being probably one of them, but it's just amazing what's happening down in the state of Texas.
Well, and huge numbers of people are moving there. I think it's something like 1,300 people a day, and the UT and Texas A&M system are educating, hundreds of thousands of students.
Yep. All right. Wonderful story. Janet Lauren, higher education finance reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. Really, really cool story. Another cool story about the amazing state of Texas. Oil-rich University of Texas cashes in on AI, crypto, and power. How about that? A little bit of green on the screen here today. The S&P 500 is up about 18 points. The Dow's at 52 points, and the Nasdaq's up.
You're listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, happy Tuesday. Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are covering all the news for you: business, economics, finance, politics through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries around the world. The news that broke around the closing bell yesterday was RFK Jr. removing all members of CDC vaccine advisory panel. So what does that actually mean for us, for the vaccinators, and for countries and health and all the things? So we go to Sam Fazeli, Bloomberg Intelligence Director of Research for Global Industries and Senior Pharmaceuticals. So if you get rid of a vaccine advisory panel, like what happens to vaccines?
Yeah, so Alex, this is, remember there's one group at the FDA who decides whether to approve a vaccine or not. So they do all the analysis on the efficacy and the side effect profile, risk benefit, etc. And then the ACIP, which normally meets 3 times a year, was the group that decides, or is the group, because it's not gone, it's just that the current members have been put aside and new ones are going to be brought on. The ACIP decides how to do it, how to take it forward, who should take it. Should it be, which is, what we've been having, those above 64, those above 50, et cetera, with comorbidity, without comorbidity, and how many times, et cetera. That's the kind of thing the ACIP reviewed and decided and gave guidance on that. And then insurance companies went on the back of that.
So, Sam, when you replace this entire panel, I don't think it's ever been done before, but my sense is, I don't know how quickly they repopulate this panel, but is there the risk that we see a slowdown maybe in kind of the distribution of medicines, new and existing?
Well, so I wonder whether RFK Jr., the head of the HHS, has already been thinking about this for the past 6 months, or say 6 months, since he was confirmed, or even before that. It is possible that he has people in mind for those roles. It is also possible that, and part of the reason for that thinking is that the June ACIP meeting hasn't been cancelled. So I suspect in the next week or so, we'll be hearing the announcement of the people who are going to be on the panel. Maybe we have to wait until that day itself. I think it's 26th of June, if I'm not wrong, or there or thereabouts. And so it suggests to me that the individuals have been chosen. Now, the interesting thing is that you usually get these folks picked and vetted, and it takes some time. So that's why I'm wondering whether some decisions have already been made. I don't know who would have made the decisions. Maybe Secretary Kennedy has done it himself. I don't know the details. But a group will be back. And of course, the question then is, who are they? What type of people are they? And are they all of the view that fits in with what Secretary Kennedy has been thinking, or what? We'll have to wait and see.
Okay, so let's play that fun what if game. Sam, if those that do come on do subscribe to views over vaccines as Secretary Kennedy does, what does that wind up looking like for vaccine stocks?
Yeah, as you can tell, I think Moderna is not really particularly suffering today, or BioNTech. I think the expectation is that this group will still be an expert group who will be able to decide how vaccines are administered and how they're used. And I don't think there'll be a particularly massive change to the already announced guidances and views, i.e. going forward we want placebo-controlled trials, i.e. we want these vaccines to be used in, particularly COVID, for example, in people with comorbidities and not just the entire population, etc., which has been what had ended up happening anyway in reality. So I don't know whether there's going to be a massive shift. Then again, we wait and see who's on this panel. If they end up being non-experts in the vaccine world, then you start worrying.
So, Sam, as you talk to institutional investors around the world, what is their view towards biotech and big pharma, given maybe some of this changing landscape?
Yeah, so biotech's had a bit of a reprieve recently. As you remember, a couple of weeks ago or so, or 10 days ago, we talked about some M&A deals that came in, some big licensing deal, etc. So that has helped sentiment a bit. And I think what the market is not ready for is a real comeback on the most favored nation or anything to do with the tariffs on pharmaceuticals, because that's not gone away. All the other tariff conversation does not include pharmaceuticals, right? So there is a risk that we've become a little bit complacent, maybe, with regards to the sector as a whole and what the administration would do, maybe because of the walkbacks of some of the tariff talk that had happened with other sectors, etc. I think there's probably some of that happening. So fingers crossed, nothing shocking or surprising comes out of either of those two fronts.
Would we be thinking, though, that there would be some exemptions for some components, for some diseases?
Well, I think if there is going to be a tariff, it has to be on the imported drugs, right? Because then if you're a pharma company that produces 60, 70, 80% of your product in the US already, then you shouldn't feel an impact from that. And you might be able to then switch more manufacturing. But this is what I've said before. You can't say to pharma companies that the reason you should bring manufacturing here, because this is your biggest profit center. And then at the same time, with MFN, most favored nation, try and erode that profit capability. That's what I'm worried is one of the guiding principles of the administration.
Right, and that obviously has those repercussions. Hey, Sam, really great to check in with you. Sam Fazeli of Bloomberg Intelligence. He's Director of Research as well as Senior Pharmaceutical Analyst. Thank you very much. All right, for our listeners in the United States, here's a reminder. You can listen to us via satellite radio, Sirius XM, Channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM, Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now as shocker. Stocks are higher, but volume is mixed.
Yes.
I know. I feel like this is a new statement that I'm saying.
It's the new normal, appears to be like. And that's not too bad. That's not terrible.
I know, but then what? ...
Yes.
To the up or the downside.
Yep.
We'll break all that down for you. Happy Tuesday.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Happy Tuesday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We have a great hour lined up for you. Tom Orlik will be joining us. He's Bloomberg Economics chief economist on the latest in U.S.-China trade talks. Again, who has the leverage? Where might we see movement first? And Sarah McGregor, Bloomberg managing editor of the national team, will join us on the unrest and protests that are unfurling in L.A. Anurag Rana, Bloomberg Intelligence senior technology analyst, will be recapping the dud of Apple's WWDC. Can I call it a dud? I can call it a dud.
Well, just underwhelming, or I don't know.
I'm calling it a dud.
Okay.
I'm summing that up. All right, and then we will also talk to Joy Yang, head of index product management at Market Vectors Indices, to discuss her outlooks for the market. So we have a lot lined up for you. Let's kick it all off right now with a Bloomberg Business Flash with John Tucker.
All right, thanks, guys. And right now, the major averages pushing a little higher. Still waiting to hear what's going to come of the trade talks underway between the United States and China. Those talks taking place in London. S&P 500 within just about 2.1% of its all-time high. Designer Brands, this is the company behind DSW Shoe Stores. This is the latest U.S. company to yank its financial forecast because of uncertainty stemming primarily from global trade policies. Shares that trade in the United States of the chip-making giant Taiwan Semiconductor Manufacturing. They are higher right now, up just about 2.5%. The company said its revenue in May jumped nearly 40% from the year earlier. S&P 500 right now 15 points higher, up about 0.25%. We're at 6,021 on the index. The Dow Jones Industrial Average 58 points higher. NASDAQ 100 up 33 points. That's up about 0.2%. Victoria Fernandez at Crossmark Global doesn't see much immediate movement in stocks.
We are going to continue to kind of churn around these levels. We're at this 6,000 level for the S&P. It's reached that. That was a strong psychological level. And I think that's where we'll stay until we get news one way or the other coming out of these talks. You know, the market tends to get ahead of itself a little bit.
McDonald's right now down 1.3%. The largest restaurant chain is lower after Redburn Atlantic gave them the sole sell rating on this stock. They're blaming shifting consumer patterns due to weight loss drugs and inflation. And you may not have heard of them, Marelli Holdings, the auto parts supplier for Nissan, Stellantis, and other car makers. They're planning to seek Chapter 11 bankruptcy protection. Marelli employs more than 50,000 people. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Let's take a look right now at some of the stocks on the move today. I'm Paul Sweeney along with Alex Steele. And we're joined by Bloomberg's Isabel Lee. Isabel, what are you looking at?
I'm looking at Paramount. So the stock is now flat, down by nearly just 0.2%. So the company plans to cut several hundred employees due to the economic landscape and just really the continuing decline in cable TV. I mean, now when I talk to a lot of my friends, not many of them have cable TV, and the move will affect 3.5% of the media company's workforce, according to an internal memo. So Paramount, which is the parent of CBS and MTV, last year already cut 15%. So now majority of employees will be notified immediately, says the CEO. This is just really, I think, a challenging time.
Yeah, I've seen this before, as has John, in the newspaper business, in the magazine business, in the radio business, and now the cable television business.
Well, also, it's sort of like those industries don't disappear. They just radically change.
Yes.
So there's only going to be a few players in a very particular kind of content, right? And the different people that work there and different needs. So it's sort of like how to rethink that.
Yeah, it's just, there still is content creation. There always will be content creation. It's just a question of how it gets to the consumer. And now it's direct to the consumer via streaming.
Okay, let's go to Apple. So I called WWDC, the Worldwide Developer Conference, a dud. Was that fair of me?
Probably. It's up. The stock is up 1.5%. AAPL is the ticker. So Apple introduced a number of AI-powered features during that conference. And even after investors are really waiting for the enhancements to Siri, which is their assistant, AI assistant. So the announcement included an expanded partnership and a relationship with ChatGPT, which is ChatGPT maker OpenAI, which first teamed up with Apple last year. And AI wasn't really the main focus of the event, which is why maybe Alex thought it was a dud. It dwelled more on operating system design changes and other features. But they did talk about AI and how AI capabilities will help Apple's iOS begin to match more features offered by Samsung and Android devices. This is always a debate with me and my cousins. I have an iPhone and they have an Android. And we always have a contest on who will take better photos or like features and stuff.
And
I'm just a lifelong Apple user, and I think that's the strength of Apple. She's very sold on her Android. It does make
Our
you pretty.
family is all Apple,
It does,
with the
see?
exception of my oldest son. He's Android, and he's the engineer, and he says it's a superior technology.
Exactly,
But I'm like, all right, dude, but the rest of us are on our little Apple group chat, and where are you?
So wait, the Google or Apple phone gives you better pictures?
Yes.
Google or Apple?
Better
which
as in
one?
prettier.
Yeah, no, I'm into it, but which one?
The everything except Apple, because Apple is so clear. You see your pores and you see your imperfections, and you don't want to see those.
So as I get older,
No, I think
then
it's
maybe
Android.
I switch.
Look,
But you've
did you see
invested
this
in your
picture I
face.
took the other day?
I have invested in my face.
That's a
but
great
you know,
picture.
Girl can always use some help.
It's not an Apple phone.
For
but-
those of you not on television, John Tucker has a picture of some birds. Okay.
Some
Let's go to Meta.
You really described that well.
Let's go to Meta, investing even more in AI in a particular way. Great story from Bloomberg News.
It's an exclusive. It's a very fantastic story, but shares are up just 0.5%. So the tick here is Meta, META. So Mark Zuckerberg is assembling a team of experts to achieve artificial general intelligence. So he's recruiting from his home in Lake Tahoe and Palo Alto, and he aims to hire around 50 people for the new team, including a new head of AI research. He even rearranged desks at his office in Menlo Park so that the new staff will sit near him. So those are all details from this fantastic Bloomberg story. So it's been said that Zuckerberg has been frustrated with Meta's shortfall in AI, and I guess now he's really planning to take action. And he is building the team in tandem with a planned multi-billion-dollar investment in Scale AI. So I'm surprised that the shares only popped by 0.5%, but maybe it's
They've
because
already had a nice run.
yes,
They've had a
and
nice run.
it's all talk for now, maybe, and
Yeah,
we'll wait to see.
I'm just glad he's not talking about the metaverse.
Yeah.
That was a soul-crushing experience for shareholders.
It really, I mean, it really was.
Yeah.
It's just a matter of like how quickly this can all sort of move. All right, Isabel, thanks a lot. Bloomberg's Isabel Lee joining us. For more conversations just like this, subscribe to our new Stock Movers reports. Listen for 5-minute audio reports and the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere that you listen. All right, let's go down to D.C. right now. Tom Orlik is Bloomberg Economics chief economist joining us in the state of U.S.-China talks. Tom, knowing how much you do about both the Chinese and U.S. economy, which economy needs a deal more?
So the existing relationship, the pre-tariff trade relationship, was more beneficial to China than it was to the United States. China was the country with the trade surplus, so a direct contribution to growth. China was also benefiting from tech transfer as global businesses set up shop to produce there. So China is the economy which has the most to lose as that trade relationship now sharply deteriorates. This is also not an amazing moment for China because, of course, they're grappling with this slow motion collapse in their property sector. And that's a moment where you really want exports, external demand to pick up some of the slack. Not happening.
Tom, you lived and worked in Beijing for many years. You have a wonderful understanding of what drives the economy, what drives the politics in that country. Can you give us a sense how much do you think China needs eased trade tensions or even a big trade bill? How much do they really need it, do you think, vis-a-vis the U.S.?
So I think that the Chinese side have kind of conflicting impulses here, Paul. On the one hand, from an economics perspective, they're the country that has the most to lose if the trade relationship with the United States breaks down. And this is a moment where they really could benefit if external demand was providing a little bit of a boost to growth. On the other hand, China views itself as a great power, a peer competitor with the United States. And from that perspective, They absolutely don't want to cave, don't want to signal that they are susceptible to pressure from the United States. And it's those conflicting impulses, the desire to get a deal, but also the desire to save face, to be treated with respect, which I think are kind of going to be a complicating factor in these negotiations currently taking place in London.
Who do you, going forward, what kind of situation do you think the U.S. and China will find themselves in? One of somehow cooperation with many deals that will wind up continuing to move them towards working with each other, or a continued decoupling?
You know, I think it's steady state conflict, right? It's steady state conflict. What do I mean by that? Well, it's in neither side's interest to completely decouple, right? That's why in Geneva, it was pretty quick. It was pretty easy to get down from those embargo level 145% tariffs to something which was much lower. But then neither is it in America's interest to play nice, right? America's very worried about China's rapid catch-up. They're very worried about forced tech transfer. And of course, President Trump has demonstrated that tough on China is a real vote winner. So at one extreme, neither side wants to completely decouple. At the other extreme, certainly in the United States, cooperation with China, friendship with China, not really on the agenda. Where does that leave us? Somewhere in this kind of messy middle where conflict and tensions continue, but hopefully they don't ever blow up to complete decoupling. That, to me, seems like the bouncy, volatile equilibrium we're going to be in for the next few weeks, months, maybe even years.
Tom, describe the position for President Xi. It seems like it is unassailable. Does he enjoy full support of the Chinese people, and will that be reflected in policy?
So, I mean, Paul, I don't need to tell you this, but China is not a democracy, so it doesn't have elections, but it does have politics, right? The implicit bargain which the Chinese Communist Party has made with the Chinese people is you give us control and we will give you prosperity, right?
Yep.
Now, for decades, from Deng Xiaoping to Jiang Zemin to Hu Jintao, that bargain kind of worked, right? It kind of worked. Prosperity continued to increase, and no one questioned, with some notable exceptions, no one questioned Chinese Communist Party's rule. What's happening now? Well, the property sector's in a slow motion collapse. That's not contributing to prosperity. Trade, well, at one point in the last few weeks, China faced a near embargo on its exports to the United States. So exports weren't contributing to prosperity either. So how strong is support for the Chinese Communist Party? I don't think anyone really knows, but I can tell you that if property continues sliding and trade continues sliding and prosperity for Chinese households starts eroding, well, that's not going to be something that contributes to political stability.
All right, Tom, thank you so much for your time. Tom Orlik, Chief Economist for Bloomberg Economics, based down there in Washington, D.C. Let's go from D.C. Out to L.A. What's happening out there with the unrest out there in Los Angeles? Sarah McGregor, Bloomberg Managing Editor of the national team, joins us here. Sarah, can you give us the latest reporting from Los Angeles? We understand President Trump has authorized another 2,000 troops in addition to 700 Marines. What's the status?
Yes. So on the ground now, we're told there were hundreds of National Guards yesterday. That's moved up closer to 2,000 with, as you said, another 2,000 authorized on the ground. We are hearing that the 700 Marines are in LA right now. We're not being told their positions. And from what we're seeing from local reporting or what our own reporters are seeing on the ground, they haven't actually been deployed yet. So we're not seeing them. But I think the key question that remains is sort of what are their marching orders? Who are they reporting to? Is there coordination with local law enforcement? And sort of how will they react on the ground in terms of trying to control potential protesters? We did see a fourth night of sort of localized protests in Los Angeles. And again, these aren't massive protests. In some ways, it's, vandals looting shops and obviously interacting with security forces on the ground. But these aren't massive protests yet that we're seeing in LA.
Well, that's exactly what I wanted you to paint a picture of, because always when you look at pictures, you're always going to look at the worst pictures, right? Because that's what we do as a media culture. What's it really like? How peaceful? Where are the breakouts of stress? What does the unrest actually look like?
Even before this weekend, there were peaceful protests in downtown LA, other parts of the city, mostly people focused on, immigration, anti-deportation protesters. So, this is something that isn't unusual, people gathering to sort of protest ICE raids or Trump's immigration agenda. Of course, the violence that we saw uptick over the weekend after a spate of raids in the area is what sort of prompted this latest flare-up. But that being said, what we're seeing right now, both from our reporting and local media, is that downtown LA, parts of South LA, Compton, Paramount, and now Santa Ana, which is in Orange County, are seeing some of these protests. So, we're in Century City, our office here at Bloomberg in the business district. That's you wouldn't know anything that is happening. It's miles away from some of these protests, Santa Monica, beach areas. So, it's kind of it shut down a highway over the weekend. Again, I don't want to downplay the severity in some respects, but much of the city, if you didn't turn on the news, would not know this was happening.
Wow. What's been the response from government officials in the state of California?
We saw quite the war of words between Newsom and Trump yesterday. We saw Trump suggesting, he wouldn't mind if Newsom was arrested. Of course, there's no grounds for that. But kind of back and forth. Newsom posted photos of some of the National Guard sleeping on the floor with their backpacks, saying, they're not being treated even properly. They're not getting food or a place to rest their heads. So, there's a little bit of theatrics going on with the war of words playing out over social media. But at the same time, there's some real issues at play. And I think, the escalation with the Marines yesterday is just another example of how, action is being followed up by some of these words. And Trump in the past has threatened federal funding to the state of California. So that's one of the big things that we're watching for. At what point will this escalate, potentially to more of a militarization, but also potentially funding cuts or other, other things.
Okay. Sarah, thank you so much for joining us. Appreciate your reporting from Los Angeles. Sarah McGregor, National Team Managing Editor for Bloomberg News, joining us from LA via Zoom. Red headline, crossing the terminal. The U.S. and China have concluded trade talks in London. That's according to Chinese media. We'll bring you continued reporting on that. Seems kind of a quick session or a quick couple of days, maybe.
I mean, they kept doing it, right?
Yep.
It doesn't seem like it ended necessarily poorly. We don't have any more reporting on that, but we will definitely keep you updated. So full 2 days of talks there between the U.S. and China delegations in London. Okay, coming up, we are going to have much more on the markets. Anurag Rana, Bloomberg Intelligence Senior Technology Analyst on Apple, plus Joy Yang of Market Vectors Indexes. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg News, and with us Bloomberg Business Flash. And we are being brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. And this is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. So we did get that headline from Chinese media, U.S. and China concluding those trade talks in London. No word on any sort of deal. So the major stock averages a little changed. Right now, the S&P 500 up 15. That's a rise of 0.25%. 6,021. The Dow Jones Industrial Average 30 points higher. NASDAQ 100 is 47 points higher. That's up about 0.2%. The bonds are a little changed after a 3-year note auction, the first in 3 offerings that will end in Thursday's sale of 30-year debt. Also waiting for inflation data tomorrow, the Consumer Price Index, and that is followed by the Producer Price Index. Some of the individual movers: Cisco Systems updating its networking and security products, trying to make artificial intelligent networks speedier and more secure, part of a broad push to capitalize on the AI spending boom. And Taiwan Semiconductor Manufacturing, the main chip maker for NVIDIA and Apple, reporting a 40% jump in May revenue. That was front-loading ahead of tariffs. The Taiwan Semiconductor shares in the U.S., they are 2% higher right now. With the rise of artificial intelligence and the popularity of online classes, this has led to an explosion of financial aid fraud, fake college enrollments.
Whoa.
Apparently, they've been surging. A crime ring has deployed what they call ghost students. So they take out loans and then steal the financial aid. And in some cases, this interesting story, the AP did it. In some cases, professors show up for class and there's no students in it, even though the class was pretty much sold out. They're all ghost students. Anyway, check the markets view all day long, right here on Bloomberg. I'm John Tucker.
John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well, and we're also doing the Smart TV. That's also the video stuff, and you can just go search Bloomberg Pursuits, and that's where you'll find us. I'm just going to talk, or we're going to talk about Apple here. And I'm just going to go to Mark Gurman's reporting here. Why not? That is the place to start. Apple unveiled the most sweeping software redesign in its history, aiming to make the company's device lineup more cohesive and useful, even while doing little to upgrade its struggling artificial intelligence platform. I'm looking at the stock. It's up 1% today, but it's down 18% year to date. So kind of underwhelming might be the term. Anurag Rana joins us. He's the professional. He's a senior technology analyst for Bloomberg Intelligence. Anurag, what's your takeaway from kind of what we saw at Apple's developer conference yesterday?
Yeah, and it's a lot of fun reading Mark's stuff, because Mark always publishes what's going to happen at the conference a few weeks ahead. So we have time to learn and figure it out. But, just like what he said, I mean, this was not a whole lot of things when it comes to AI. It's not going to force anybody to run out and upgrade their devices anytime soon. But, one of the things that really caught my attention is the iPad software, how close it's getting to MacBook. That's an area where I'm not a big iPad user, because I really want to use, multiple windows and the way things flow with each other. So I use the MacBook Air. But I can see myself transitioning over to iPad, that, if you want to watch the TV or anything, you use the iPad. Otherwise, when you have to work, you just, use that. So there were a lot of small things that make it shows that they are making incremental progress. But again, as you can imagine, everybody wants to talk AI and nothing else at this point.
So there are two schools of thought, right? One is like, look, they got 1 billion users, so at some point they'll come up with their AI, people will pay for it, and it'll be fine. The other is that they're going to be losing ground really quickly to other hardware suppliers that have different types of AI. Where do you stand on that?
I'm on the first camp. I don't think you can just move over from your computing device and go somewhere else. I don't even call it phone anymore. I mean, it is so much more than that for you. You're spending several hours a day on that particular phone. I think the AI strategy is pretty interesting for them, because they control the distribution. They don't want to unlock or they don't want to let go of your private data while trying to figure this out. And I think that's a bit of a handicap for them, but I'm sure smart people, they'll figure it out. I think they're going to outsource a lot for others to figure it out as well. So that's also happening. And the third thing that hasn't happened, but I'm fairly optimistic that over the next 12 months that they will add, Google's Gemini model also into their ecosystem, in addition to the OpenAI that's already there, because that will help them, gain more, you could say, expertise, features that they don't have, plus also show the regulators that they are not only just, married to one particular person for that feature.
Now, this is sacrilege, what I'm about to ask, Anurag, but I'm going to do it. Would they consider acqui-hire, buy their way into AI?
It's a very difficult thing to do because it's not so much that, everybody can use these. Everybody would be dying to put their model on the ecosystem. This is the most lucrative ecosystem for anybody that's out there. Over 2.5 billion devices and over 1 billion phones. So, from a distribution point of view, these are rich people who have these phones. They really are the ones who are doing transacting ecosystem. The problem over here is, when you look at somebody like a Google Gemini, it knows everything about you because, you feed it through search, Gmail. Apple keeps your data private. It's not seeing what you're doing on a daily basis. But if it's not seeing that, it's not able to give you customized stuff. It's not taking your data, sending it to ChatGPT and figuring it out. So it becomes a little bit tougher for them from a tech point of view, but I think over time they will get it.
I do have to say, talking to people, just humans, like outside of Bloomberg, for example, they use AI all the time.
Yep.
I mean, pitch books, emails, I was shocked at how much productivity is being talked about. Anurag, thanks a lot. Really appreciate it. Anurag Rana, Bloomberg Intelligence Senior Technology Analyst, joining us on Apple. Believer in those 1 billion users and what will happen with AI. All right, taking a look at the markets, talk about believing. I mean, it feels like a rally, I can say that, over the last few days. It's stealth, it's not aggressive, volume's a little mixed, but we keep grinding our way higher. Joy Yang is head of index product management at Market Vectors Indexes, and she joins us now in our interactive broker studio right here at Bloomberg. So what does this tell us? Is this a strong conviction rally? Is this a grind higher until we get bad news rally? How would you describe it?
I think we're all waiting for the headline bombs to drop, but I think investors should be cautious not to interpret a bounce with a bottom. And, taking a perspective year to date, developed markets, emerging markets are still up 15-20% compared to 2%. And we have to look at the bond markets and what they're telling us. The yield curve is steepening, so there's still concerns, even if there are tariff agreements around inflationary prices, around U.S. debt, around kind of this backing away from U.S. exceptionalism. So there's still a lot of cautious risks out there that we need to process, and we should have a broader perspective on a handshake versus enforceable agreements and the long-term implications of what's going on. So I think overall people probably are adjusting to this new normal, which is, we're going to have a lot of policy volatility as well as geopolitical risks. So investors are now stepping into, other alternative assets. And that's why we're seeing Bitcoin, pretty much increasing all-time highs. We're seeing gold kind of like stabilizing, but we're seeing alternative gold such as silver, platinum. They're reaching all-time highs at the moment.
So do I just buy 10-year treasuries? Do I just buy gold? That's my version of hiding out? Or do I go to quality stocks? I have air quotes.
Yeah, I diversify away from, high-tech growth stocks. Look at quality, look at value, look at gold, but look at, relative value to gold, which is the silver, the platinums. Look at where policy shifts will be more optimistic, which is around rare earth metals, around, those are the things that governments are focused on and trying to create better regulation or more stimulus package. Look at defense. And we're seeing regulatory clarity around crypto markets also. So that's opening up a new asset class. So really think about diversifying away from just your core holdings.
I take a look at the VIX, grinding its way lower, but then you look at, say, the VIX 6 months out, and you compare the two, and volatility is still expected to be quite high on a relative basis 6 months out. What does that tell you? How does that change an asset allocation?
I think people are really the VIX is reflecting people stepping away and just kind of waiting around. And we've seen kind of this breakdown in correlations between equities and bonds. And we're seeing this changing volatility pattern in crypto assets too. So Bitcoin has been stabilizing in volatility, coming down in volatility, whereas some of these stock, whether you look at NVIDIA or Palantir, those volatilities are going up. So I think investors have to adjust to this new normal and to think about holding different types of asset classes as well as diversifying away from kind of the traditional core equity bond.
What do you make of Bitcoin? What's your crypto kind of call your shop? How do you guys think about it?
I mean, crypto overall is, it's a very broad asset class. Bitcoin definitely is maturing with institutional focus, and we've also seen recently flows into Ethereum. So
all right, we just got a huge drop. Let's figure out what's going on.
This ecosystem, you're going to see a change of what people are focusing on, which is less of the speculative volatility and more of the use case, whether it's store value or operating core layer 1 systems. They are ultimately going to produce value and perform differently from equities and bonds that may be subject to more of the macro risks that we're seeing at play.
Speaking of,
52
quickly,
week.
Blackstone CEO Steve Schwarzman was talking about investing in Europe.
3.9.
Is the
Treasury
ex-US
bill.
trade kind of where you want to be?
It's still a good trade given the valuation.
Oh, actually, trade or investment, I guess, is a better question.
It's still, look at the relative valuation. U.S. is still very expensive. There's definitely, rest of the world is pushing towards less reliance on U.S. exceptionalism, providing more stimulus into their own national industries and military defense. So that's going to increase growth opportunities abroad. And as we become, I guess, more inner or protect our own industry, competition will broaden elsewhere.
All right, Joy, thank you so much for joining us. Always appreciate it. Joy Yang, head of index product management at Market Vector Index's Bloomberg Interactive Broker Studio. Was a good place to be. What are you looking at, Alex?
Well, I'm looking at what we're going to talk about next, which is offshore wind.
Yes.
So, yeah,
But
you
that's
got excited.
Yeah, but isn't that the one that's really under pressure?
Really under pressure. But if you need an all-of-above energy strategy, why wouldn't that include offshore wind, particularly projects that are already underway?
Right.
But Oliver Metcalf of Bloomberg BNEF will be joining us for his take on what happens to offshore wind in the Trump administration and where it's still going to be okay to invest. This is Bloomberg.
20-point drop.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. So far, no exact word of any progress in the trade talks between the U.S. and China that are taking place in London. Now, a U.S. official disputes an earlier China media report and says, in fact, the talks between the U.S. and China are still going on today. The worst performing stock in the S&P 500. Let's start there. J.M. Smucker, they declined the most in nearly 4 decades, saying U.S. tariffs are increasing costs in its coffee business, and that's going to hurt profit. Overall, the S&P 500, 6 points higher right now. That's up about 0.1%. We're at 6,012 on the index. The Dow Jones Industrial Average, 5 points higher right now. Yeah, the NASDAQ 100, that is down 9 points. Joe Quinlan at Bank of America, he was on the program earlier today. He says investors do need trade certainty.
This is a big step forward if the U.S. and China can cut a deal, kind of declare victory both sides and move ahead. But let's face it, there's a lot of differences when it comes to trade between the U.S. and China. That's going to linger. So the key here in London, dial it back, find an off-ramp, and begin again. So I think that's what the markets are looking for.
Citigroup set to put aside hundreds of millions of dollars more than it did last quarter. They're trying to account for potential losses on loans and credit cards. This is a sign of likely worsening consumer health. And Meta CEO Mark Zuckerberg personally recruiting a new team called the Super Intelligence Group. Their goal is to achieve Artificial General Intelligence, or AGI. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, JT, thank you so much. We appreciate that. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Now, John Tucker was aware of the story. I was not. A company developing an offshore wind project for New Jersey has filed a request to cancel its plans, citing economic and political headwinds. John, this wind thing was going to be off the coast of Atlantic City, powering the casinos and all the homes and stuff.
Well, I remember, it's a project that went way, way back in New Jersey history. Right. And all of a sudden, poof, it's gone.
Yeah, I think of all the renewable energies that are perhaps maybe under pressure by this administration, the one that might be at the most risk is offshore wind. Oliver Metcalf joins us. He is head of wind research at BNEF. He joins us here in our studio. Oliver, what's the state of your world? Talk to us about particularly offshore wind. What's the status of that in this country today?
Well, offshore wind projects in the US at the moment are facing a really, really difficult outlook. It's been tough over the last few years. There have been rising costs, supply chain bottlenecks that have hit the sector really hard. High interest rates for such an expensive technology is also something that raises costs a lot. There have been strong political headwinds since the Trump administration took office. So the Trump administration withdrew the permit for that Atlantic Shores project that you were just mentioning there. That was a project that had already faced those higher costs I was talking about, already facing a lot of economic difficulties. And the removal of that permit was the final straw that really pushed the developers over the edge. The project isn't completely cancelled, so Shell and EDF that own that lease area, that kind of marine area, are going to hold on to that lease. There's potential that they could develop that in a different form in the future if there's a more friendly administration to offshore wind. But yeah, a bit of a bleak outlook for the sector at the moment in the US.
What about projects that already are offshore, and are already producing? Could those lose their lease and get shut down?
It's not looking like that at the moment. So the Trump administration put a stop work order on a currently under construction project that would feed power into New York called Empire Wind. That's getting developed by the big Norwegian oil major right? called Equinor. That one.
Oh, Equinor. It's an Equinor one. Okay.
And Equinor had already invested over a couple of billions of dollars in that project. Thankfully for the sector, the stop work order has been lifted now. That's a good sign for the other projects. There are 5 under construction US offshore wind projects at the moment. So the fact that project was allowed to go ahead is a very, very good signal for other investors that are building projects like Ørsted, like you mentioned, that have projects in the pipeline. So those 5 projects we're expecting to go ahead. All the other ones kind of further out in the pipeline federal permitting of projects, federal leasing of new seabed areas to build projects. The kind of development environment has ground to a standstill for those projects that are a little bit further out into the pipeline in U.S. offshore wind.
What's the rest of the world doing with offshore wind these days?
Well, some of those effects that I was talking about that have hit the US have hit other markets around the world. So costs have risen globally. There have been supply chain constraints. There have been high interest rates. That's kind of a global story. But we're seeing a lot of growth despite that around the world for offshore wind. Particularly European countries in the North Sea are building mega projects. We're expecting the largest project in the world to start commissioning their turbines next year. A project called Dogger Bank off the coast of the UK. And then we're just beginning to see markets in Asia start to pick up. So we're beginning to see the globalization of the offshore wind industry. So that's markets like Taiwan, Japan, South Korea starting to install their first commercial scale projects. And over the next few years, we're expecting them to start installing kind of industrial sized projects that we're already seeing in the North Sea.
You mentioned this earlier, but a couple things that sort of went wrong for offshore wind before the political environment shifted was interest rates. And also supply chain issues. So a lot of, at least the way it was described to me by some of the players, is that they took on a lot of the commodity and supply chain risk, and they didn't properly share that with, say, customers and other developers, and that really hurt them during COVID. Have those two issues, though, sorted themselves out globally?
So there's a couple of different ways that those issues are slowly starting to resolve themselves.
Oh, okay.
So firstly, suppliers are pushing to share a bit more of that risk when they're signing contracts. So things like linking contract price, your final contract price that the customer pays, to a steel price index or a copper price index, for example, to partially protect you from these commodity price movements. Another way that governments are reacting to this kind of things is linking the price of the subsidy you get paid to similar indexes. So linking the price of subsidies to the consumer price index to protect a developer against kind of some of those inflationary impacts. Same goes for commodity prices. So there's a bit of a resolution on the policy side, and then also a bit of a push from supply chain contracts to protect themselves in some of the deals they're signing.
What's the profitability of land-based wind farms versus offshore?
It really depends in the market you're looking at. Typically, the kind of required returns for an investor on an onshore wind farm is lower than an offshore wind farm, where we're kind of more looking kind of 9 plus internal rates of return on a project. Partially that's because the perceived risks of building something onshore are lower than building something offshore. Every time you need to fix a turbine, kind of the whole construction process is just much more difficult when you're doing it on water versus when you're doing it just on land. And also onshore wind projects have been operating. We've been building them for a lot longer. And so just the perceived risks and how we understand those risks, it's much further along for onshore wind farms than offshore wind farms.
Does offshore wind in the U.S. still make sense?
In a lot of cases, I think the fundamentals are still really good. So especially states that are looking to decarbonize, or even states that are trying to meet rapidly growing power demand. Power demand is growing in a way that it hasn't done for decades in the US at the moment. An offshore wind farm can deliver you gigawatts of capacity. That's kind of huge amount of capacity in one project. So if you can get these things up and running, and if kind of governments are willing to pay the costs for the electricity, the higher costs, then it can deliver a massive amount of electricity generating capacity at a time when the country really needs it.
How long does it take, though, to build, say, offshore?
A long time. They're big, complex infrastructure projects. So from the time that you sign that seabed lease agreement, you get your seabed area, you can build a project, to commissioning. We estimate that's around 9 years in the US. So it takes a long time to build one of these things.
I don't know. I guess I'm still in the camp. All of the above. We need all of the above, I guess. But I would think it's got to be economical. I mean,
well, yeah, but yes.
I mean, how much subsidies? I don't know. It's complex policy. So I'll leave it to the experts. I'll leave it to the experts down in Washington.
It is a complex policy.
Oliver Metcalf, thank you so much. We appreciate it. We'll have a lot more to talk to you about on this as this business continues to evolve. Oliver Metcalf, head of wind research for BNEF, joining us live here in a Bloomberg Interactive Broker Studio. S&P 500 up 12 points. The Dow's up 7 points. The Nasdaq's up 35 points. This is Bloomberg. Good morning.
You're listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We're broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. Well, June is Pride Month. So over the next couple of weeks, we're going to highlight segments on topics related to equality. And today we're speaking with Chi-Ling Tong, CEO of National ACE, which stands for the National Asian Pacific Islander American Chamber of Commerce and Entrepreneurship. She joins us now from Washington, D.C. It's a pleasure to spend this time with you. Thank you so much for joining us. What has been the tariff effect on Asian small businesses so far? We heard from the NFIB that optimism increased, but the taxes are still a main concern.
Well, Paul, Alex, thank you so much for you care about the Asian American business community issue. We know the trade landscape can be very tricky, and we acknowledge the administration's efforts to negotiate on new trade agreements to deal with unfair trade practice and set a path to open market access for American export. However, with uncertainties around the trade deals, business of all sides feel the pressure. Recently, at the National ACE Capitol Hill Day, we took about 60 small business owners to meet with 40 congressional offices. They all talk about how tariffs are affecting their business. They are very worried about uncertainty, rising costs, and cancellation. It is very important for them to share their experience with policymakers to ensure trade policy support their needs. I would like to share with you two stories from small business owner from both importing and exporting. Mr. Tai's chili oil was popular after TikTok video had over 125,000 views. And new tariffs had made their key ingredients, chili flakes from China, about 56% more expensive. And the glass shaker bottles, once 34 cents each, now cost nearly about 4 times as much. And the owner, Lucky Wing, said they picked a very specific bottle style from China and invested in it early on. Now, with these price jumps, they cannot afford to use them anymore. Another story from exporter. Yes, go ahead. Yes.
Well, just what was the response from some of the lawmakers when you went down to speak with them? Were they sympathetic to some of these small business owner concerns?
Oh, yes, absolutely. I think we talk with both Republican and Democrat member of Congress, and that's what they say, share the story. Share the story with the administration, share the story with member of Congress, and have the stakeholder. We have about 130 affiliate chambers partners throughout the country. So they also encourage them to share the story, let people know the reality.
What are the barriers to federal support and to access to capital from Asian small business owners?
Well, for access to capital part, I think this is very, very important. For the past few years since COVID, we always deal with access to capital. We had a survey. We had 2024 Restaurant Fund. For the past, since 2021, we have given about a $10 million grant. So for those applicants, 47% of applicants share that their main source of capital for their business come from personal funds, and only 21% indicate loans and credit from traditional financial institutions. So therefore, when we talk to the federal agency and also the administration, we really want them to develop more small business program and accessible funding and grant program for small business owner. For example, like a Minority Business Development Agency, they used to have a capital readiness program and able to share and the technical assistance to support small business to get the funding. But now they are kind of, eliminating that, but hopefully they will get back soon.
So what have you heard, Jillian, from your small business owners about the labor market here with the illegal migration has effectively come to a halt at the southern border? Are they seeing that in their businesses, the more difficult to hire people?
Well, I think since COVID, they had difficulty to hire people, especially restaurant owners. They are always short of workers. But we just feel Chinatown, like Chinatown small business owner, they always have a way to demonstrate incredible resilience. And even for, you're right, the labor shortage and also other things are really a big concern.
Jillian, thank you so much for joining us. Really appreciate getting a few minutes of your time. Jillian Tong, CEO of the National ACE, which is a national association, or National Asian Pacific Islander American Chamber of Commerce and Entrepreneurship. So the tariffs having impact on all businesses. We hear that on the conference calls of all the corporations that we talk to all the time, but perhaps even more pronounced for the small business owner who may not have obviously the financial resources or the flexibility in their business model to withstand higher taxes, or higher tariffs on some of their input.
I mean, even J.M. Smuckers, which is clearly not a small business, is having a hard time with those increasing costs. Also, increasing costs in its coffee business, which is going to hurt profit by about $1 a share. So there is that as well. All right, for our listeners in the U.S., here's a reminder: you can listen to us via satellite radio on SiriusXM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM channel 121 is presented by ShipStation. Stay with us. Your top stories and global business headlines are coming up right now as you take a look at a market not going anywhere crazily fast. We're looking for signs of any sort of real thaw between the U.S. and China. That is helping to support stocks around these levels. Treasuries, though, wavering ahead of that $58 billion three-year auction later on at 1 p.m. Good luck trading, everyone. This is Bloomberg Intelligence. Happy Tuesday.
is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. President Trump says without the National Guard and 700 Marines he's deploying to Los Angeles, the city would be, quote, burning to the ground. California's Governor Gavin Newsom has called it a blatant abuse of power. The Pentagon pegs the cost of that deployment of Marines and Guard troops at $134 million. After 4 days of protests, CBS's Elise Preston says it's a calm morning in L.A.
It is a very much different scene. Not a lot of police presence out here. Traffic is flowing. These streets have opened back up. In front of the federal building, you will find some National Guardsmen standing at the ready. I just took a gander over there. They do have batons in hand.
And on Capitol Hill,
Democratic Minnesota Representative Betty McCollum compared the immigration protest in L.A. to those held in Minneapolis after the police killing of George Floyd.
This looks nothing like the George Floyd protests or the Rodney King riots in Los Angeles.
Defense Secretary Pete Hegseth says the National Guard there was called in far too late.
The police precinct, ma'am, was abandoned and burned to the ground.
Hegseth says the nation ought to be able to enforce immigration law. Allison Keyes, CBS News, Washington.
There's a new call for tariff relief as we hear from CBS's Jim Krasula.
U.S. companies that do business in Vietnam have called on the Trump administration to lower tariffs on Vietnamese exports to the U.S. The Southeast Asian manufacturing hub that includes Vietnam has the third biggest trade surplus with the U.S. after China and Mexico.
Overseas, Ukrainian officials say 3 people were killed, 13 wounded when Russia unleashed large-scale missile and drone attacks today. In Austria, 9 people were shot and killed at a school in the city of Graz. CBS's Holly Williams.
Austria's interior minister says that the suspect in the attack was a former student at the secondary school where the shooting took place, but did not graduate. The Austrian police say the suspect was a 21-year-old Austrian man who they believe acted alone. They say he used 2 guns during the attack and later killed himself at the scene.
Disney will pay Comcast's NBC Universal more than $400 million for its stake in Hulu, taking full control of the streaming service. At the BET Awards last night, Jamie Foxx accepted an Ultimate Icon Award 2 years after suffering a stroke and subsequent coma.
When I saw that memoriam, I was like, man, it could have been me. I don't know why I went through what I went through, but I know my second chance I'm not going to turn down.
And on Wall Street right now, stocks are higher. The Dow is up 35 points. This is CBS News. A break-in at the home of a rap star.
The people they won't leave.
Police in Seattle say 2 men broke into Macklemore's house in the Capitol Hill neighborhood and stole thousands of dollars worth of jewelry, watches, and shoes. The nanny says she managed to escape after they restrained her and sprayed her in the face with bear mace. Doorbell video shows her knocking on a neighbor's door to call 911. It's not clear if the rapper was home at the time, but police say 3 children were. They are all okay. Deborah Rodriguez, CBS News.
Taylor Swift has gotten a temporary restraining order against a 45-year-old Colorado man who's been accused of stalking her. Swift says he's made visits to her home and has threatened members of her staff. The author Frederick Forsyth has died at 86. He penned The Day of the Jackal and other top thrillers. I'm Steve Kathan, CBS News.
This is Balance of Power, live from Washington, D.C.
Now come the hard decisions. Welcome to the Tuesday edition of Balance of Power as Senate Republicans grab the hot potato that is President Trump's tax and spending bill, at the risk, of course, of turning off Republicans in the House. We're going to hear about the whole balancing act here and some very important stops in the road today when we spend time coming up with Nathan Dean at Bloomberg Intelligence. We're also going to run through the latest polling on the president's big, beautiful bill, as well as the way he's handling immigration and crime on the heels of what happened in Los Angeles and is continuing as we speak. Cliff Young at Ipsos will join us with new numbers on his research, and we'll have analysis from our political panel. They're back together for the first time in over a week. Rick Davis and Jeannie Sheehan Zaino here for the hour, and it's all after a look at Wall Street. We check on the Tuesday trade first with our good friend Charlie Pellet. He's holding forth at World Headquarters in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Me and you together. Stocks higher with the Dow, the S&P, NASDAQ, all advancing right now. One eye on London, the other on Los Angeles. Right now, we've got stocks advancing. Session high, by the way, on the S&P 500 index. A lot of green today. The S&P at 6,026, up 20. Gain there of 0.3%. Stocks creeping near records. Right now, the Dow up 43, gain there of 0.1%. NASDAQ higher by 67. That is a gain right now of 0.3%. The Bloomberg Mag 7 index pushing higher, up 0.7%. The 10-year 4.46%. The 2-year 4.00%. Gold now flat on the day at $33.26 the ounce. West Texas Intermediate crude up 0.7%. 65.75 for a barrel of WTI. And Bitcoin now back above $109,000. Bitcoin right now up by 0.3%. Well, certainly one of the big questions surrounding the Federal Reserve is who will President Trump name as Jay Powell's successor? Matt Losetti is chief U.S. economist at Deutsche Bank Securities, and he talked about that this morning on Surveillance.
You know, certainly over the summer months, as perhaps you get some evidence of who President Trump may appoint to the board, I would expect that in replacement of Governor Kugler in January, that could be the next potential Fed chair. Certainly the market focus will shift to that.
Matt Losetti of Deutsche Bank Securities. You can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Boeing shares, they are lower by 0.7%. Boeing did score the highest monthly order intake in more than a year, including a huge haul during President Trump's trip to the Middle East, giving the American plane maker a commercial boost as it heads into the crucial Paris Air Show next week. Boeing down 0.7%. Rival Airbus, its ADRs down 0.8%. Balance of Power continues now, and back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie. Good to see Charlie Pellet, as always, and he'll be back shortly with another check on Wall Street. We do this, of course, throughout the program here on Balance of Power. Bloomberg Radio, satellite radio, channel 121. Maybe you're watching us on YouTube right now. If not, this is the coolest thing we have going. Search Bloomberg Business News Live. It's not just this show. It's all the way surveillance through the day, Bloomberg Business Week Daily. And we are always live for you in the studio with our great guests here in Washington as we try to get our arms around reconciliation, kind of like the Senate's trying to do as we speak. Some important things are going to take place today, all procedural. But if you want to sound smart at the cocktail party, we're about to get you ready. On this Tuesday edition, right? It's Tuesday, which means we have about 3.5 weeks until the fake deadline of the 4th of July that even the president doesn't seem to care about. Yesterday at this Invest event, he's sitting next to Speaker Johnson. 4th of July. He said, yeah, or it might take a little longer. Is something going on over there, James? They're gathering the pool. It's noontime. This happens every day. We can just talk amongst ourselves. I get up in the morning. I do my reading. I talk to the people I trust. Try to figure out what's going on in the world. We start mapping out the show. Then I connect with producer James, Booker Matt, co-anchor Kaylee. We come up with a plan, different people to call. You book some things. You map out a show. This is what we're going to have for our viewers and listeners. And then at high noon, they assemble the press pool. Donald Trump starts talking, and it all goes off the rails. Maybe we'll do this again together. At least we enjoy each other, right? This is the new world we're in. And a big part of this new world is the effort that's unfolding right now on Capitol Hill. Yeah, Cece's part of this mix, too. It's a big family behind this show. The Rules Committee is going to get down to brass tacks today in the House at 2 o'clock. That's right around the time we get off the air, 2 hours from now. In the meantime, they're expecting a report from the parliamentarian in the Senate. Right? This is the referee who says you can do this in reconciliation. You're not allowed to do that. Budget matters, yes. Everything else, no. This is the bird bath, the bird rule we talk about. And so by the end of this day, I suspect we're going to have a much better idea of what's going to end up in the Senate version of this bill. And that's why we have Nathan Dean with us, senior U.S. policy analyst at Bloomberg Intelligence. His phone is ringing because we're actually getting onto something here. Nathan, it's great to see you. What's the parliamentarian going to tell us today?
So I think the parliamentarian is going to allow most of what the investable angle or the investment community cares about. Obviously, these tax cuts, the extensions, the cuts to Medicaid, Inflation Reduction Act, SNAP benefits. You know, we think it's going to be more structural things. Things like where they're trying to get rid of the Office of Financial Research, or maybe changing the funding mechanism of the Consumer Financial Protection Bureau. Things that are very important for us here in Washington, but for the New York community that's investing in this, we'd say it's probably most likely going to be out. Because the general rule of thumb is that if it impacts the budget, then it's allowed. But, you know, every single party, any single time they do a reconciliation package, they throw in the kitchen sink and they say, let's try and do this. So the Senate parliamentarian is going to come out later today. She's going to say, no, you can't do that. I don't think there's going to be a lot of fireworks here. And obviously the Senate does have the ability to just fire the parliamentarian or ignore the parliamentarian.
Yeah, right.
But, you know, I don't think that's going to happen in this case because I don't think they're going to get any major controversies.
I'm waiting to hear when Donald Trump tells John Thune what happens with you. Ignore the parliamentarian, but we'll deal with that when it happens. That could be an interesting standoff. No tax on tips, no tax on overtime. This gets through the bird bath. It's more lawmakers who are concerned about those?
Yeah, I think it does. I mean, I think it's one of those things where, you know, it's not going to be so much of a parliamentarian decision. It's going to be a deficit question. And that's where we're going at with all this. And in fact, we put a note out just this morning to our clients. And it always is going to come down to the deficit because, you know, and I should have said earlier, the biggest question we're waiting for is whether or not the parliamentarian is going to allow the Senate to use current baseline policy as zero, meaning to extend the Trump-era tax cuts, the cost is effectively zero. If the parliamentarian approves that, which I think she will, if the parliamentarian approves it, then, you know, you don't really have to cut all that much to actually keep this package going forward. And that's why we always think that the deficit is the most likely impacted entity here from this package. Looking at Medicaid, the Inflation Reduction Act, SNAP benefits, it's much easier for the Senate to say, you know what, let's not cut those to the extent that the House proposed. Let's pull that back a little bit. We'll borrow today and we'll vote for something that will actually be tomorrow's pain as opposed to voting for something that's going to hurt our constituents in the next year or so.
Understood. So let's lay out the concerns. You could really count them on one hand, right? What actually is going to be a concern for senators, and then when it comes back to the House, could be deal breakers. You change the cap on salt. You could lose a couple of lawmakers. The revenge tax is something we keep hearing about. Banks are calling you about it. Nathan, what is it?
Yeah, so this is Section 899. This is something that it hasn't gotten a ton of press. I mean, Bloomberg News has done some extensive reporting on this, but it's called the revenge tax. It essentially allows the Treasury Department to deem a foreign country a unfair foreign country or a discriminatory tax environment, and then allows the Treasury Department to put essentially a 5% tariff on, 5% tax levy on essentially all passive income, real estate, you know, income from foreign countries and so forth. So if you think of you're a U.S. entity or a foreign bank here in the United States and your income's going back to HQ, well, now all of a sudden you have an additional tax on that. It's 5%. It goes up annually up till about 20%, unless that's essentially deemed, you know, that country gets off. It's designed as a way to combat what they consider discriminatory digital taxes, mostly in the tech space. My colleague Andrew Silverman and I looked at it. It's going to most likely impact banks and the tech companies in particular, because if overseas firms decide they're not going to play in the United States anymore, then that's actually somewhat bad. So the main question we've been getting is the Senate going to pull this out? Senator Thune said that he's been looking at it. We think it's either going to be pulled out or it's going to be watered significantly. So we'll see.
Very important. Who does that offend if they take it out? Is there a constituency behind this in the House that Thune needs to worry about?
Well, I don't think that there's a constituency as to the point where you're going to see a coalition come together and try and fight
like
this.
A SALT caucus.
Exactly. I don't think you're going to see a SALT caucus. I actually don't think it was all that controversial when the House lawmakers put it in there, because in their eyes, it just gives the Treasury Department flexibility. It doesn't say that this has to happen. It just says that this is another another tool. I almost said weapon. Another tool that would allow the Treasury Department and the White House to actually use when conducting its negotiations.
Okay.
I don't think it was all that controversial when it was put in. I think it was one of those unintended consequences that was coming, especially from the non-U.S. foreign community.
It would be kind of cool if there was a revenge caucus. If there was something called that. All right, then we've got green incentives, tax credits. Tom Tillis is calling. If some of these are put back in, who do you lose in the House?
So I think this is one of those where, if you look at the original bill that came up from the House Ways and Means Committee, the electric vehicle tax credit was gone.
Yep.
I think that's still gone, despite Elon Musk's, discussions about it. I think if you're Tesla or any other car companies relying on it, and our view is that Tesla isn't so much relying on it, but I think that's gone. The bigger question is when it comes to wind and solar. And a lot of these tax credits, there was a phase out, and that phase out was pushed up.
Yes,
We think the phase out will get pushed back. Maybe not to the original House and Ways Means text, where the solar, for example, was 2028 from 2031. But, it will get pushed back a little bit just because the Inflation Reduction Act is very important to states like North Carolina because there's a lot of foreign CapEx money coming into the United States. And there's a lot of constituents out there, or lawmakers, who are saying, look, I got 700 jobs being built in this district.
Wow.
I got a plant being built in this district.
Right.
So we think it's going to get pushed back. So keep in mind for stocks like First Solar and Enphase, these things have hot sauce. They're almost like what we call the marijuana hot sauce stocks.
Right.
These things have been bouncing up and down based off of what's in this language. So definitely watch this later this week because those stocks have hot sauce on them.
Not always based on fundies, as they say. We've got a minute left here. Nathan, you running odds? 4th of July, August?
We think the Senate can get it done around the 4th of July. I like to joke it's going to come a little bit later because I'll be on vacation. But I think we're saying 80% chance by the August recess. We're actually feeling fairly confident they get this done in late July.
You kick out a great note to clients every week with a little inside something about what's going on in Washington. I always love these. What are you telling people to do if they want to watch this parade? Is there any way to get in and out of town? Is there like a Nathan Dean angle on this massive parade, the Army parade on
Just like
Saturday?
with the NFL, it's great for my couch.
That's a good answer. Buy a blimp, right? We're not even going to be able to get to work in a couple days. You see this? The street closures?
Driving in this morning was
Forget it.
difficult.
It has begun.
Yeah.
Sounds like it might be quite a show, though. Nathan, great. Nathan Dean, Bloomberg Intelligence, our senior U.S. policy analyst. How's that for a deep dive? What goes in? What stays out? We're going to talk about this, by the way, with Jason Smith, chairman of the House Ways and Means Committee, about an hour from right now. This is the world he's living in as they wait for this bill, big, beautiful or not, to come on back for a very important vote. We'll be sticking with Nathan for more on this. Cliff Young from Ipsos is up next on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Best level of the day right now on the S&P. We're up 19. S&P at 6,024, up by about 0.3%. Traders keeping an eye on U.S.-China trade talks. The Dow up 43, up 0.1%. NASDAQ up 0.3. The 10-year 4.46%. Gold down 0.1%. 33.23 the ounce. And West Texas Intermediate crude up 0.8%. Citigroup set to put aside hundreds of million dollars more than it did last quarter to account for potential losses on loans and credit cards. And India and the U.S. will expedite trade talks to conclude an agreement that includes, quote, early wins for both sides as the two nations race to clinch a trade deal before Washington's tit-for-tat tariffs kick in next month. Balance of Power continues right now. In fact, we go to Washington. Once again, your host, Joe Matthew.
Oh, here we go. All right, Charlie. Thank you, sir. Charlie Pellet watching Wall Street for us here on Balance of Power. Live from Washington, where we've got our eyes on the Oval Office, President Trump is holding forth right now, having received a briefing on hurricane season, hurricane preparedness, and wildfires. It's something that they're talking about right now, but of course, this could resolve well into anything. And if the Q&A turns itself to reconciliation, to the matters of immigration and crime, what we've seen in L.A. and so forth, we'll bring you into the Oval to hear live what the president is talking about here. In the meantime, as I mentioned, data-driven journalism, we try so hard to cover this in a certain way at Bloomberg that makes us unique. And we try to base this on research and fact, including some of the best pollsters in the business. The friction of Trump's immigration policy. We talk theory versus practice, coming up with the great Cliff Young from Ipsos. We're going to put some polling data around all of the stories that we're talking about here, whether it is the big, beautiful bill or what is in fact unfolding right now in Los Angeles. And I'm glad to say that Tyler Kendall is with us right now. Bloomberg Washington correspondent with us at the desk. Nice to spend a little bit of time here because you've been at the White House just about every day over the course of this period of time, talking about what's happening on both ends of Pennsylvania Avenue. We're going to get to reconciliation. We're going to talk a lot about it today, actually, with what's coming out of the Rules Committee in the House. But this situation in L.A. has really turned the Communications Office and the Oval Office into quite a spin cycle.
Oh, definitely, Joe. And we saw a pretty big escalation today as 700 active duty Marines arrived on the ground in Los Angeles. I was in the room yesterday where reporters were pushing President Trump about what ultimately was this escalation in the federal response. And he told us that he felt that the officials in LA were overwhelmed. And he suggested that the administration is prepared to actually take further action, even further than this.
Well, he, of course, layered on another 2,000 National Guard troops after that. You were in the Oval Office yesterday. You had a couple of questions with him. What was his demeanor?
Well, he was dealing with a bunch of different questions. He was surrounded by CEOs. He was talking about a provision. This is the Invest event. Exactly, a provision in the reconciliation package that would give seed accounts to some American children. It hasn't been passed yet, but these CEOs have pledged some pretty big investments. My question to him, though, was actually about China, if we can go there. I had asked him for an update on the talks that are happening in London as we try to glean some sort of details about what's happening, and he told me that China isn't easy to negotiate with. And when I pressed him on if he gave any of those officials in the room limitations when it comes to the export controls, that's really at the heart of these talks. He didn't rule anything out, but we're still waiting to see if there's any sort of forward momentum.
They're in there right now, still in London, right? This is the other bucket we're painting out of today. U.S.-China trade talks into another day. Bessent, Lutnick, Greer, all behind closed doors in London right now. And if there's a break on that, we'll, of course, bring it to you. And that would be a market mover, right? If we hear a headline on this, we'll stop down and maybe the president will speak to it. Want to get to Cliff Young, public affairs president for the U.S. at Ipsos Polling. Cliff, it's great to have you. We've talked so much about flooding the zone, about the cadence, about people's ability to metabolize all of this information. Broadly speaking, approvals, where are we in the second 100 days?
Yeah, we thought we were in a lull. And ultimately, we find that we're not. And what I would say is, overall, Americans still feel a degree of trepidation, unease, especially as it comes to tariffs and potential inflation. That definitely is a worry. That said, Trump is in a pretty good place when it comes to approval ratings. He stepped off the gas over the last month. His approval numbers have improved 2 to 3 points. So right this second, at this moment, yes, there's some unease on the one hand, but the administration, from a numeric political perspective, is in a good place.
Mm-hmm. When you take a look at this by issue, immigration 47%, jobs 40%, economy 39%. That top number, immigration, points us right to what's unfolding now in LA.
Yeah, it's immigration, immigration, immigration. That is Trump's number one issue. It's his strongest issue. It has been historically. It's his bailiwick. The base, that is the Republican base, thinks it's the most important issue, and they believe he's doing a very good job. And indeed, if you think of a pivot from tariffs and potential inflation to something, it makes sense that there's this focus right this second on immigration.
Well, Cliff, and your data also finds, though, that the way that the deportation policies that we're talking about that really spurred these protests in LA are being implemented, that seems to be unpopular as the administration tries to ramp up to a goal of 3,000 detentions per day. Walk us through here. Where do Americans disagree when it comes to actually executing these policies?
Yeah, I would say overall, immigration and immigration-related issues are the most important predictor of politics in America today. They determine whether you're a Republican or a Democrat, and so they're divisive. There is no consensus there. That said, there's nuance, because most Americans would agree that illegal immigrants who commit crimes should be deported, but not kids. And that's what we're seeing today specifically, this lack of consensus, this lack of unity around what should be done. And ultimately, it's not about theory, it's about how it's being, that is, the policy is being implemented in practice. That's where we have tension.
All right. Spending time with Cliff Young from Ipsos, and we want to bring you, as promised, to the Oval Office. President Trump is now addressing the protests and the clashes with authorities, the deployment of troops in Los Angeles. This is live from the Oval on Bloomberg.
Handing these big chunks of concrete to people, and they were taking that concrete, going up on bridges and dropping it into the roof of a car. They were throwing it at our police. They were throwing it at our soldiers that are there. And we got it stopped, and we have them in custody right now. Look, if we didn't get involved, right now, Los Angeles would be burning, just like it was burning a number of months ago with all the houses that were lost. Los Angeles right now would be on fire, and we have it in great shape. We're not playing around.
How will you determine whether or not there is an insurrection?
Well, you'll take a look at what's happening. I mean, I could tell you there were certain areas of Los Angeles that you could have called it an insurrection. It was terrible. But these are paid insurrectionists. These are paid troublemakers. They get money. And when you take a look at what they do, where they show up and everyone's saying, what's he doing? He's pounding the curbs. This one guy's pounding the curb, breaking the curb, and handing big pieces of granite. In some cases, it's granite and concrete to other people. And they're running out with it. And then we watch the other people, and they try and throw it into the face of the soldiers, throw it into the face of the police, and they hurt some people very badly. They go up on bridges, they drop it down on the cars as the cars are moving. They're not breaking the curb because they're doing a demolition service. They're breaking it to hand out to people as a weapon. It's bad stuff. I've never seen that before.
Mr. President, how soon do you want to see FEMA eliminated? And what's your message to the governors about how much more of an expense is going to fall to states?
Yeah, well, it's not going to be so much to states. We're going to give out less money. We're going to give it out directly. It'll be from the president's office. We'll have somebody here. Could be Homeland Security, but we're going to give it out through a method where it's given out. As an example, I just gave out $71 million to a certain state. They were looking to do about 120. They were very happy with the 71 million. We did a little cutting, and they were very happy with it. So we're going to do it much differently. We think after this, Christy, I'd say after the hurricane season, we'll start phasing it out.
Yes, sir. You set up a FEMA council over the next couple of months. We'll be working on reforms and what FEMA will look like in the future as a different agency, as under the Department of Homeland Security to the president's vision. And it will empower governors to go out and respond to emergency situations. And that what the president does best is to make sure that the taxpayers are only fulfilling the need to which is appropriate, and that people are responsible to respond to their own people closest to home. So
if a certain state, as an example, gets hit by a hurricane or tornado, that's what a governor, governor should be able to handle it. And frankly, if they can handle it, the aftermath, then maybe they shouldn't be governor.
And Mr. President, when is the last time you spoke with Governor Newsom?
A day ago. Called him up to tell him, got to do a better job. He's doing a bad job, causing a lot of death and a lot of potential death. If we didn't send out the National Guard, and last time we gave him a little additional help, you would have, Los Angeles would be burning right now. Los Angeles would be not a lot different than what you saw take place in California and Los Angeles just a little while ago. And, you know, you got to remember, we have the Olympics coming. And we don't want people looking at Los Angeles like it was, like it would have been. It would have been bad. Last night, they had total control. If we didn't have the military in there, the National Guard, and then we also sent in some Marines, we had some bad people. We have people, they look in your face and they spit right in your face. They're animals. And these are paid insurrectionists. These are paid troublemakers. They're agitators. They're paid. Do you think somebody walks up to a curb and starts hammering pieces out, has all the equipment necessary, and starts handing it out to people to use as a weapon? These are paid insurrectionists or agitators or troublemakers. You can call it whatever you want. And we ended it, and we have in custody some very bad people, some very bad people.
Mr. President.
Did you see the guy throwing the rocks at the police cars as they went by and crushing their windows and endangering our police? We're not going to let that happen, yeah.
Pardon me, Mr. President, on those Marines, Governor Newsom has described them as political pawns. I'm curious for your reaction to that and what you see as the Marines' role and what are their rules of engagement?
All I want is safety. I just want a safe area. We have, Los Angeles was under siege until we got there. The police were unable to handle it. You can speak to the chief. He said it on television 3 nights ago. He said, this is more than we can handle. They said that. And the LA police, I know a lot of the police in LA, they're great people, but they're given instructions not to do this, not to do that. But in this case, they were trying their best. They were not able to handle it. It was out of control. When we got there, and you have to remember, I've been here before, and I went right by every rule, and I waited for governors to say, send in the National Guard. They wouldn't do it. They wouldn't do it, and they just wouldn't do it. It kept going on and on, got worse and worse. And in Minneapolis, that city was burning down 7 days, and I said, I don't care. The governor, who's a governor that just happened to be running for vice president, a total, you talk about an incompetent governor, he's an incompetent person. That he was picked, well, I was actually very happy he was picked for other reasons. But this guy wouldn't call the National Guard. And we ultimately just sent in the National Guard. We stopped it. But that was after 7 days. And I said to myself, if that stuff happens again, we've got to make faster decisions because they don't want to do it. The radical left, it's usually radical left, and it's usually governors that are Democrat, and they don't want to call them in. They don't want to save lives. They don't want to save property. They don't want to call them in. I don't know what it is. We sent them in, not early, we sent them in late as far as I'm concerned. But big problems, as you know, 3 nights ago, big problems were ensuing. If we didn't send in the National Guard quickly, right now, Los Angeles would be burning to the ground.
The Marines is, a lot of people think, an escalatory step, though. These are guys who fight wars. Are you at all concerned that things could get out of hand with Marines
when I see people
American City?
Throwing concrete into cars, when I see people, the kind of people that I saw on your network doing danger to the police and to the military and to the National Guard, no, it's okay. You know, you start running out of people. When you have 2,000 people from a National Guard standpoint, we have a very big military. But the National Guard, they needed a little extra help. And we sent them a little, and we did a great job last night. We had, well, you got a lot of cars go up in smoke and flame, and a lot of bad scenes, but it was pretty minor by comparison. This morning it's very calm. We'll see what happens later. But they know if they go there, they're not going to get anywhere because we have the National Guard there. We backed it up with a number of Marines, yeah.
Mr. President, do you agree with Governor Abbott soon signing legislation to mandate the 10 Commandments in school classrooms?
Having to do with what?
Governor Abbott is soon going to sign legislation to mandate displays of the 10 Commandments in school classrooms. Do you support him?
I have to take a look at it. I'm going to have to look at it.
Will the National Guard be in California indefinitely? How long will they be there until you think?
Until there's no danger. It's easy. Look, it's common sense. You ask me that question. When there's no danger, they'll leave. You would have had a horrible situation had I not sent them in. Horrible. You'd be reporting on a lot of death and a lot of destruction that's not going to take place. I think if you look, every night it got less and less. They were met with very strong force, the bad people, the bad, sick people that do what they do. But these are paid people in many cases, not in all cases, but in many cases. And they really are, they're agitators.
I was wondering if you had any response to Mexican President Sheinbaum, who condemned the violence there. Have you been in touch with her at all?
Said what?
I was wondering if you had any response to what Mexican President Claudine Sheinbaum said in response.
What'd she say?
She condemned the violence in LA.
Oh, I do too.
Yeah. Have you been in touch with her at all?
Well, you think I don't condemn it? I condemn the violence in LA, ladies and gentlemen, but I also stopped the violence in LA. And by doing what I did, I stopped the violence in LA. And that would have been, I think, maybe I'd ask Christy to speak to that. That would have been an unbelievable tragedy. We would be talking, I don't know that would even be here right now. It would have been so bad. I'd probably maybe be out there. I don't know, but Christy, could you speak to that?
Absolutely. So in 2020, I was a governor of a neighboring state to Tim Walz and watched him let his city burn. And the president and I have talked about this in the past, and he was not going to let that happen to another city and to another community where a bad governor made a bad decision. So Claudia Sheinbaum came out and encouraged more protests in LA, and I condemn her for that. She should not be encouraging violent protests that are going on. If people are allowed to peacefully protest, but the violence that we're seeing is not acceptable, and it's not going to happen in America. This president is standing up for the average American who wants to walk their child to school every day safely, run their small business, and provide for their families. That's the action that he's taking. He has every authority under the Constitution to send these National Guard under Title X into these communities and make sure that operations go smoothly, that law enforcement officers are protected, that they can continue to do their work without fear of being injured or killed or disrespected, and that they can go home to their families at night. So I'm incredibly proud of the president for activating the National Guard and for sending in these Marines, because these Marines are specifically trained to meet the need that we have on the ground in LA right now. And Governor Newsom has done a disservice to the state of California for many years. The people there should never elect him into a leadership position ever again. He clearly
the governor's a nice guy, but he's grossly incompetent. When it comes to his railroad that he's building, where it's like 30 times over budget, nobody's ever seen anything like it. Now it doesn't even go to San Francisco and LA. It's way short of it. After years of work and overruns like nobody's, those contractors are some of the wealthiest people in the world, I guarantee you that, because that money goes to those contractors. They just did a number on the wallet of the people of California. That train, you should look at that train. That is the greatest. I've never seen cost overruns. I've seen cost overruns and great incompetence over my life. I've never seen anything like that.
Mr. President, these protests obviously started in reaction to these large-scale ICE operations in Los Angeles. Should people expect to see similar operations in the rest of the country?
Yeah.
And will similar protests see similar response?
As you know, we're moving murderers out of our country that were put here by Biden or the auto pen. The auto pen really did. I mean, the people, whether it's Lisa Monaco or whoever operated the auto pen, these are criminals. The people are criminals that allowed these criminals into our country. And I don't think that Biden knew what the hell he was doing. I don't think he even knew about it. But when they opened up our borders for the whole world to come in, yeah, we're going to get them out. We're getting them out. We're starting to get acknowledgement from the courts that, you know, there's a system. They come in without courts and they go out, they want trials and everything else. I think that's starting to work out now. Judges are starting to see what a terrible situation it is. Many of those people that you saw on television last night are criminals that were allowed into our country by Biden. And they want to stay, and we don't want them. And they come from jails, and they come from mental institutions, and they come from all over the world, not just South America. And we're not going to let them stay. And this is the first, perhaps, of many, or perhaps, you know, if we didn't attack this one very strongly, you'd have them all over the country. But I can inform the rest of the country that when they do it, if they do it, they're going to be met with equal or greater force than we met right here. We did a great job. The people, you, Christy, and Tom Holman, and all of the people, Pete Hegseth, All of the people involved did an amazing job. We stopped a disaster. And it looks like a planned disaster, this didn't just happen. They had weapons, they had tools, they had everything you needed. I mean, they were throwing iced water in bottles, in glass bottles, at officers and at soldiers. These are, you could not use the word insurrection, but you could also use the word, these are very dangerous people, they're bad people. They were met with heavy force and they folded. And they may be there a little bit tonight, they may be there a little bit, but it seems to be getting less and less because they're going there and they're met with a very heavy force. And if they weren't, you would have that city right now would be on fire. It would be burning down. The rest of it, what's left over, because the other fire was started because they wouldn't allow water into LA. They wouldn't allow water into California because they had it all shifted out to the Pacific Ocean. And I turned it around. And I told them to do it in my first term, and they didn't do it. We had COVID, and they didn't do it. And I told them to do it. We did it in the second. Now we have billions of gallons of water flowing down. But Newsom should have done this. He's an incompetent man, an incompetent governor. Okay, any other questions?
Mr. President, any message to adversaries as the Army kicks off 250-year birthday celebration?
I just think it's amazing. We're going to have a fantastic June 14th parade, Flag Day. It's going to be an amazing day. We have tanks, we have planes, we have all sorts of things. And I think it's going to be great. We're going to celebrate our country for a change. You know, recently, as you know, with World War II, the victory of World War II, I called up France and they were celebrating the victory. Well, we helped them a lot, as you know. I don't have to get into that. But I called up other countries. They're all celebrating the victory. We're the only country that didn't celebrate the victory. And we're the one that won the war. Okay, if it wasn't for us, that war, you would be speaking German right now, okay? We won the war, and you might be speaking Japanese too. I mean, you might be speaking a combination of both. We won the war, and we're the only country that didn't celebrate it. And we're going to be celebrating big on Saturday. We're going to have a lot of, and if there's any protester wants to come out, they will be met with very big force. By the way, for those people that want to protest, they're going to be met with very big force. And I haven't even heard about a protest, but, you know, this is people that hate our country. But they will be met with very heavy force. Thank you very much, everybody.
Thank you, Press.
Thank you,
Press. Let's move out. Thank you, guys.
Thank you.
Thank you.
All right, President Trump meets the press. That was live from the Oval Office, and we wanted to interrupt our conversation to bring you into that one. That is the, of course, most up-to-date commentary from President Trump on any number of issues, specifically what has been unfolding in Los Angeles. I'm Joe Matthew in Washington. This is Balance of Power on Bloomberg Radio, satellite radio, channel 121, and on YouTube, where you can find us now. Search Bloomberg Business News Live, always on Bloomberg Originals as well. As we try to parse our way through this, I'm glad to say that we've got our panel back together to kind of unpack some of what we heard. Also with me, Bloomberg's Tyler Kendall, not on the North Lawn of the White House today, but with us in studio here. Tyler, an event like that, when you gather the pool, you could cover a lot of ground, and we did today, a lot of different topics. And I want to mention a couple of things before we bring in Rick and Jeannie here. We do have headlines coming out of London. Important to keep the beat on this. They are continuing talks, U.S.-China trade talks, something that you've been covering from your perch at the White House. We've got a break, I guess a dinner break. We're going to come back again.
And that's what it seems like. And we have to keep in mind that really the goal of this round of the London talks appears to be trying to get back on track when it comes to what was agreed to in Geneva, because both sides were accusing each other of violating that agreement. And we've had analysts on Bloomberg Television and Radio say, look, if that was just the goal here, perhaps one of the sides might be dragging their feet if it continues longer. But of course, we know that these are really complex issues when we think that at the heart of this, it's really about those export controls, Joe.
Could get a headline, I suspect, maybe in the late edition of Balance of Power. They're going to reconvene a couple of hours from now is all we're hearing. But they're not ending the talks. They're just taking a break. Back with us, our panel right now, Bloomberg Politics contributors Rick Davis and Jeannie Sheehan Zaino. It's been over a week since they've been together. Rick is, of course, our Republican strategist and partner at Stone Court Capital. Welcome back, Rick. Jeannie, Senior Democracy Fellow with the Center for the Study of the Presidency and Congress. Let's get our arms around what is happening in Los Angeles through the view of what we just heard at the White House here. It's going to be interesting with where we're headed after a Q&A like that. Jeannie, you heard President Trump say that if he had not acted, that Los Angeles would be burning, if not completely obliterated. So far, we've seen a pretty small part of the city be affected by all of this. What is he talking about?
You know, I was so struck by so much of what he said there, including the ending of that, where he said, if you want to protest, you will be met with heavy force, in reference to this event on Flag Day this weekend. And, you know, what he leaves out there is that we have a First Amendment right to peacefully protest. And so I will try to assume that the president meant if you want to violently protest, certainly you should always be met with heavy force then. But he didn't say that. And so what we're hearing is something just astonishing. A president sending out, without the call from the governor or the mayors, the use of the U.S. military against U.S. citizens. There are laws against domestic law enforcement, or making our military part of domestic law enforcement. That's why we have the LAPD, the NYPD, and all the rest. So we are in an unprecedented place, but it's not a surprise. He's been talking about doing this, and he referenced it there, going back to those George Floyd protests, where he mistakenly suggested that then Governor Walz didn't call in the National Guard in a timely manner. He did.
Well, Rick, it's clear that the White House is going to hold its ground here. President Trump was doubling down. He said he didn't think that he deployed the National Guard fast enough. But of course, California is suing over allegations that he bypassed the governor on this decision. How much is the legal fight really going to impact the optics that we end up see playing out here?
Yeah, I think it's totally on the side of Governor Newsom, right? I mean, the reality is there's a lot of precedent for the president to be able to trigger the National Guard in times of emergency. He's the sole determinator of what an emergency is. And so it's pretty clear to me that the response from California, from Governor Newsom, was he needed to do something to push back on the political dynamic of President Trump bringing troops into the state. And, the legal suit is probably the best and most graphic way for him to do it. But I don't think anybody is confident that either he'll prevail or that they'll get some press traction outside of the incredible graphic images coming out of L.A. that somehow is going to inure to his benefit. So I think it was a political ploy. It was probably the best of a group of options that weren't particularly useful. And I think you're, like the president's comments just a minute ago, it was as much about politics as it was about the situation on the ground in L.A. And I think the governor's just sort of playing the same game.
Jeannie, we have to take a close look at everything that's going on here, because things can become inflamed. And to Rick's point, you look at the images, you see burning robo-taxis on an abandoned highway in L.A. with guys in riot gear, and you start wondering what country you're in or what year it is. But the fact of the matter is, these troops, in particular the Marines who were deployed, are standing by on federal property to protect buildings, right? Where they're not actually going out arresting people in the streets or pointing weapons at people. We have to be clear about that, don't we?
Absolutely. The president was asked a question about exactly what the mission of the National Guard and the Marines is as they're out there. And the reality is that the National Guard and the Marines can protect federal buildings, as you just mentioned. They can guard them. But unless we have, under the Insurrection Act, which the president has not invoked at this point, they cannot do more. They cannot arrest, they cannot touch, and they cannot handle people. And that was another one of the misleading comments the president made when he said we, which makes it sound like the federal government, have been taking people into custody. That's not what's been happening. People taken into custody for the protests have been by the LAPD. Obviously, ICE can take people into custody, and rightly should, if they are in the country illegally. But we need to be very clear on that. And the president, when he was asked, did not talk about the mission of the Marines and the National Guard as they are there.
Right. Still a lot of big questions on the execution on this front. Rick, I want to ask you about also sort of the bigger picture here. We had Henrietta Treyes of Veda Partners on Bloomberg Television this morning, who, as you're about to hear, she said that the timing of these protests in Los Angeles, the focus on immigration, is actually welcome news for the White House trying to accomplish some other policy agenda items.
They got to love it. And the timing is perfect. Tomorrow or Thursday, the Judiciary Committee is putting out their $175 billion package that is going to spend money on immigration. And one of the things that has been lost in the last week of Elon Musk and Donald Trump feuding over Twitter is that the whole package, the reason we're doing one big, beautiful bill instead of two, is because there's a tremendous amount of dessert in this bill. There's $350 billion in funding for the military and immigration.
Rick, where do you come down on this? Does this help to advance other policy points for this administration?
Yeah, as we have heard just then and earlier in the discussion around the poll that recently came out from Ipsos, immigration is the bread and butter of this administration right now. They're under pressure with voters about their handling of the economy and some other issues like the tariffs and trade. But immigration, they still have a very strong foothold here, and they want to press the point. And so the fact that there is, this kind of a push for deportation. Stephen Miller went over to the Department of Homeland Security last week and said, hey, we've got to get more people deported. We're not even keeping up with the Biden administration's first year in office. And so this ramping up of deportations that have triggered some of this activity in California, it's all part of a game plan overall to position the administration as being tough on immigration, being tough on illegal immigrants in the United States, and partly because the original border debate that really got Donald Trump into the immigration issue, stopping immigrants at the border, enforcing legal immigration, has all but dried up. I mean, there's really not much of an issue. Trump administration policies have scared away immigrants coming over the border illegally. And so the next big act in that screenplay is what's going on internally in the U.S. And so that's why I think you see so much ramping up, which could include the president's motivation to trigger the National Guard going in to protect these assets that you've described. So, yes, I think it's all part of a broader effort to the administration to be strong on enforcement, strong on deportation, strong on funding for these priorities, all of which really excite the base. And frankly, a lot of independent voters have been concerned for a long time about immigration, and they see the president doing something. Maybe they don't understand exactly how it works, but they see action, and that's what this first 125 days have been, lots of action.
We've certainly got some powerful optics here, and that does appear to be the consensus among many on this program, that the optics and the politics are playing well for President Trump right now. And of course, all of this could evolve and change into a very different world. Rick Davis and Jeannie Sheehan Zaino will be back with us in our second hour here on Balance of Power. Many thanks to both of you for a great conversation. And thanks to Tyler Kendall for being part of the first hour of Balance of Power. Don't be a stranger. You're back next week, right? See you on the lawn between now and then.
Thanks,
the north
Joe.
lawn of the White House, that is. Tyler, thank you so much as always. Kaylee Lyons will join the conversation coming up as we welcome our global television audience to the conversation as well. And an important talk we're going to have with the chairman of the House Ways and Means Committee, Congressman Jason Smith of Missouri, on what stays in and what comes out of the bill next on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Tuesday edition, as House Republicans look across the divide to the upper chamber to find President Trump's big, beautiful bill. I'm Joe Matthew alongside Kaylee Lines in Washington. An important day here in the nation's capital, Kaylee. We're about to learn a lot about what stays in and what might come out of this bill with action on both sides of the Capitol.
Yeah, of course, some of that being driven by senators who want changes, some of it being driven by procedure in the Senate parliamentarian, which is going to rule what can and cannot be included in this bill for budgetary purposes. That is something the House is going to have to grapple with when things return to that chamber, and we're going to speak more about that this hour with the chair of the House Ways and Means Committee, who, of course, had pretty difficult time hammering out the tax details in the House the first go around. Jason Smith is going to be with us in just a few minutes.
I can only imagine what's going through his head right now as they wait for changes to come back from the Senate, but important, the Rules Committee is going to get together on the House side about an hour from now, Kaylee, in an attempt to maybe tweak some of this language to make it more palatable to the Senate. We'll get a sense from the chairman about what that might include.
In the meantime, we're still waiting to get a sense of the progress being made in London as U.S. and China trade talks continue for a second day. Negotiators right now, Joe, are on a break. Taking some time for dinner, going to return at 8 p.m. local time to try and hammer out the technical details of this agreement that we initially thought was reached in Geneva last month.
Got to think that means progress if they're not calling it a night. And suggest we could have some news on the late edition of Balance of Power, but not for a few more hours as they get dinner, to your point, right now in a late session for U.S.-China talks, all part of our program today.
Indeed, and as always, we kick off our program with a check on the markets. Charlie Pellet has a look at that from New York. Hey, Charlie.
Hi, thank you very much indeed. Keep it locked into Bloomberg for the latest developments from London, also Los Angeles. Developing story out of the Middle East at this hour. Sirens now sounding in Tel Aviv and in other areas of Israel. We'll keep you posted as we learn more. The Dow, the S&P, NASDAQ all advancing right now. A lot of green on the screen right now. Best level of the day on the S&P, up 23 right now. A lot of that having to do with trade optimism out of London. The S&P higher by 0.4%. The Dow up 115 right now, gain there of 0.3%, while NASDAQ up 73 for the NASDAQ Composite Index, a gain right now of 0.4%. The Bloomberg Mag 7 Index pushing higher, up 0.7%. The 10-year at 4.46%, the 2-year 3.99%. Spot gold down $4 the ounce, down 0.1%, 33.21 the ounce. And West Texas Intermediate crude oil up 0.1%, 65.34 a barrel. The U.S. is projecting crude output will fall in 2026, the first drop since 2021. A retreat right now for Bitcoin, little changed at 108,765 on Bitcoin. Boeing scored the highest monthly order intake in more than a year, including a huge haul during President Trump's trip to the Middle East, giving the American plane maker a commercial boost as it heads into the crucial Paris Air Show next week. Boeing shares, they're down now by 1.1%. ADRs of rival Airbus also lower, down 0.8%. Recapping stocks higher. S&P right now up by 22 points, up 0.4%. And Balance of Power continues right now. Back we go to Washington once again. Your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet checking on the markets for us from New York. Thank you so much. Of course, markets, just like all of us here in Washington, are eagerly awaiting news out of London to see if an actual agreement or re-agreement, shall we say, can be reached between the U.S. and China as high-level negotiators are continuing later this evening to try to hammer out the details of this trade agreement. The principals, of course, taking a dinner break for now. They're expected to reconvene at 8 p.m. local time, 3 p.m. Eastern, Joe. So this could go well into late afternoon here in the U.S. before we get any kind of readout.
Could be an all-nighter, I guess. Theoretically, Howard Lutnick, on his way to a break earlier, said talks have been fruitful. They are trying to be optimistic here, whether they're close to something, a re-agreement. I like what you came up with there, because we're really just going back a couple of weeks in time, not even as far as Liberation Day. So if they get through this now, rare earths, batteries, and the rest, that would potentially unlock larger talks on actual reciprocal tariffs, you like to think?
Yeah, considering we are up against a mid-August deadline for all of that to be.
Clock's ticking on a lot of stuff around here, not just reconciliation. We're going to get to the chairman of the Ways and Means Committee in just a moment. First, Bloomberg's Tyler Kendall covering the White House for us with the latest on talks and the latest from the president. Tyler, this could go well into the evening here. Donald Trump, I'm sure, is waiting for news, but this would be just the beginning.
Right, exactly. We have to think about what the objectives of this round of talks are. As you're alluding to, we're not really expecting tariffs to come down during these talks in London, but really we're trying to get both sides to feel comfortable that they're both respecting the agreement that was outlined in Geneva. Really at the heart of that is export controls, as both sides accuse each other of ramping up restrictions on products that they rely on. Now, yesterday I asked President Trump at the White House if he had given his negotiating team any sort of limits when it comes to export controls, and he was a little non-committal, but he didn't rule anything out. But it's important because at the end of the day, we're going to have to see if there is this willingness from the United States part to ultimately lift some of these restrictions that they've put into place. Now, people familiar do tell Bloomberg News that this would likely be those most recent restrictions on the software that goes into AI chips, the jet engines, things like that that have recently been imposed. But of course, the key sticking here, Joe and Kaylee, is that the U.S. needs to see assurances that China is going to ramp up and speed up those export licenses when it comes to critical minerals.
Well, and this was the nature of a lot of our conversations we were having with trade experts yesterday, that the U.S. has actual national security considerations that it needs to take into account when it's deciding what export controls to lift, whereas China can just kind of turn the critical mineral switch on and off at will. How does the U.S. guarantee that China sticks to its word?
Exactly. Also, when you look at how China controls 70% of the world's production when it comes to rare earths that are so essential to these supply chains. Of course, this goes hand in hand with the broader administration's goal when they talk about de-risking instead of decoupling from China. And there's a lot of focus here on how Commerce Secretary Howard Lutnick is part of these talks. He wasn't there in Geneva. Of course, the Commerce Department really has the oversight when it comes to these export controls. And that was seen as a positive step that these things could be on the table. But we should also point out the split screen that we saw last week in Washington, the same day that President Trump had his phone call with Chinese President Xi Jinping. Howard Lutnick was on Capitol Hill telling lawmakers that he actually thinks there needs to be tighter enforcement when it comes to these export controls. So how that's really going to play out, it seems like the Commerce Department is ramping up these talks in that direction.
All right, Bloomberg's Tyler Kendall here with us in our Washington, D.C. studio. Thank you so much. And Tyler reminding us of something important, which is that the Treasury Secretary, Scott Bessent, who's currently still in London at these talks, is technically scheduled to testify before the House Ways and Means Committee tomorrow morning on the budget for the fiscal year.
Yeah, I'm not sure how we're going to do that.
Yeah.
It does bring us to matters, of course, on Capitol Hill, though. Kaylee, and some big questions about what happens to the big, beautiful bill if we are going to be in store for some changes as soon as today.
Indeed. And it's on that note we turn to Capitol Hill now, where we're joined live by the chair of the House Ways and Means Committee, the Republican congressman from Missouri, Jason Smith, back with us on Bloomberg TV and radio. Mr. Chairman, we appreciate you being here on Balance of Power. As we consider the changes that are underway in the Senate, have you been read in to what the Senate parliamentarian is saying needs to be stripped from this package?
Yeah, the Senate parliamentarian has been ruling on various different items. It's really have not been that many, especially when it comes to the tax policy. These are things that we have been very careful that when we were trying to draft the legislation over on the House side, that it would be BIRD compliant and be able to follow the rules of reconciliation, and that would fly for the parliamentarian. However, a few things that might have to be changed will be done before we send the final bill over to
Well, and what are those few
Senate.
things, Mr. Chairman? What are
We're still
they?
waiting. We're still waiting for the final analysis, but when it comes to some tax policies that were discussed, for example, provisions that was in the bill that affect non-for-profits that are funding terrorism. That was not a budgetary impact, and so it had to be taken out. It's things like that, nothing of major significance that will alter the bill. The biggest things that I think is still left to be decided by the Senate parliamentarian when it comes to tax policy is eliminating the reployment tax credit, and also something in regards to Purple Heart designation.
Interesting. Mr. Chairman, I know there's an important Rules Committee meeting on the House side about an hour from now. Will those changes be made in that session so you can do this before it's technically in the hands of the Senate?
I don't serve on the Rules Committee, but it's very possibly those changes will be made before it is released to the Senate. And the Senate is working around the clock on this bill. They've been working with their fellow colleagues over in the Senate and trying to thread the needle that we thread over in the House of Representatives. It's very, very tough to thread that needle when you look at the debt and deficit hawks that some want to cut more money, others think you're cutting too much. It's the same way with all the green credits. Some folks want the green credits eliminated immediately. Others want to use a scalpel and look at an approach. And it's the same way with the state and local tax deduction. There's some senators over there that they don't like it, but they know that they have to balance it in order to make sure we get 218 in the House and 51 in the Senate.
Well, and it doesn't look like they're stopping at changes to SALT. We've heard talk as well of senators, the Senate looking to make changes to the no tax on tips and overtime measures that were included in the House package. In fact, the Senate Budget Chair, Lindsey Graham, told Semaphore in an interview earlier today that he thinks those things may not fit in this mega bill. Therefore, there might need to be another budget reconciliation package later down the line. And Mr. Chairman, I wonder what your response to that is.
That's a no-go. It would be dead on arrival. The senators need to know that we have followed through. We passed this one big, beautiful bill. It's what the president has asked. They need to do the same thing. There's no reason for those senators to kick the can down the road on priorities that the president campaigned on. No tax on tips, no tax on overtime. These are items that the president spoke at every one of his rallies, and 77 million people voted for him. The House delivered on it. The Senate will deliver on it as well.
Well, Mr. Chairman, we just arrived at one deal breaker in your words here, and I wonder what some of the others are. You hear all the same talk that everybody hears. In fact, I'm sure you know a lot more about it than we do, which is why we're glad to have you with us today. When you talk about changes to SALT, you talk about pulling out the so-called revenge tax, maybe some of the green incentives that are in there. What's the deal breaker on the House side? Because the conventional wisdom we keep hearing is the Freedom Caucus will deal with it if the SALT number stays where it is, for instance, that some of the issues from the more conservative members of the House will have to be dealt with because you need to keep the moderates, the New York, New Jersey, California delegations happy. Am I anywhere close to true on this?
The deal breaker is whenever you get out of balance. We struck a very good balance of passing a bill 215 to 214 in the House of Representatives. You have to thread a very narrow needle, and that's what the deal breaker could be, is if the Senate adjusts it too much one way or the other. You could either lose members of the right flank, or you could lose members on the left flank. And so those are things that we're balancing, and that is what could be fatal. But failure's not an option. We're going to get this done. Leader Thune, Chairman Crapo, they are navigating it over on their side of the building, and they understand the huge dynamics that we have within the House of Representatives. And they're going to make some changes over there, but I don't see those to be mega changes that are going to be catastrophic. It's going to be changes that probably will make the bill better.
Well, what about the change specifically, or the decision to drop the AI regulation moratorium? Have you heard from colleagues in the House as to whether or not that's a deal breaker for any of them?
We've had colleagues in the House that has raised a lot of concerns about it. Of course, that was not in the Ways and Means jurisdiction whenever it was put in, but it's something I think that the Senate, I know that the Senate is definitely addressing.
I'm curious as well about some of the green incentives, Mr. Chairman. There's reporting that more than 30 owners of rural energy companies are swarming the Hill today, knocking on doors. Maybe they've been knocking on yours to urge Republican lawmakers to preserve clean energy tax credits. Let's put EVs aside and the whole Elon Musk conversation. When it comes to wind and solar, if those are restored in the Senate, is that a deal breaker in the House?
So we cut over $500 billion of the green energy credits. This is something that the president called for. This is something that the majority of the House Republicans called for. You have to understand, not one Republican in the House or the Senate voted for these green credits in the Inflation Reduction Act. And so we tried to use a very balanced approach so that it didn't rip the rug from underneath industries that have invested already within the current tax policies, and we figured out a way to phase it out over a period of time. You just have to be balanced. We cannot be extreme in just ripping them away. We cannot be extreme in not taking them away. So it's right in the middle. You have to be right in the middle, and that's what we're doing.
Well, and as you talk about needing to be right in the middle, how this is a very difficult line to walk for both chambers, Mr. Chairman, when we consider the Congressional Budget Office yesterday released another estimate of when the U.S. will reach the X date, when it can no longer fulfill its debt obligations, guessing that could be as soon as mid-August when you and your colleagues are on recess. Can you rule out entirely that the debt ceiling is not going to have to be addressed separately if by the end of July this bill has not worked its way through both chambers? What odds would you put around that?
The House has increased the debt ceiling. We've addressed that in the One Big Beautiful Bill. The Senate needs to act. We have said all along, let's put this bill on the president's desk by July 4th, and then you have nothing to worry about. The Senate trying to break different items in 15 different bills is a no-go. We have delivered in the House. They need to deliver in the Senate.
Mr. Chairman, I wonder if you've had a chance to speak with Elon Musk or any of his allies since he took a position of opposition on this bill, and whether he's giving members of the Freedom Caucus or anyone in the Republican conference in the House, or for that matter, Republicans in the Senate, cover to vote no.
Let me just say this. The bill that we passed, the One Big Beautiful Bill, is the largest cut to spending in the history of our country, almost $1.7 trillion. With all the great work that Elon and Doge has done in cutting, they cut $175 billion in 5 months. The bill that we passed out of the House cut $1.69 trillion. Could we cut more? I would love to cut more, but it's still the largest cut in the history of America, and that's what I like to point out. Whenever people try to use the accounting measure saying that it's going to add $2+ trillion to the deficit, I believe that that is funny math, because what they are referring to is existing tax policy is going to cost roughly $4 trillion, and that's not the case. Our revenues into this country right now is 17.2% of GDP. And if you look at the historic level over the last 50 years, revenues to GDP has been right at 17%. We don't have a revenue problem. We have a spending problem.
Well, finally, Mr. Chairman, on the revenue side, tariffs, of course, factor into that equation. And just quickly, we have a minute left here on tariffs. The Treasury Secretary, Scott Bessent, is currently still in London working on trade negotiations with China that are expected to go late into the night local time. Are you still expecting him before the committee for his testimony tomorrow morning?
I am still expecting him before the committee. It looks like he may have a long night, but I'm grateful for the work that he's doing, Howard Lutnick and Ambassador Greer is doing, because they are working and representing the United States when it comes to China and all the other countries coming to the table to make sure that the American worker, American manufacturer, and American farmer is treated fairly on a world stage.
You may need stronger coffee tomorrow morning, Mr. Chairman. This ought to be interesting.
Energy drinks for them.
I guess. All right, I guess we lost Congressman Jason Smith, Republican chair of the House Ways and Means Committee. Wanted that last word. We'll assemble our panel next. Yeah, okay. Rick Davis and Jeannie Shanzano are on the way in here on the fastest show in politics. This is Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. A lot of green on the screen today with the Dow, the S&P, and NASDAQ all advancing. S&P 500 index higher now by 26 points, now trading at 6,032. We are off session highs, but stocks are holding close to records as traders keep an eye on those U.S.-China trade talks in London. We'll keep you updated on the latest developments there. The Dow up 137 now, up by about 0.3%. NASDAQ higher by 76 for the NASDAQ Composite Index. That is a gain right now of 0.3%. We've got the 10-year yielding 4.47%, the 2-year 4.00%. Gold now little change, down $5 the ounce, down by about 0.1%, 33.20. And West Texas Intermediate crude up 0.1%, 65.33 for a barrel of WTI. Israeli military officials now say the reason for the sounding of those sirens in Tel Aviv and other areas of Israel was because a missile was launched from Yemen. Meanwhile, Israeli Prime Minister Benjamin Netanyahu has convened a meeting with members of the negotiating team and others, quote, in light of some progress in hostage negotiations. J.M. Smucker shares are trading lower today. They are now down by 15%, the most in nearly 4 decades, after saying tariffs increasing costs in its coffee business will hurt profit. And a growing chorus of advisors inside and outside the Trump administration are pushing another name to serve as the next chair of the Federal Reserve, and that is Treasury Secretary Scott Bessent. Recapping, stocks higher, S&P up 26, up 0.4%. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much, keeping us up to date on the market action today. Meantime, we're keeping you up to date on the continuing drama over protests in Los Angeles, where, of course, we've seen the deployment of another 2,000 National Guard members after the initial 2,000 members deployed over the weekend. And, of course, 700 Marines, active duty Marines, have now arrived in Los Angeles as well, as President Trump describes that as an effort necessary to keep Los Angeles from burning and to control the activity we're seeing. But he also said in the Oval Office while speaking to reporters in the last hour that he spoke with California's Governor Gavin Newsom a day ago. To quote the president, called him up to tell him, got to do a better job. He's doing a bad job. To which the governor is now responding, there was no call. Joe, he says, not even a voicemail.
Yeah, Gavin Newsom going on to write that Americans should be alarmed that a president deploying Marines onto our streets doesn't even know who he is talking to. Kind of taking a page from Trump, the way he talks about Joe Biden. Let's assemble our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are on board with us today, back together for the first time in over a week. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie, senior democracy fellow with the Center for the Study of the Presidency and Congress, and Bloomberg Politics contributor. Jeannie, we keep hearing that this is good politics for Donald Trump. This seems like it's pretty good politics for Gavin Newsom, too. What do you think?
It is. And, you know, I share Gavin Newsom's use of the word alarm, but probably not for the same reason he's using it. I am alarmed that a president would say just minutes ago in the Oval Office that if you're going to protest on the 250th anniversary, you will be met with heavy force, without differentiating that peaceful protest is one of the linchpins of being an American, our right to speak and assemble. I'm alarmed that he would send troops in without being asked by the governor, but I'm also alarmed on the Democratic side that they are playing into this theatricality. The reality is that we do need a solution to immigration. And the kind of solution we need is not this performative back and forth of, you know, our leaders on social media yelling at each other. It is a legislation out of Congress, like Rick's former boss, John McCain, put together. That's what we need. And what's alarming is we are nowhere close to there. And oh, by the way, we have a director of Homeland Security who went on TV last night and said everybody in LA is a criminal. That kind of performative nonsense is not what we need. We need solutions.
Well, when we consider the performance, if you will, Rick, and the continued escalation we see, President Trump was asked in the Oval Office by a reporter if he would consider invoking the Insurrection Act. And he said, if there's an insurrection, I will invoke the Insurrection Act. That, of course, would carve out what is not allowed thanks to the Posse Comitatus Act, which is the U.S. military acting in a law enforcement capacity. Do you really believe the president would go there?
You know, it's hard to tell in these circumstances. You know, he gets a question, he feels like he's got to answer the question, and I thought it was actually pretty non-committal. But look, I mean, the difference between the Marines going to California and protecting the assets of the federal government, you know, courthouses and federal government centers where some of the deportees are being held, that's one thing. But then, you know, basically them acting as a police squad in any jurisdiction of America is going to have a different reaction. Right now, we're debating whether or not a phone call was made or who asked for what. In that case, when you take that kind of constitutional action where you suspend Posse Comitatus, I think you would see a national dialogue erupt of epic proportions, because you really wonder at what point does the violence have to occur to have that triggered in a Donald Trump administration. And I don't think we know the answer to that question. And pretty much I don't think he did either when he answered the question today. So stay tuned on this. Luckily, it looks like some of the riots have dispelled in L.A. and it's starting to quiet down. So hopefully it won't matter in this instance. But I think it's definitely a page to watch.
Interesting as we learn more about some of the folks who were arrested, Jeannie. Isn't that interesting? We're not hearing very much about what went behind these arrests. In some cases, there were violent criminals. We heard about a handful of them, but we're learning more now as well about, for instance, Juan Fernando, detained by ICE at his job at a clothing factory, transported back to the country he had left behind without much time passed. I mean, the same day he was pulled out of his job and immediately deported. His family is asking for due process. Are we going to go through this all over again with this group like we did with those deported to El Salvador?
I think we probably will. The reality is Donald Trump deserves credit for shutting the border. We need common sense immigration reform, and it is neither cost effective nor enforceable for the United States to deport people who have been here, many of them brought as young people for their entire lives, who are working and paying taxes, to pick them up at Home Depot or like you're talking about these people. Criminals, absolutely. But that was part of the DACA. And Donald Trump had embraced some of that in the past. Now he is being pushed by the likes of Stephen Miller, as is ICE, to deport 2,000 to 3,000 people per day. That means you go to peaceful tax-paying people who, by the way, are paying taxes and helping our economy. It is not a common sense solution to a real crisis and problem we've long had. And the president should be called out for not working with Congress to get a deal done. This is the same person, for electoral reasons in January, blew up, much to the dismay of Republicans, a very strong immigration bill that could have moved us forward. That's what Americans should be alarmed about.
Well, when we consider immigration-related legislation, though, Rick, the White House in recent days has been very quick to point everyone to the fact that the One Big Beautiful Bill working its way through the Hill right now does include funding for more ICE agents, more customs agents, more Border Patrol agents. How does that factor into the overall likelihood of the bill sailing through, or at least getting through easier, shall we say?
Yeah, I would say the one item that has not generated much controversy at this point in time in the Big Beautiful Bill, the reconciliation bill, has been money for the Homeland Security and for Department of Defense and their portion on things like building the wall. So the reality is this is one there most Republicans have been jumping on board. It's gotten some criticism for being a big spending item. And we just talked to the chairman of the Ways and Means Committee. Basically, from what I could tell, what he was saying is we've cut enough, don't need to cut anymore. And so probably no appetite in the House side, I guess, to go after those funds. But the reality is it's a significant over $300 billion commitment at a time when border security seems to be handled pretty well. And so it's really deportations. And I could just add, there have been more deportations in the first year at this point in time in the Biden administration than it is today. Donald Trump's deporting fewer people. So it's not the issue of deportation as it exists. That's happened throughout all the administrations. It's the tactics under which they're using the deportation rules to their advantage.
Well, it's a really important point to make. Rick, it's kind of ironic, Jeannie. Remember, the big argument was, do we do this in one big, beautiful bill? That's why we call it that, because the other option was to break it in two. That was the John Thune option. Get the border money out the door, and we'll spend time on taxes and the rest, which will be more difficult to debate. Well, here we are. One big, beautiful bill was the answer. And it's kind of ironic that based on current events, it is, in fact, the border component that could help push this over the finish line, isn't it?
Yeah, it's ironic, or it is something that the the administration helped to sort of push forward. But the reality is,
this was all part of the plan, is what you're saying.
I don't know, but I'm not sure it's ironic. But the reality is that this bill funds the border. That is fine. But what we need is immigration reform. We have 6 to 7 million people in this country. The government doesn't even know, they can't tell you, who were brought here as babies and children. Are we really going to pick these people up, take them to a place or push them out to a place they've never been and know nothing about while they have done nothing wrong? Very few Americans support that tactic. We have to find a common sense pathway to citizenship. Yes, close the border. Yes, fund border security. Yes, deal with people who are committing crimes. But yes, also find a common sense way to keep people who are working and contributing in this country, especially people who were brought here, who work with many of us, and we know many personally. They are friends, neighbors, and family members. They are here and they should be supported in an effort to stay here and to continue contributing to this great country. That's where the president's plan here and Stephen Miller's, quite frankly, falls very short.
Rick, in our final minute, your degree of confidence that that common sense solution can be found in the near term?
Well, I certainly worked hard enough with John McCain to try and have a comprehensive immigration bill passed, and didn't work out so well. But it is the way to actually have all these jobs that people are getting deported from to be filled with people who actually come in legally. And of course, I think there's a broad bipartisan support for legal immigration reform. And it's just not the administration that's likely to pass it. But it would be a very good thing in the heels of this current debate to be contemplating if you're the Trump administration.
Talking about motivations here on both sides of the aisle, Jeannie, would it help Democrats if this did not fizzle out and in fact spread to other cities as we consider messaging ahead of the midterms?
Maybe politically, but, I think many Americans are tired of thinking about this from a political lens. I mean, we need solutions. And so, if it helps Democrats, that's fine for Democrats. But it doesn't help the United States as a whole not to treat people the way they should be treated and to keep people brought here as children here, contributing to society and making us the best we can. So I think that's also important, as in addition to the political end.
All right, Jeannie Sheehan Zaino and Rick Davis, Bloomberg Politics contributors in our political panel on this Tuesday. Thanks for joining us on Balance of Power, and we'll have more ahead here on Bloomberg TV and radio.
Order submitted.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Developing story affecting New York City residential real estate. Just getting word that a federal judge is refusing to block a New York City law that would require landlords rather than their tenants to pay fees for hiring listing brokers, handing the real estate industry another setback in its legal fight to prevent enforcement before the measure goes into effect on June 11th. Again, the headline bears repeating. A judge has refused to block that New York City broker fee law set to begin June 11th. Stocks higher right now. We're off session highs, but still looking at a 19-point gain in the S&P 500 index. Now at 6,025, up by about 0.3%. The Dow up 101, up 0.2%. NASDAQ up 38. Higher now by 0.2%. Our Mag 7 index up 0.5%. We're looking at a 10-year currently yielding 4.46%. The 2-year 4.00%. Spot gold down $2 the ounce. Little change there. Right now looking at a loss of just about 0.1%. 33.24 on the precious metal. West Texas Intermediate crude down 0.2%. 65.17 a barrel. While Bitcoin just about flat on the day at 108,745. Paramount Global is cutting several hundred employees due to a continuing decline in the cable TV industry and the broader economic landscape. Paramount shares, they're trading higher. Paramount Global up now by 1.2%. Again, repeating the headline we brought you moments ago, a judge is refusing to block that New York City broker fee law set to begin June 11th. Recapping, S&P up 0.4%. Balance of power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
Breaking news on the markets and well beyond. Charlie Pellet, thank you so much. Live from New York. We are here in Washington where we're bracing for news on a couple of fronts here. Most immediately, a Rules Committee meeting in the House that starts about 20 minutes from right now. Kaylee, they could bring changes to the president's so-called big, beautiful bill before they have to be addressed in the Senate. This is kind of an interesting moment as these two chambers try to reconcile their differences before this blows up into a big public spat, because once the Senate finishes its work, sends the bill back, it could be a little different by then.
Yeah, because the Senate is going to be informed by the decision-making of the Senate parliamentarian, which will actually rule what does constitute a budgetary matter and what doesn't, as there were a number of provisions in the original House bill that maybe won't pass muster on that front. That's just some of the work, of course, that the Senate has underway. There's other tweaks they want to make to the bill as well, regardless of whether or not they are truly budgetary in nature. And earlier today, our colleague David Weston, who of course hosts Wall Street Week on Bloomberg, had the chance to speak with one sitting U.S. Senator who just joined the chamber this year. The Republican senator from Pennsylvania, David McCormick, sat down with him for an interview at the Union League Club for the Economic Club of New York earlier today. Here's part of their conversation.
The people that I met on the campaign trail were voting for change. They wanted change. They wanted an economy that worked for them, that worked for working families. They wanted trade policies that they felt were fair. They wanted a border that was secure and didn't sacrifice their families. Cool. And that's the agenda that I largely ran on, which was to help working families build opportunity, fair trade, not free trade. I was someone who negotiated with China 20 years ago for free trade deals, and I'm now one who believes that we need to be focused on reciprocity and fairness. We can talk more about that. People that wanted the border closed, wanted law and order, and essentially wanted their fair shake. And so if we talk about the big, beautiful bill, we talk about the border policies, we talk about trade, we talk about immigration. The framing of the policies starts, I think, with those experiences in Pennsylvania. And, I'm about 150, 160 days into the job, so I'm still figuring it out. But I would say I'm very, very privileged to be able to do it. I'm the 54th elected senator from Pennsylvania. But I think I have a unique perspective because I now have learned what's going on the ground in a way that I had grown away from since I left for West Point. And I also, as I said, I have some perspective as someone who sat in this room with all of you. So I'm delighted to have a chance to share that today. Honored to be here. And David, why don't I turn to you and you can take it away.
Okay, Senator, thank you so much. That was very helpful to set up. So let's pick up on exactly what you talked about and what you learned from traveling all around Pennsylvania for the working men and women, if I can put it that way, and particularly people who are not having an easy time of it. What makes this bill beautiful? It's big. There's no question it's big. But what makes it beautiful for them?
Well, I think the starting point for this, and it's in some ways very advantageous to the people in this room and to them, is that if we don't pass the bill, we have the largest tax increase in history. And so, there's lots of media around this, but essentially, if you look at the bill, if you're a family that makes $50,000 a year, if we don't pass this bill, your taxes go up by $2,000 a year, $2,500. So it affects everybody. The large majority of the tax benefit for individual rates, 60% of it goes to people that make $400,000 or below, despite the fact that 80% of the taxes are paid by the people that make 10% or at the highest end of the 10%. But in addition to that, it's very pro-growth.
Senator David McCormick, the Republican from Pennsylvania at the Economic Club of New York, with Bloomberg's David Westin. Just another look at this reconciliation effort that's underway right now, and as we mentioned, could provide news later on today. Of course, Kaylee, part of the narrative that's come around this reconciliation bill, something we talked about with our panel and with Jason Smith of the Ways and Means Committee, what's happening right now in Los Angeles, the attention that it's driving to the president's immigration policy could actually help to hasten the passage of this bill because it includes billions of dollars to help at the border.
Yeah, and specifically to have more personnel for ICE, for Customs, for Border Patrol agents as well. That is the messaging that the administration is pushing out there, that what we're seeing take place on the West Coast just adds to the urgency of making sure that this legislation passes.
A lot of questions about what's happening in Los Angeles. We did hear from President Trump earlier today, live in the Oval Office, speaking with reporters. He said if he didn't mobilize the National Guard and the Marine Corps, Los Angeles would be obliterated and would be burning to the ground now, which is quite remarkable based on some of the optics that we've already seen isolated to a corner of Los Angeles. Wanted to get into the grounds, though, for deployment and some of the other language that we've heard with Elizabeth Wydra, Constitutional Accountability Center president and Supreme Court litigator. Elizabeth, welcome back to Bloomberg TV and radio. It's great to have you. The president has suggested that these troops were needed, absolutely, the National Guard and the Marine Corps were needed to essentially put down a rebellion. Does he have the legal standing, as long as they're on federal property, to keep them there as long as he wants?
You know, the deployment itself is the problem. We have very specific guardrails in the United States to make sure that we live under a civilian authority, not military rule. And so if the president wants to deploy the military, if the president wants to deploy the National Guard without the consent of state and local leaders, there are only extremely specific rare circumstances under which he can do that. That's invasion. There's no invasion. That's rebellion. There's no rebellion. And if the state and local authorities are unwilling or unable to execute the laws, and we have not seen that the case. The LAPD, state and local authorities, they believe that they were perfectly capable of dealing with the mostly peaceful protests. Yes, there were some instances of violence and destruction, which are abhorrent, but the vast majority of people were exercising their constitutional right to protest, and the deployment of the military and the National Guard is unlawful without any invocation of the Insurrection Act. The president did not have the authority to do what he did, and it wasn't needed on the ground, according to the state and local leaders whose views matter in these circumstances.
Well, I'm glad you raised the Insurrection Act, Elizabeth, because the president was asked directly about that in the Oval Office earlier today, knowing that the military personnel currently deployed do face limitations on the conduct with which they can engage. They can't act in a law enforcement capacity. The Insurrection Act, though, if the president decided to take that step would give them that power. How should we consider what qualifications need to be met for President Trump to actually declare that an insurrection is underway?
Well, I think there might be close cases of that. I think this one is not one of those close cases. You have people who are protesting immigration raids that they find outrageous, that they find to be an intrusion on their community. Instead of focusing on violent criminal people who are here without authorization, they're rounding up our neighbors and community members who are just trying to work and support their families. So the people are rightfully expressing their outrage and mostly peacefully protesting. So this is not one of those close cases where you're like, is this an insurrection or is it not? And I think the really disturbing message that we're getting here from the deployment of the National Guard and the military is that it does seem as if President Trump is using the military in unprecedented and frankly unlawful ways to further his political agenda. We certainly saw on January 6th, which I think you could make a very good case that there was an insurrection there with the attack on the Capitol. There was a request for National Guard support, and President Trump did not provide that, arguably because it didn't support his agenda. But here, where you see the deployment when people are protesting actions that his administration is taking, that is very disturbing because in America, we don't do that. The military is not supposed to be politicized. It's not supposed to be weaponized to use to pursue a particular agenda or not. Whatever political party you belong to, we should all as Americans be able to agree on that.
Elizabeth, we're hearing from immigrant advocacy groups about some of the folks who have been detained and arrested that led to the protests. We haven't spent much time talking about any of their cases because we don't know that much about them. But apparently many were detained even though they did not have a criminal record. And one particular case came to light in the Washington Post, that of Juan Fernando, who was pulled out of a clothing company where he was working in Los Angeles and was deported so quickly. His parents say they did not have time to get an attorney. It's a pretty remarkable story. He, in fact, thought he had signed a consent to a coronavirus test, but may have inadvertently signed off on his own deportation, was told to cross an international bridge back to Mexico, and was not allowed back. Is this legal?
It definitely doesn't sound legal or in accordance with due process to me. Without knowing more of the facts, of course, but that's part of the problem. And that is what people are protesting. As a Southern Californian myself, our communities are full of people who are hardworking immigrants, some who are unauthorized, who don't have papers, but they are hardworking members of our community. And I think that's why you're seeing the protests in the streets in Los Angeles, because these raids happen in the garment district, like the case you just mentioned, to workers who are gathering outside Home Depot to try to engage in labor to support their families. And that's why you're seeing people come out in the streets, because this is not what they want their government to be doing, to be targeting these members of our communities.
Well, and when we consider that that is an effort that has been underway and a primary goal of this administration, Elizabeth, we know that they have run into some difficulty in the courts, including a Supreme Court, which has ruled that due process needs to be afforded to many of these individuals. Have you seen direct evidence to this point of the Trump administration directly flouting the courts when it comes to immigration-related directives?
So we have seen that the actions in court are working to put up the guardrails that the Constitution and the law puts forth. I want to be totally clear that people understand due process applies to every person in this country. There are some rights under the Constitution that apply to citizens. Due process expressly applies to everyone in this country, citizen or not. So it's incredibly important for our constitutional democracy to work to ensure that everyone, including people who are immigrants here, including people who are undocumented immigrants here, get the due process that the Constitution requires. It's part of the foundation of the United States. It's guaranteed in the Constitution, and the courts are ensuring that that happens. And we can only hope that the Trump administration continues to follow court orders and that these guardrails continue to hold. But the people who are going out and saying, this is not what we voted for, are making an important point. They're raising their voices as the Constitution allows them and protects their right to do so.
All right, Elizabeth, we appreciate you joining us here on Balance of Power. Elizabeth Wydra, Constitutional Accountability Center president and also Supreme Court litigator herself, here with us on Bloomberg TV and radio. Thank you so much. That, of course, one story we continue to follow, and we could hear more from President Trump about what's going on in Los Angeles later this afternoon. We should note, Joe, that he's currently traveling to Fort Bragg, North Carolina, and is expected to make remarks from there around 4 p.m. Eastern time. He could weigh in on this, but also perhaps have a status update on trade negotiations underway in London as we speak.
That's right. We could have some breakers there, too. This could be an interesting afternoon here in Washington. The president was asked, by the way, he's at Fort Bragg celebrating the Army's birthday, asked about potential protests at the big Army birthday parade here in Washington on Saturday. He did say that there would be no patience for protests at that event. Alongside Kaylee Lyons, I'm Joe Matthew. We'll meet you back here for the late edition at 5 p.m. Eastern Time, as always on Bloomberg TV and radio.
Target filled. This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Good afternoon and welcome to Bloomberg Business Week Daily. Emily Grafeo here with Matt Miller. We are filling in for Tim Stenivek and Carol Massler. They're going to be taking the reins in San Diego in just an hour. They're on location for Cisco Live 2025, where they'll be speaking with some of the best and brightest from one of the world's leading technology and networking services companies. In the meantime, Matt and I are here watching markets. We're watching what's going on in LA. And we also have eyes on London, where U.S. and Chinese officials are expected to resume trade talks in just about an hour. Matt, how are you?
Yeah, absolutely. I'm doing great. We've watched this market do a whole lot of nothing today. And the reason, of course, is that traders are sitting on their hands, waiting for some real results out of U.S.-China negotiations, but also waiting for CPI numbers, which come out tomorrow. And I think really the big event to watch for equity markets this week is going to be the 30-year Treasury auction that happens on Thursday. Of course, the long end of the curve has been a concern. We're getting ever closer to 5% again on the 20 and the 30-year, basically there on the 20. And we're looking at 4.462% on the 10-year, so getting closer to 4.5%. We've had so many people, Emily, come on my show, Bloomberg Open Interest, weekdays from 9 a.m. to 11 a.m., and say, look, 4.5%, above that is the danger zone. And the same is true with 5% on the 30-year. And after we've had a couple of really concerning auctions in Japan, globally, I think investors are watching the long end, and that's going to be, if we get to those levels, a real headwind for equities.
Yeah, I mean, it's interesting that we need to get the equities traders hyped up for the Treasury auctions, but you are really hyping it up.
Well, because they're so boring, right? Yeah. And there's a lot of language that as an equity investor you don't really run into. So you've got to brush up on your Investopedia, and you've got to figure out what it means to see foreign investors, investors that are buying for their own accounts, investors that are buying for banks, primary dealers. But the bottom line is that it's getting more and more expensive to do business. And if it continues, if that cost continues to increase, it's going to be a real problem for Donald Trump, for Scott Bessent. You know, the Treasury Secretary has said so often from the beginning of his term in office that getting the 10-year yield down is one of the main things that he wants to do. And so far, it just hasn't really worked out.
All right. Well, we'll be watching that. But ahead of that Treasury auction, let's first get to Charlie Pellet for a Bloomberg Business Flash.
Thank you very much. Developing story in New York City, keeping an eye on that electrical fire at Grand Central Terminal that has halted Long Island Railroad service with about 100 firefighters working for several hours through thick smoke to put out the flames. LIRR service in and out of Grand Central suspended. Trains being rerouted to Penn Station, Jamaica in Queens, or the Atlantic Terminal in Brooklyn. Again, an electrical fire at Grand Central disrupting Long Island Railroad service out to Long Island. Also in New York, federal judge refusing to block a New York City law that would require landlords rather than their tenants to pay fees for hiring listing brokers. U.S. equities, they're trading higher. The Dow, the S&P, NASDAQ, all advancing. We had the Dow little change moments ago, right now up by 11 points. The S&P also up 11. That's a gain of 0.2%. NASDAQ, the composite index, up 20, up by 0.1%. The 10-year yield, 4.46% right now, with a 2-year, 3.99%. Spot gold, little changed as well at $33.24 the ounce. And West Texas Intermediate crude flat on the day, 65.21. Also keeping an eye on Intel shares. They're ripping higher right now. We got Intel up by 7.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thanks very much for that. Yeah, markets watching closely what happens with the U.S.-China trade talks. Really watching Scott Bessent as a potential replacement for Jerome Powell as Treasury Secretary, and watching Education Secretary Linda McMahon. She is taking part right now in a Bloomberg Newsmaker event, and our White House correspondent, Akayla Gardner, is speaking to her live, already in progress. Let's dip into that conversation.
Education Department. I don't recall any particular senator or congressman or congresswoman that I've had that conversation with, but generally speaking, they are all for being behind raising test scores, having better performance for the students in our country, But I think at this point I could probably honestly say that they're relatively evenly divided.
I want to talk about the headlines that we've seen from the administration. Obviously, several different agencies have revoked billions of dollars in funding to many private universities, including Harvard, Columbia, Cornell, Brown, Princeton. Which schools, if any, are on track to getting their funding back from the government?
The first university that we started this process with was Columbia. I visited with the then acting president, Katrina Armstrong, on campus at Columbia, and we basically were starting our conversation relative to anti-Semitism activities that had gone on before and that were still continuing in some ways, though some of it was a little better. That's how we began our conversation, but then we wanted to look at other aspects of the programs that they had on campus, how they were vetting their students. Did they believe that a lot of the uprisings on campus came from outside agitators or students that were on campus? What were some of the ways that they were managing those activities on campus? And I think we have had really good, open, honest discussions. I've now met with the current president of Columbia twice and had a telephone conversation with her. I'm sorry, I've met with her once, had 2 telephone conversations with her. And I think we've made great progress. Harvard's been a little more strident. They responded to our negotiation outreach with a lawsuit and have amended that lawsuit once. Still hopeful that these things can be resolved, through negotiations. And I think just sitting in and understanding what is really best for students that are on campus, that they can be sure that they're in a safe learning environment when they're there, not be afraid to go to class. But at the same time, we want to make sure if tax dollars are funding a lot of what is going on in the universities, that those universities are abiding by the laws of the United States.
Do the universities think that they will get their funding back at the end of their negotiations with the administration?
Are they saying that they are, or are they asking will they?
Well, would the administration allow them to get that funding back?
Well, that's part of the negotiations, of course, that we have that are ongoing. It would be my goal that if universities, colleges and universities are abiding by the laws of the United States and doing what we're expecting of them, that they could expect to have taxpayer funded programs.
Do you think there's a chance that President Trump leaves the White House in 3 years and some of these schools never see that funding come back?
I would hope that's not the case. We're certainly trying to move much more expeditiously. And what we've seen since we really began this effort, it was kind of a hard hammer at first. And so we've now seen a lot of other universities who are starting to look at their practices and their programs and getting ahead of the curve so that they can report back sort of a self-monitoring. Self-monitoring is probably not a good way to phrase it because we couldn't allow that at first, but certainly self-evaluation, I think, is a better way to say it.
You've talked about universities potentially supplementing the funding that they've lost with their own endowments or potentially other sources. Do you see a future where the government no longer invest research dollars into some of the universities that have very large endowments?
Well, I think, our universities do some remarkable research. And I think if we look at our research as for the public good, which I think that's intended, then taxpayers, I believe, are willing to see some of their tax dollars, support that kind of really good research. And so I would certainly hope that would continue at the university level.
Okay, I want to ask you specifically about Harvard because no school has seen more funding revoked than Harvard University. The president recently said Harvard is starting to behave. What did he mean by that? And is Harvard back at the negotiating table at this point?
Well, I would never like to pretend to say that everything that the president says that I fully can translate for you. But I think clearly what he's indicating is that we are, I think, making progress in some of the discussions we're having, even though they have taken a hard line. They have, for instance, replaced their head of Middle East studies. They have already put in place some of the things that we have talked about in our negotiations with Columbia. For instance, none of us are suggesting that on college campuses there shouldn't be, there shouldn't be discussion. There can be orderly and nonviolent protests. I mean, college ought to be about the exchange of ideas and debate and all of that, but it has to be done peacefully. You can't have a protest as the, I think it was the president of MIT that I met with last week, said, you know, you can't do a protest at 2 o'clock in the morning. You can't be in the halls of the library and prevent other students from getting to the library to study. But if there are places and time appropriate for a peaceful protest, they should be allowed. I think we're all in agreement with that.
The IRS is reviewing Harvard's tax.
You are listening, by the way, to Bloomberg Business Week,
When do
and
you expect them
we
to
are
make a
bringing you a
decision on
special
that?
conversation,
I don't know. I think
Bloomberg
it's something that
Newsmakers
we
conversation,
raised, the
with the
president
Secretary of
raised, to take a
Education,
look at
Linda
these
McMahon.
large
She's speaking
universities
with our White
these
House
are
correspondent,
really
Akayla Gardner.
large endowments, $53 billion, you know, for Hartford. And that money doesn't just sit still. It is invested. And if it's invested well, they can expect a good return on that investment. And so as the citizens of our country are providing tax, and that they should examine that, because part of the accreditor's position is to make sure that colleges are lawful or they can risk losing their accreditation.
Did something change in your conversations with Columbia that made you send that letter? Because you have been talking so positively about your conversations with the president, with the university generally.
I think one of the things that made us take another look at it is just we're looking at accreditation in general, you know, for colleges and universities, because there has been some complaint about that we need to expand the number. That, you know, when you think about the fact that all law schools are accredited, you know, by the ABA, that's it's like a real monopoly, you know, in some areas. There have been some times now that you could change accreditors, used to be bound geographically, but some changes in the rules. So as we've looked at accreditors, we wanted to make sure, okay, let's make sure that we are touching all the bases that are relative to how our universities need to comport themselves.
So you think other universities' accreditation status should also be in question as well?
I think accreditors have a responsibility. It's built into what they're supposed to be doing. So we've reminded the Columbia accreditors, and I think all accreditors now will make sure that they are abiding by the terms of their agreements.
In that letter to Columbia, you talked about federal student aid. Is that something that you would consider limiting for universities broadly if you can't come to an agreement with them?
Ask me a different way.
I suppose, do you think that the administration, your department specifically, should restrict access to federal student aid for universities if you feel like they're violating civil rights?
Well, I think certainly the American citizens and taxpayers would expect that if colleges and universities, I would believe, and I've certainly heard, if their taxpayer dollars are going to those universities, and that there is student aid coming for those, that we would expect that they would abide by, number one, abide by the law. And I think if a university is accepting federal aid, you know, we've obviously looked at that federal aid.
There's been reports that consent decrees were on the table with Columbia University. Is that accurate? Is that a tool that you would use?
We've discussed consent decree, and so our negotiations have gone, you know, back and forth. That's, you know, it's been part of the negotiations.
What we've seen over the past couple of weeks has really looked like an all-of-government approach when it comes to higher education, whether it's the State Department or HHS. Can you walk us through how those decisions are made? Are you guys coordinating with each other? Are you speaking directly with the president before you take decisions?
Well, the president clearly has a stated goal and gives direction, and we take that direction, obviously. But there are parts of it that hasn't all come necessarily at the same time. When there was a focus on international students and should we stop international students from coming here or taking a look at their visas and et cetera, the State Department took on that branch of it. And the courts have reacted. I think it was yesterday. The court said, no, that process, you know, needs to be reversed. We need to be allowing these students to come back in. But we then say, okay, well, let's just make sure that we're conveying to these universities and colleges that as these students do come in, they need to know more about their background. Because when I've asked some of the presidents that I've talked to, do you think that a lot of agitation that's occurred on campus, are they occurring with students who are going here? Are there outside agitators who are coming in? Do you see it happening more with foreign students than domestic students? And so it's really important, I think, to have a handle on that student population, and I think that's fair. And also universities, a little bit aside from students specifically, universities are required under Section 117 of the Higher Education Act to report on the amount of foreign funding they are receiving and where it's coming from, because we want to make sure there's no undue influence, being levered, against the United States.
So is it best to say that agencies are making these decisions independently, or are agencies coordinating with each other?
We have coordinated. In fact, we've had a task force. The first actions that were taken, with Columbia was with the task force, which was GSA, HHS, and the Department of Education. We've also now, brought in DOJ as part of the process as well. So yes, there is a coordination with the agencies.
Okay, you mentioned international students. The president has floated imposing a 15% cap on international students, specifically talking about Harvard University, but I suppose he could mean all universities. How would something like that work?
I'm not quite sure, but clearly, Harvard's foreign population right now is at about 27%, and we just want to make sure that I think the president just wants to make sure that we're looking at making sure that students in the United States aren't penalized by allowing too many international students, to come in. And so what is that right balance? I'm not sure what it is, but the president certainly floated 15%. So let's see, as we discuss that and investigate it, how that plays out.
You're a former CEO. You came from the business world. Do you worry that less international students could make American companies less competitive?
I think there is such merit in having international students be part of our university population. As I mentioned earlier, or I might not have mentioned in this interview, but as we were talking earlier, I served on the board of university in Connecticut, Sacred Heart University, for 16 years. So I know that having international students on campus does help with that cultural exchange. And we actually had a campus in Ireland from Sacred Heart. So I really understand that exchange and how culturally it's very beneficial. So I want to make sure that we don't lose that. I think that's important for us to have. But on the same time, if you think about just last week when it was discovered in the backpack of a research student at the University of Michigan, these fungus spores that were intended to be utilized against our agricultural products, those are the kinds of things that we have to make sure that we are on guard against. And whether that would be students with this country, but most of the time, I think that would have the propensity at least to come in internationally. That could destroy your crops in America. I heard from the department, from the Secretary of Agriculture, when she was saying, that these things are so dangerous because America feeds not only ourselves, but we feed the world. And if we are looking to destroy or weaken our crop production here, it's not only for our food, for our health, but it's also our national defense. So those kinds of measures, I think we have to be very, very specific and sure about.
You previously led the Small
This is Bloomberg Business Week. For those just tuning in, we're listening right now to U.S. Secretary of Education Linda McMahon. She's taking part in a Bloomberg Newsmaker event with our White House correspondent, Akayla Gardner. We'll get back to them right now.
As we first started to talk about dismantling the department, what function would go, perhaps to which agencies. He had asked about SBA, also asked about Treasury. We've talked about HHS, perhaps looking at the IDEA program. But all of that is still part of discussion. It's not an assignment in any way, except that Treasury has taken back over the collection of student loans, as it always has done, served in that capacity. So that's not new relative to Treasury.
The reconciliation bill has a lot of changes to federal student aid, and one provision in particular asks you to basically place a cap on the amount of loans that people can borrow based on the program that they're choosing. Have you started to calculate what it would cost to have a psychology degree or an engineering degree?
I've not actually started that process yet, except in conversations. I know that Congress had started a lot of that kind of work and had done some research relative to what the mean cost was across the country to take, different courses, and should lending kind of be based on that median or that mean cost. And I think that is one of the things that I think it was Representative Fox who has worked so diligently to bring down the cost of college, one of the things that she talked about. And so that is something to look at, especially for students who can graduate so overburdened by debt and not really understanding that the profession that they have chosen could never give them the amount of income, or at least the projected or the proven stated amounts of income that they might receive to pay off that loan. And part of what we are doing with the restructuring of the FAFSA application for college is trying to work in some language eventually that will say, this is what you could expect to earn relative to this kind of degree and program. This is what this college charges for it. This is what a different college would charge for it. Put this into your calculus as to where you would like to go to school and have the biggest ROI on what you're doing. I think those are really sensible measures to be taking and how to look at it, because so many students have no ideas. I'll tell you just a little side story. When I was running for the Senate in Connecticut back in 2010, and I went to a freshman class in college, and I said, of all of you who are in this class, how many of you have student aid? 95% hands go up. I said, how many of you know how much interest you're paying on that loan? Maybe half the hands went up. I said, how many of you know the actual amount of the loan? Fewer. I said, how many of you know what kind of a job you would have to have and how much money you'd have to make to start repaying this loan? Not a single hand went up. So I think we need to provide students with better tools of assessing the value of what education they need, and do they need a four-year college? Or are they better suited for some other kind? Is it community college? Are we looking at our skill-based education? How does technology and AI play into all of that in their learning process? I think we kind of need to rethink in our whole culture of how we look at education.
Okay, my last question before we turn to the audience. Would you make those calculations public? Because it could affect what major students decide to pursue.
Oh, definitely. They'll be part of the public forum. And I think it's that's a great thing to share with with anyone who's contemplating going to class and going to college or university or community college, or however they decide to look at their career. That's, I think, vital information for them to have, and for parents.
Okay, so we're going to go ahead and take some questions from the audience. If you could just raise your hand. We just ask that people say your name and organization before you ask your question.
All right, I think we will jump out now. You can follow that event on Live Go on the Bloomberg Terminal, LIVE Go, to hear more from Secretary of Education Linda McMahon talking with our White House correspondent Akayla Gardner at a Bloomberg Newsmakers event. A lot of talk there about student debt, and it's a concern for her and this administration, just as it was the last administration. But of course, they're going to come at it from very different angles.
That's right. She also said that she would make calculated future salaries public. And again, a lot of that talk here on student aid. I'm just reading some of the headlines out of this event. Linda McMahon saying that it would be sensible to tie student aid to predicted future income, and they don't anticipate more department cuts.
No, a lot of talk as well about Harvard and the relationship between that great school and the administration. It seemed like she was pretty positive about that relationship, saying that they are making strides with Harvard and with Columbia. And she said she does want to see those universities get funding for research that she thinks is important. So I think she pretty much conceded that the funding withdrawal is a bargaining chip.
That's right.
All right, we have a lot to cover on this program. Just want to quickly show you or tell you about markets, because we have seen the Dow Jones Industrial Average turn down right now. We're still looking at gains on the S&P 500, but not a lot of big movement. Let's get over to Charlie Pellet. He's got a Bloomberg Business Flash for you.
I thank you very much, Matt and Emily. Absolutely right about that. Dow did dip into negative territory moments ago. We had red on the screen, but right now up by 7. Bottom line here, we got the Dow fluctuating between gains and losses. S&P 500 index higher by 14, back at 6,019. That is a gain of 0.2%. NASDAQ Composite up 41, up 0.2. NASDAQ 100 also higher by 0.2%. And the Bloomberg Mag 7 Index up now by 0.7%. The 10-year at 4.47%, the 2-year 4.00%. Investors closely monitoring trade discussions between the U.S. and China. We'll keep you updated throughout the day here on Bloomberg. We've got spot gold down $3 the ounce, down 0.1%. West Texas Intermediate crude down 0.2%, 65.13 a barrel on WTI. An electrical fire at Grand Central Terminal in Manhattan has halted Long Island Railroad service as about 100 firefighters worked for several hours through thick smoke to put out the flames. Recapping, stocks higher, S&P up 13, up 0.2. We've got the Dow up by 3 points. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks very much. Matt Miller here in the Bloomberg. Are we in the Bloomberg the Bloomberg Business Week studio? Sometimes I get lost. I don't know. It's a big building, right? We have 29 floors here. I'm here with Emily Grafeo. We're in for Tim and Carol. And we have with us right now Josh Isner, president of Axon, on the latest enhancements in public safety technology. They make taser guns. They make body cameras, but they make a lot more than that, going beyond hardware into software as well. Josh, great to have you on the program with us. Talk to us first about the kind of non-lethal tools that the police and, I guess, National Guard have to combat rioters, if you want to see them that way. We've heard a lot of talk out of the White House about an insurrection in Los Angeles, and obviously nobody wants fatalities. So what kind of equipment are you providing to these law enforcement officers to deal with unrest?
Yeah, certainly. And we'll probably, at least I will do my best to kind of stay out of the politics of the situation, focus on how we can keep people safe. And ultimately, that's what the taser does. It's a less lethal tool, shoots out darts. 2 of the darts connect to your body and conduct energy at the same waves that your brain sends to your muscles. And that's what causes your muscles to tense up. After 5 seconds, it's over and the police take you into custody. And so, in greater LA, all of those departments, we're proud to be their partner in deploying less lethal tools to them. And they have the tools, to hopefully safely de-escalate some of what's going on.
Josh, have you seen demand pick up? It's very short term, but just in the last several days, have you seen that demand at least coming from LA?
Not particularly, only because the demand is already there from all of those customers. They certainly have seen riots like this historically. They've seen other, applications for these. Generally, when you have any kind of physical threat to the officer with someone holding a knife or sometimes even something, more deadly than that, there's very clear, established use cases for using a taser. So we're really proud of the fact that it didn't take something like this for our customers to already trust us and believe that there are use cases for our products.
I will say that I have tased myself on a few occasions.
That felt good.
Yeah, I can't relate to that.
I have to say that. So years ago, I was in a job, like a summer job, doing security, and we had to use these tools. And our boss said, "I want you to try it on yourself before you use it on anyone else." And I never actually ended up using it on anyone else, but I'm still here to talk about it. So, Josh, I wonder about the importance of AI in the tools that you provide. Emily and I were talking earlier about, and I don't know that we're there yet, but if you could use AI and facial recognition, for example, on a body cam or in smart glasses, then you'd give law enforcement officers maybe a little bit of an advantage. Have you thought about, I'm sure you've thought about, have you started to develop tools like that?
Yeah, so right now we do have a lot of AI functionality built into our products and our cameras. I think the tool we focused on first with the body camera is actually offloading all the audio transcripts of the videos that take place and letting AI analyze those and suggest a first draft of the police report to the officer. There are some sexier use cases of AI, like the facial recognition element you mentioned, but the use case I just mentioned literally takes the officer's administrative workload down from 50% to 20%, and thus an officer ends up in the street with far more of their time, days of a week that we're giving back to the officer. And so our early AI tools are much more focused on productivity, such that officers can do what they do best at more often. But I think as we build out our next generation body cameras with more, frankly, battery power, computational power, better connectivity, you'll see some of those other AI products at the edge start to make their way into the body cameras. I think first it'll probably be license plate recognition, but over the longer term, once we can prove that these facial recognition models are rid of inherent bias, that's when I think we end up launching a product like that.
Josh, the ACLU has already brought up concerns about the bias inherent in AI, the hallucinations that AI is capable of, and I think has issued complaints about use of AI in your software to draft police reports. How do you respond to that? Because, of course, it can make mistakes, and if you see a first draft, even if you're a trained police officer, that can also alter the way you think of what actually happened. So is it maybe doing as much harm as it does help?
No, I wouldn't put it that way. And look, before I get to kind of the process we run, I think it's reasonable to expect like the ACLU is never going to be doing cartwheels about police technology and what police, products they use and so forth. And so I do think we have to remember a little of that. And our approach to this is something called our EEAC, which is our Equity and Ethics Advisory Coalition. And this is a group internal to Axon of folks that come from the world of activism and don't see the issues the same way that the police do, and see issues more like the ACLU does. And they're part of our product development process. So we have gates along our product development where we check back in and do a full product deep dive with our EEAC. And they ask those questions, and they want to see it demonstrated that these models are rid of bias and so forth. And that's been a very, very productive relationship for us with our EEAC. And it really does validate internally, our product designs and motivations to make sure that, hey, when these things hit the market, the folks who are the most critical voices in the room will have the data to share with them about the process we took, to arrive at these products. And you can read a little more about this on axon.com. It's called our responsible innovation framework, and it's on there, and you can see exactly how we think about some of those issues.
So Josh, your company started for primarily law enforcement. I'm wondering if you're seeing more demand pick up from civilians, maybe civilians worried about crime, particularly post-pandemic. Have you been seeing more civilians, and what products specifically are they looking for?
We do sell a consumer taser device, and it has picked up since the pandemic for sure. It's still a relatively small part of our business, but over the next couple of years, I think we'll be updating our product portfolio in the consumer space, and we're really excited about the future iterations of the product. Ultimately, our core market is police, and we wouldn't want it any other way. We're honored to work with police, and we think our products just have such great product market fit in that market. But in consumers, where folks don't want to carry a gun and they're looking for other alternatives that can protect them, but not in a lethal fashion. I think the taser is a viable alternative. So we're excited to talk more about that in the coming years as we launch some new products in that space.
All right, Josh, thanks very much for your time. Really appreciate it. Hope we can get you back. Josh Isner there is the CEO of Axon, and we want to get to the president of Axon, and I want to just get to quickly his stock. Emily, I'm looking at the comp chart, and I always look at the COMP function on the Bloomberg terminal, which automatically defaults to a 5-year time span, and I feel like that's a great default setting. It's up 637% over the past 5 years. So absolutely crushing it, especially over the last couple of years. Just real appreciation in that asset.
Yeah, that's compared to an 88% rise for the S&P 500. So big outperformance, and a lot of that gain just coming within the last year or so.
All right, we are going to take a break here. When we come back, we're going to talk to the CEO of GLG on the value of human expertise in the age of AI. This is Bloomberg Business Week Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing as traders closely monitor trade discussions between the U.S. and China in London. We'll keep you up to date with any developments. The S&P right now up 16 at 6,022. That is a gain of 0.3%. We got Intel leading the S&P higher. Intel, by the way, up 7.6%. The Dow up 34, now up 0.1%, while NASDAQ is up 53. That is a gain of 0.3%. Our Mag 7 index higher by 0.8%. 10 years currently yielding 4.46% with a 2-year 4.00%. Gold, little change, down $2 the ounce, 33.22, drop there of 0.1%. West Texas Intermediate crude down 0.9%, 64.68 a barrel, and Bitcoin at 109,000 even right now, up 0.2%. Novo Nordisk shares higher after a report that activist hedge fund Parvis Asset Management has built a stake as the Danish drug maker struggles to keep its lead in the obesity market. Novo Nordisk up now by 5.8%. And Gilead Sciences says federal regulators have placed on hold trials of a new experimental once-weekly HIV drug combination therapy after white blood cell counts dropped in some of the patients. Again, recapping here, stocks higher, S&P up now by 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you, Charlie. So, Matt, I feel like everyone right now that's trying to run a business or trying to do any kind of enterprise work is talking about AI, the growth of artificial intelligence, how it's going to impact their employees, the way they recruit, the way they plan, everything related to running a company. And we're going to talk now with someone who can discuss all of this, the value of human expertise in the age of AI. Gemma Postlethwaite. She is CEO of GLG. She joins us now in New York City on Zoom. Gemma, thanks for being with us. Maybe we could just start, just give us an overview of what GLG is.
Hi, Emily and Matt. Thanks so very much for having me. So look, GLG invented the expert industry 26 years ago. Very simply put, we exist to connect our clients to specialized, trusted expertise, typically at critical moments in decision making. So our clients are global Fortune 500 companies, think global banks, financial services firms, consultancies, technology companies, healthcare companies, who typically engage with us when they are, for example, trying to gain conviction around an investment thesis, doing due diligence on an investment opportunity, or in the corporate landscape, it may be as simple as trying to understand the right price point of a new product offering that they're considering launch. So they come to us for access to human expertise, meaning information they can't find anywhere else than exists in the minds of human experts. And that's what we do to connect them to those experts. And we do it through multiple mediums. So those expert interactions can be one-to-one calls on Zoom. They can also be surveys. They can also be events, a roundtable, for example, where you can sit with an expert and some of your peers and understand a critical topic that's at hand of the day. And increasingly, every expert interaction that occurs with a client can turn into an opportunity for a consulting project for that expert with the client, or actually an executive placement. So increasingly, we place our experts on due diligence teams at private equity firms, or even on boards of private equity backed portfolio companies, for example.
So how much longer will you be able to place these experts before companies just go to artificial general intelligence for that kind of expertise?
Great question. The reality is, and the most simple answer to that is that most of the expertise that resides in human beings does not exist in the open, public domain and on the internet at large. And so AI models that are trailing public sources of information and content to constantly serve up information to clients is one medium. But we exist to bridge the gap of, beyond getting smart from general information and sources that are very often not cited, to the expertise that exists only in my head, in your head, and that can only be tapped into in an actual interaction with that expert. And that is fresh and the latest, also most relevant information. So we're focused on what we talk about a lot about being AI enabled, but really we're in the business of HI, human intelligence. And we think that is becoming increasingly valuable. And our clients tell us every single day that they are placing an even bigger premium on the ability to get at trusted sources of information. So when you engage with a GLG expert, they have been extensively vetted and screened from a compliance perspective to make sure that they are not only who they say they are, but that their expertise is in fact true and real as well. And so our clients come to us because they know that when we're making really, really critical decisions, they're not going to bet on something they found in OpenAI. They need to validate that with a genuine human expert whose ideas, thoughts, and experiences don't live in the public domain.
Well, I hope that stays true for as long as possible as well. Emily and I will be out of a job when AGI comes to fruition, but some leaders, the CEO of Anthropic, have said AGI, which is, by the way, artificial general intelligence is something different than ChatGPT, right? It's massive in scale. It would be machine level intelligence on par with humans. Sam Altman of OpenAI has said that they'll know how to build it in just a few years from now. Obviously, Mark Zuckerberg at Meta is looking to hire the 50 smartest people in tech to do it sooner than later. Are you using technology, or are you focused on boosting the technological aspect of the services you provide as well, so that you can stay ahead of this wave?
Absolutely. In fact, all the technologies that you just referenced, we are using actively inside of GLG to deliver our services in an even faster and more accurate way. So, for example, the business we're in is speed to quality of matching an expert with a client need. And so AI is helping us understand, identify, and distill client needs at a much faster clip than historically has been done. That's making us more accurate at matching with the right expert and asking the expert the right questions to qualify them for a client project, for example. So we are using AI in all those ways. We're also using agentic AI capabilities in order to be able to extract human intelligence at greater speed and deliver it to our clients in all different mediums. So we too are doing all those things. What's fascinating about what we're seeing with OpenAI, and in fact, many new entrants who are trying to think about different ways to disrupt all kinds of workflow in the information services world today, is that they keep coming back to us as the source of access to that human intelligence that they can't find anywhere else. And the reality is that if you want to get at trusted human expertise, then the business that we're in of vetting, screening, and making sure that our experts are truly compliant and that the right kinds of expertise is being shared in the most compliant way remains a significant barrier to entry, candidly, for many of these technology players.
Hey, Gemma, just 30 seconds left. I'm wondering if you could just give us maybe an example or two of some of the biggest asks clients are having right now. Are they asking for more geopolitical strategists, more AI expertise? Like, what are your business clients really looking for expertise in right now in 2025?
Yeah, great question. Well, as you can imagine, many of the topics that you've just touched on, geopolitics, tariffs, supply chain implications, all the things that are creating the uncertainty that everybody is navigating are extremely topical. But our clients are also trying to understand those in the context of, if you're in private equity, it might be in the context of an existing portfolio company that you're trying to help navigate through. And they're continuing to look for opportunity as to where to invest in this new world that we're operating in. AI remains a critical topic in that area of investment as well, as is still many innovations that are coming out of the healthcare sector and technology at large. But I would say AI remains topic number one, fastly followed by geopolitical and tariffs, et cetera. just as you'd imagine in this.
Gemma,
in this
great to have you on the
moment.
program. Gemma Postlethwaite there, CEO of GLG.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
Matt Miller here with Emily Grafeo. We are filling in briefly for Carol and Tim. When they travel, usually they like to take a couple days off, you know, so that they can adjust, acclimatize to the time zone. And then they like to not do the first hour. Sometimes they don't do the last hour, you know, just to be a little bit more chilled out about the whole thing.
They take it easy. They prepare. Like
I know
they want
Carol,
their 1 hour to be really
Carol
good.
does like to prepare a lot, and Tim he has this spa routine that he does.
Right.
Just
Deep
to get
breathing.
in great shape. I want to take a look at some of the stocks on the move today, and we are joined for that by one of our favorite reporters from the Cross Asset Desk on the BN side. Vildana Heinrich joins us. Vildana, what are the big movers you're watching in a market that really is kind of like a wait and see kind of mode right now?
Who are your other favorites if it's not me? Just me on the Cross Asset team, right?
I love Isabel Lee. I love Denita Zakova. My co-anchor Katie Greifeld sits with you on your desk.
And you're forgetting about Emily.
And of course, Emily Grafeo.
That's why I was pointing it out.
In fact, I'd like to do a show with all of you. Matt Miller and the Cross Assets team.
Let's do it.
Great.
I would love to do that.
So stocks.
Some stocks that we're looking at. We're looking at J.M. Smucker. Shares are down 15% today, so a big drop. And the company said U.S. tariffs are increasing costs in its coffee business in particular, and that's weighing on its profit for the fiscal year. J.M. Smucker owns Folgers and Cafe Bustelo. Bustelo, I'm not actually sure how to pronounce it. I don't drink either one. I don't know if you do, Matt. But
Folgers is like an old
A classic.
Classic, right? I think there's something about the morning is right when you get up with Folgers in your cup. I can't remember the tagline, but for me, Smucker's is all about Uncrustables. This is the like pre-prepared peanut butter and jelly sandwich that goes into your freezer. And I have bought a box to see if it's good because Katie tells me they're delicious. They look incredibly unhealthy. I haven't opened one yet, but apparently the NFL eats literally hundreds of thousands of Uncrustables.
I wouldn't doubt it because it has peanut butter in it too, right?
Yeah.
Yeah, they need the protein. They need the protein and the sugar. But anyway, the company did generate about a third of its revenue from coffee last fiscal year and raised prices for the beverage in May. It expects to boost them again in August, and overall prices will be up about 20% this year, Smucker said. And so this is just an interesting story to me because obviously we're watching how tariff policies are actually impacting companies on a company-by-company basis, and just being able to see it and actually hear from the companies on the impacts, I think is important.
All right, I think you already said, but the ticker is SJM. We're super serious about the tickers because this gets turned into a 5-minute podcast, and investors need to know what to type on the Bloomberg terminal. Up next, we've got, there's an analyst out there who was asleep throughout 2023 and 2024 and finally woke up to the fact that there are GLP-1 drugs out there, and if you take them, you're less likely to need a Big Mac, right?
Possibly. Ticker, MCD.
Thank you.
So we have McDonald's shares down about 1.5% today, following a sell rating from Redburn Atlantic. It's the sole sell rating for McDonald's, but this analyst is citing changing consumer patterns due to weight loss drugs and inflation, as you just mentioned. You're right, the GLP-1 story has been around for quite a bit, but what these analysts are saying is that McDonald's could see as much as a $428 million annual impact to revenue. So that's a big hit for, obviously everybody's, this is another theme people are tracking, especially when it comes to the food and beverage companies, how much GLP-1s are having people
This is a theme, to be
back.
honest with you, that I had forgotten about. I mean, we talked about it so much for the last couple of years that I feel like everybody who wanted to get GLP-1 drugs and could be approved by insurance has already gotten them. So
I also feel like McDonald's, the company's been around for so long and it's survived through so many like health crazes and phases that Americans go through, like the low fat movement or Whole 30. Now it's GLP-1s.
I'm just shocked that there's only one sell rating out of 41 analysts on the stock. Listen, Circle CRCL is...
That's a new one.
Yes.
New ticker.
New to the stock market.
That's right.
But they have crushed it.
Until today. So it is a newly public company. Just as of last week, it had a blockbuster debut last week. Up some 270% from its IPO price through Monday, and then dropping today. But this one is super interesting because ETF issuers are already rushing to put out filings based on Circle. So we have at least 3 separate filings from 3 separate issuers: Bitwise, ProShares, TRX. Maybe we'll have more to come. We'll see about that. But those 3 have so far filed for Circle-based ETFs, and it's one of the BI, the Bloomberg Intelligence analyst, said it's an alignment of stars because you have a crypto company that's in super high demand. It's leverage, and also the market is hungry for IPOs.
Yeah,
so
because Congress is passing stablecoin legislation. This is what they do. They kind of own the market now, and you could have bought the shares for $31 4 days ago, and they're trading for $107 right now. Vildana Heinrich, thank you very much for that. I will say that if you're watching us on YouTube or listening to us on radio, Bloomberg's Business Week Daily continues with Carol and Tim. They're actually going to come to work next on location live at the Cisco conference in San Diego. From Emily and me, this is Bloomberg.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. The White House and California continue their standoff over the deployment of military troops in the wake of protests there over immigration raids. Linda Kenyon has the latest from the White House.
President Trump has sent thousands of National Guard troops and 700 active duty Marines, saying it had to be done.
If we didn't get involved right now, Los Angeles would be burning.
Speaking in the Oval Office while unveiling new plans to quell wildfires, the president added the protests in L.A. were akin to a different kind of wildfire.
Big problems were ensuing.
California's governor and the mayor of Los Angeles said the protests were under control, and the president's actions not only exceeded his authority but inflamed the situation. Linda Kenyon, CBS News, Washington.
CBS's Scott MacFarlane reports from Washington. There are others who feel California is being unfairly targeted.
The visible presence of the deployment of the National Guard in Los Angeles is raising criticisms from survivors and victims of the U.S. Capitol siege in 2021. Critics say the National Guard was delayed that day. The president was slow to order them, which contributed to the 100-plus police injuries and millions of dollars of damage at the Capitol.
Defense Secretary Pete Hegseth was on Capitol Hill today answering questions from lawmakers who demanded more details about the troop deployments. Representative Rosa DeLaro's criticism was over much more than that.
Your tenure as secretary has been marked by endless chaos. Your first day in office, the inspector general, whose job is to investigate waste, fraud, and abuse, was fired. Weeks later, you dismissed the chairman of the Joint Chiefs of Staff and 5 other admirals and generals.
He was called to testify about the budget, but many lawmakers complain they haven't yet gotten details about the proposed defense budget, which President Trump has said would total $1 trillion. New Jersey is holding its gubernatorial primaries today. They may be a referendum on Trump's first few months in office. Correspondent Michael Wallace has that.
6 Democrats and 5 Republicans are running to replace Democratic Governor Phil Murphy. President Trump has endorsed Republican Jack Ciattarelli and joined him in a recent tele-rally.
It's being watched actually all over the world because New Jersey's ready to pop out of that blue horror show.
Dr. Matthew Hall, chairman of the Political Science Department at Seton Hall University, is not surprised Trump is looming large in the race.
We're so polarized right now that you have groups of people who think that Donald Trump walks on water and groups of people who want to drown him in that water.
Michael Wallace, CBS News, West Milford, New Jersey.
On Wall Street today, investors have been looking for any sign the U.S.-China trade talks are going well or not. The Dow currently up 100 points. This is CBS News. There's a new push to hike the federal minimum wage, as Steve Kathan reports.
Missouri Republican Senator Josh Hawley is set to introduce a bill to raise the federal minimum wage to $15 an hour, a position that aligns one of the most conservative Republican lawmakers with some of the most liberal members of Congress. The measure would raise the federal standard starting next year and would also call for an increase in subsequent years to match inflation. Vermont Democrat Peter Welch is signed on as a co-sponsor. The federal minimum wage currently sits at $7.25 an hour and has not risen since 2009. Steve Kathan, CBS News.
The Wall Street Journal's reporting the Departments of Homeland Security and Justice, among others, kept tabs on foreign visitors to Elon Musk's properties in 2022 and 23. The investigation predates the current Trump administration, and its current status is unknown. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. We are live in San Diego. We're still on the West Coast because, man, we are not finished.
We are not finished. We have a flight back tonight.
We do.
We've been here for about a week.
We have.
It's been great.
Yes.
I'm a little surprised at just how massive this Cisco Live event is. It's been going on for decades. I've never been here.
I know.
This is huge. I mean, this is like, I'm getting vibes of like CES in Vegas.
Yeah, it's totally that. It's just like hall after hall after hall, and it's folks that are talking about AI. They're talking about security. They're talking about infrastructure. They are talking about anything and everything when it comes to technology, what it needs for networking. So conversations all around us, a bunch of keynotes. What we're going to be doing really over the next 2 hours is a deep dive with the Cisco team, who are dealing with all of this at different levels, what it means for AI in the workplace, what it means for the AI build-out, what it means for Cisco, which is a company that's been around for a long time, but we're in a different era. So what are they doing in terms of growth?
Yeah, and some of the executives who we're speaking to have been at Cisco for 2-3 decades. So they've seen a lot of different cycles, very interested in sort of the holistic view about where we are when it comes to AI. How does it compare to other revolutions that we've seen in the tech industry? So looking forward to that. We're also, of course, paying attention to everything happening around the world. Just to the north of us in Los Angeles, of course, we're going to get an update from there in just a few minutes. Also across the pond, over in London, where U.S. and Chinese officials are negotiating.
I've got my screens up on the Bloomberg, and we have seen equities take a leg up. We're pretty much at our highs of the session, folks. They're up almost 0.6% on the S&P 500. Commerce Secretary Howard Lutnick, a headline just crossing a moment ago, expectations that these talks between U.S. and Chinese officials that are happening in London will continue into the night. So it sounds like they're trying to get something hammered out. As we know, this is not an easy process. So we're going to talk about that. In terms of some of the folks we're going to be highlighting from Cisco, DJ Sampath, he's VP of Product AI Software and Platform. We're going to talk about AI generally. And then on Tech in the Workplace, we've got Anurag Dhingra. He's Senior Vice President and General Manager at Enterprise Connectivity and Collaboration. So he's going to tie that together for us.
We also got a great trio of executives coming up on the program. We're going to talk overall Cisco strategy and the challenges that are slowing AI innovation and adoption today. Jeetu Patel is President and Chief Product Officer. You might remember him. We spoke to him back in February. Right. He was at Bloomberg HQ for the Bloomberg Intelligence AI event. He's back here in San Diego.
Can't wait to check in with him. Frank Katsoudas, also very familiar to our Bloomberg audience. She's joined us several times. EVP and Chief People Policy and Purpose Officer on the stakeholders, all of them when it comes to AI and tech strategy. And then we're also going to check in with Mark Patterson. He's EVP and Chief Strategy Officer. He is the next CFO at Cisco. So we're going to talk a little bit about M&A. We're going to talk about emerging technologies, innovation. What are the things that are going to create growth at Cisco for years to come? But first up, let's talk about that trade. We've got a rally underway. At least we are pretty much at our best levels of the session. Back to New York we go, and to Charlie Pellet.
Hi, thank you very much indeed. 52 minutes to go ahead of the closing bell. London to Los Angeles, we've got you covered. Do want to begin, though, with a headline out of D.C. President Trump poised to repeal Biden's curbs on power plant pollution. The Dow, the S&P, NASDAQ are all advancing right now, with the S&P up 34, 6,039. That is a gain of 0.6%. Dow Jones Industrial Average up 120, higher by 0.3%. NASDAQ up 128 right now, up by about 0.7%. Our Mag 7 index up 1.2%, with the 10-year 4.47%, the 2-year 4.00%. Gold, little change, flat on the day right now, 33.24 the ounce. West Texas Intermediate crude down 0.9%, 64.71 a barrel. And Bitcoin now at 109,495 on a Bitcoin. Investors sending stocks higher as the U.S. and China resume trade talks. Again, repeating the headline from Commerce Secretary Howard Lutnick. He says he hopes China talks will end this evening. Those talks scheduled to resume minutes ago in London. As for the market backdrop, Seema Shah is Chief Global Strategist at Principal Asset Management.
Earnings are good right now, but we are expecting there to be a slowdown. So come the end of summer, I think there could be even more market complacency underway because the data hasn't yet weakened. And then when it finally does, as I said, in late Q3, early Q4, that to me is a bit of a a pothole potentially for markets.
Principal Seema Shah interviewed on Bloomberg Open Interest, keeping an eye on McDonald's shares now down 1.3% as the rest of the market moves higher. This after Redburn Atlantic downgraded the company to a sell rating, citing concerns over shifting consumer patterns due to weight loss drugs and inflation. McDonald's down now by 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, Tim Stanovic live here at Cisco Live 2025, and we're going to be kicking off our coverage from the event in just a moment, but we want to get to some of the day's headlines. We do know talks between the United States and China extending into a second day and extending later into the day over in London, into the evening, with financial markets continuing to really watch very closely, although I mentioned an uptick. Maybe there's some hopes, some expectations that we could see some details ironed out a little bit later on today. Let's get an update. Let's head to Bloomberg News Senior Editor for Technology and Strategic Industries. He's our Mike Shepard. He's over in D.C. Hey, Mike, so what's your read on this? We did just hear from the Commerce Secretary about the talks going into the evening. Is that a good sign?
Well, you know, when you take it from Howard Lutnick, he is also saying that the talks went really well so far. And keep in mind, they are in their second day, and they have been going all day today. They began at 10:40 a.m. local time. It's now 8 p.m. The two sides broke first for lunch, and then around 5:30 p.m. local in London for dinner, and they are heading back to the table right now. We saw the Commerce Secretary right before he went back into the room with his Chinese counterparts, indicating that talks had gone well, but offering very few specifics about what exactly made him draw that conclusion and what sorts of concessions and agreements might be on the table from either side. Remember, and this is interesting, that you are in San Diego with a lot of tech industry figures this week. Tech is really at center stage in the conversation there. China is very uptight and concerned about increasing export controls by the U.S. And conversely, negotiators from Washington have expressed chagrin over restrictions on exports of rare earth minerals to U.S. customers, especially the auto industry, but also tech as well.
So, Mike, when we think about how this could end up, and look, you know, the devil's in the details. You mentioned a lot of the issues that are being haggled over as we speak. What's the ultimate end game look like here for these two countries? Is it a détente? Is it a trade deal? Is it more talks that are agreed to later? I'm just trying to get an understanding for investors about setting expectations here.
Well, Tim, you're asking the right question, and certainly is the one on the mind of everybody on Wall Street and on Main Street, too, because for businesses, there is a lot riding on what comes out of these conversations. Now, let's turn the clock back a month. This is when the two sides first met in Geneva to try to cool some of the passions that had been kindled by the Trump tariffs back in April that just escalated in this tit-for-tat battle and went as high as 145% on Chinese goods and something almost comparable on U.S. goods going into China. The two sides have set those high tariffs aside pending further talks, but after the discussions in Geneva, there was a bit of a breakdown. The U.S. accused China of slow-walking its promises to deliver those rare earths more quickly, and China was upset about a new round of export controls and restrictions that have been imposed following the meetings in Geneva, with both sides trading accusations of violating the spirit of that détente. So really, Tim, the starting point is to try to get back to square one from Geneva. Deal with a small d, and that really is more getting back to cooling tensions between the two sides so that they can work maybe eventually toward a deal with a capital D, something that would probably take far longer to carry out.
Yeah, that's what I wanted to get into, Mike. I mean, I think we've had conversations with you and other members of our DC team and other folks. I mean, any kind of real lasting deal, trade deal between the United States and China, it's going to take years. Is that fair to say that that's still kind of what we're looking at here?
It would take a significant investment of time, Carol, and you hit the nail on the head there with the amount of investment from each side that it would be required to gain an understanding. The differences between the world's two largest economies on matters of trade and on global security are really stark. And it's a striking contrast with other U.S. trading partners like Japan and India and even the European Union that are much further along in their trade discussions for all the time that the U.S. has been spending with China over the past few days. We really still have a lot of ground to make up with officials in Beijing. And the difference is when you start to really unpack it, they go far beyond just the questions of tariffs and even export controls and rare earths. It also touches on sensitive areas like the South China Sea and even Taiwan, where those differences between the two, the world's two leading economies are really, really distinct and will take years to resolve and will likely get pulled into the conversation as well.
Mike, I'm wondering, we spent a lot of the last couple of days, and indeed Friday as well, talking about rare earths as a bargaining chip. We talked about it with RJ Scaringe, the CEO of Rivian, last week at Bloomberg Technology. We talked about it with Gracelyn Baskrin at CSIS yesterday. She joined us from Johannesburg. What is the U.S.'s rare earths? Like, in the sense of, what is the powerful bargaining chip that we have that could counter the powerful bargaining chip of rare earths that China has?
Well, the bargaining chip, Tim, and this is a great question, it really is on the advanced tech side, it's on the semiconductor side, and it's on allowing China a little bit more access to some of the technology that it needs to be able to develop its domestic high-tech industry, especially in areas like artificial intelligence. And yet, this is a bridge that even officials in the Trump administration are reluctant to cross. They do not want to let Beijing gain any further ground in this area of AI, which is such a focus of competition between companies in the U.S. and their rivals in China and the national governments, too, because it is seen as a national security issue by both sides, because AI, of course, has the civilian applications. We talk a lot about, some of the agent-driven models that could help us live our lives better, or so we're told, but there is also a significant component that concerns national security, the ability to develop advanced nuclear weapons and bioweapons and other weapons of mass destruction that AI could be used for, and that is of grave concern. Of course, the cybersecurity question as well. So how far the U.S. will go in allowing China more access to some of that technology? They've already indicated that allowing China to resume purchases, for example, of NVIDIA's H20 chip, a semiconductor designed for the Chinese market to comply with earlier U.S. export curbs, that's off the table. The H20 has been banned from sales to China, and NVIDIA has decided to scrap that lot, taking a $4.5 billion loss there. So we do see something of a line emerging. Now the question is, will there be enough of a concession to allow rare earth sales to resume here?
Mike, one last quick question, just 30 seconds here. Is it safe to say that when it comes to the United States and China, we are getting ready for a very big, different chapter when it comes to the relationship of these two? They're not necessarily as friendly foes as maybe they were. They're really, really sharp competitors. Just quickly.
Yes, the competition is stark, and it is very much part of the domestic agenda of President Xi Jinping, just as much as it is for President Donald Trump, to assert national superiority globally in technology and certainly economically as well.
All right, good stuff. Mike, thank you so much. Really appreciate it. Always great in tying together certainly U.S.-China relationships and then technology, which we are surrounded by here at Cisco Live 2025. We're going to get to our first interview in just a moment. Bloomberg's Mike Shepard joining us from D.C. That is the latest when it comes to U.S.-China relationship and the tense relationship that is. But now we've got to get to some of the tensions that we've seen certainly here domestically.
Yeah, happening just north of us in Los Angeles, the Trump administration escalated its response to anti-deportation protests in L.A. Marines deployed by President Trump arrived in the Los Angeles area with orders to protect federal property and officers as the city is gripped by tensions over anti-deportation protests. With an update, we go back to Los Angeles, where we find Sarah McGregor, national team managing editor for Bloomberg News. She joins us from our Los Angeles bureau. Sarah, we spoke to you yesterday, and I think a lot of our listeners and viewers heard that conversation. And I guess I want to start with an update on, obviously, we know what the Trump administration has done, what's happening on the ground when it comes to law enforcement. But what about what's happening on the ground when it comes to demonstrations, when it comes to protests? What is the status of those right now?
So we did see some violence, some sort of flare-ups, I guess, around the city overnight, including actually in other cities across the U.S. But you know, again, we woke up in the morning and the protesters or vandals had sort of dissipated. We did hear a figure that over 90 people have been arrested overnight, so there was some police action on that front. But again, the city's sort of calm as we wake up in the morning, and so it's definitely a contrast as we hear that the Marines have arrived. We don't know exactly where they're stationed yet. According to Karen Bass, the mayor, she also doesn't know. She's not in touch with the Trump administration, nor is the LAPD chief about where those Marines will be deployed. But you know, it's a bit of a split screen that we're still seeing in terms of, you know, the calm on the streets relative this morning compared to sort of the heavy hand of the law that's come down from the Trump administration with the Marines and the California National Guard on the streets.
So well said. Sarah, I was listening to some of your coverage earlier today, and you said, you know, in terms of the Bloomberg office in Los Angeles, it's not like there's anything happening necessarily around you, right? I mean, you would think if you hadn't read the news, watched the news, you'd think it was a normal day.
Absolutely. Sort of across the city, I think, you know, there are large areas where this is not affecting people. But of course, we are still hearing reports. Just now I was reading about one on social media that said at a food processing center in the state, there's apparently a raid going on. We've heard that at least 20 people who wash cars have been arrested. So there's these raids going on that we're not getting that much information about who's being targeted, how many people are being detained by ICE. And again, these were the raids that happened on Friday that really sparked these protests to begin with. So it just feels like a very tenuous situation right now where these raids are ongoing. We do have troops on the ground. And, you know, we heard from Karen Bass that she is not coordinating with the Trump administration. So how much, you know, information is flowing between local law enforcement and, you know, the federal officials? And hopefully there isn't a breakdown of communication there that, you know, leads to a sticky situation either.
A lot of our conversation yesterday focused on Governor Gavin Newsom of the state of California and his relationship or lack thereof with the Trump administration. You mentioned we don't know the coordination that's happening between the mayor of Los Angeles and the Trump administration. What's the latest when it comes to Governor Newsom and the Trump administration?
We did see a bizarre sort of exchange today where Trump told reporters in the Oval Office that he had spoken to Newsom yesterday, and within minutes Newsom had tweeted that he hadn't spoken to Trump, nor had he even gotten as much as a voicemail. So, and Karen Bass, the mayor, has said she has not spoken directly to Trump. I don't think she's tried to reach out, but she hasn't spoken to them. So there's sort of this confusion, I think, even at the official level too, of I guess the politics behind it, and you know, I guess everyone hoping that cooler heads will prevail and that everyone will be able to come up with a solution.
Last thought, I don't know, you know, how are you guys thinking about kind of what happens next? Because it doesn't sound like there's a lot of communication between the government and certainly officials, the mayor, but who knows? I'm just curious, what insight are you getting between your sources or from your sources when it comes to the communication that you're seeing? What is, again, we keep reminding everybody, feels like a struggle between federal versus state.
Absolutely. This has been a really unpredictable situation. So I think what we do know is that the city has said, you know, if the unrest grows, and they didn't say whether it's as early as tonight or down the road, they'd be willing to put a curfew in or take more aggressive measures. So I think that's what we're watching out for right now, whether the troops get involved or it just remains LAPD, Sheriff's Office, local forces. You know, where does this end? Do protesters keep coming out? Do they grow in size? You know, does it get out of hand or feel out of control at any point? And I think everyone's sort of on the edge of their seat waiting to see what happens next. And a lot of this action has been happening at night. So I think as the sun falls, that's when we start to see, you know, people come out.
Right.
More on the protest sort of vandal side of things. So we're sort of waiting to see tonight what happens next.
All right, Sarah, as always, thanks again for the update. Sarah McGregor, National Team Managing Editor for Bloomberg News. She is there in our bureau in Los Angeles. All right, folks, we do want to kick off our coverage here in San Diego. We are at Cisco Live 2025. They've been doing this for a long time, and it's kind of our first time, and it's just blown us away about how big it is. We've got a great guest because they are talking a lot about AI, and rightfully so. Yeah, DJ Sampath is Vice President of Product, AI Software, and Platform at Cisco. AI, a huge theme, DJ, here. I mean, you look around at any of the trade floors, and like this is the massive
massive and dominant theme here. I want to talk a little bit about the news that we got earlier today that Cisco is updating its networking and security products to make AI networks speedier and more secure. It's part of this broader push to capitalize on the AI spending boom. Talk to us a little bit about what prompted this, and we're going to speak about it throughout the program because this is some big news to emerge. But what you're hearing from customers on the customer front, where we are in the AI moment, and really what prompted a move such as this.
Yeah, Tim, Carol, thanks so much for having me. You know, there's a huge tectonic change that's happening right now, right? If you think about the moment where ChatGPT came into our zeitgeist in November of 2022, we've now started understanding that AI is here. It's not a buzzword. We go to ChatGPT for a lot of questions, existential ones, like, should I take this job? Should I not take this job? A lot of interesting things that you start to see that are being broken down very systematically by AI as a thought partner, right? But what we're seeing now is that evolution from AI being an application or a chatbot to an agentic AI, right? So you've got agents that are autonomously going out and performing tasks for you. And as you start to think about that, what's going to happen is your workforce, which has now gotten, 100% of humans, is going to be augmented with, AI applications, AI agents, robots, and humanoids. In fact, you're going to start to see that happen. And these robots and humanoids are going to have AI models sitting inside of them. So what we're seeing is that you're going to start to see a lot of change in the way these networks work, and how employees are going to work inside of these organizations. So we're just tremendously excited about that, and we're getting ready. As Cisco, we know it's coming. We've helped usher in the era of the internet, and we're now ready to usher in the era of AI, agentic AI, more specifically.
What's surprising you about kind of the progression? You're right. It's like 2 years ago, right? It was like bam. But I think for us, like, it was just over the last few months that we have increasingly been using like ChatGPT, right?
Yeah.
In a more aggressive way.
Claude, I use a lot.
I use Claude a lot. Yeah. There you go. Yeah. Here's what I'll tell you. Like in the in the trenches right now, the speed with which AI has been moving has been absolutely mind-boggling. The progress that we're starting to see. I'll give you an example. You mentioned Claude. Claude is an amazing piece of software from a model perspective that allows you to write code really well. Claude is one of the top ones that they use to do software engineering. A lot of people thought that AI is going to sort of come for our jobs, and software engineers are probably not the ones that it's going to come for. It's going to take a long time to get there. But guess what? It's here and it's now, but it's not taking away the jobs. In fact, every single developer is becoming a lot more productive using AI. So essentially what's going to happen is it's not like you're going to have to worry about jobs. I think, people that use AI are going to, take the jobs of people that don't use AI. So you're going to just start to see that AI becomes extremely helpful from a productivity perspective.
I want to go back to agentic AI, and I know it's something that you think a lot about. We hear it a lot from Salesforce, for example, right now. I still think, though, when it comes to the general consumer, agentic AI is like for the early adopters right now. It's for the people who do want to pay $200 a month, for example, for a version of ChatGPT that will make reservations for you at a restaurant or help you with travel plans. What does it look like beyond early adoption?
Yeah, I'll talk about one of the key things that you'll notice is that the rate at which things moved, like, if you go back to just using the chatbot, the very first time you used ChatGPT, it had a knowledge cutoff, right? You could only get information from like 2021.
Yeah, I remember that.
And then they opened it up to be able to do live web searches, right? That is actually, teaching a model how to use the tool. And then you saw that it went from just being able to do a search to like, hey, you can now start to connect these models to your emails. You can now start connecting these models to your Salesforce and instance, and then slowly it's expanding. It's now connecting into your Google Docs and your Microsoft Office, environments. Very quickly, what you're seeing is that we're in this exponent of like the speed with which things are moving, and we're just at that beginning part of that exponent. So you're right. Sometimes it feels like some of these things are very early from a consumer perspective. But if you start to think about what's happening inside of the enterprises are starting to adopt AI a whole lot faster because they need to maintain the competitive edge. But a key thing for them to be able to adopt AI is security, is safety and security. You've got to make sure.
Well, that's what I was going to say, because in order for you really to kind of max out the potential of it, you've got to open it up, right, to kind of all your different systems. So how do you make sure that that is really, really secure?
And that's top of mind when it comes to agentic AI, because you are now saying, hey, you're going to allow these agents to execute tasks on your behalf all the way to completion. So which means you got to make sure, you know, you're thinking about safety and security. And I'll talk about what we launched earlier this year at Cisco. We had a product called Cisco AI Defense. Knowing that this is going to be top of mind for a lot of enterprises, we built technology that does, you know, provides you with the visibility of all of these agents, gives you the ability to validate these models to make sure these models are not vulnerable. Because here's what happens, right? If you go back to the age of the internet, when the internet came out, the attackers started doing a whole lot of interesting things. They would do denial of service attacks and DDoS and so on and so forth. We're starting to see similar types of things happen with AI applications. So we got to make sure that we're protecting against attacks, new types of attacks, like prompt injection attacks and so on and so forth.
Okay, so what about the type of attack where, this is a little scary, but I think this is what's happening, where we are mimicked, our voices are mimicked, and perhaps a loved one is called, and AI is able to pretend that we're in a situation that requires the help from a loved one. I mean, this could happen.
Yeah.
This could happen now.
Yeah, absolutely. Like, you know, it's happening now, just to be very clear, because spam and phishing attacks with AI can become really, really gnarly. Like, you're going to see a lot more of these attacks. The cost to do those attacks are going to drop dramatically, which means you got to use AI to be able to, you know, defend as well. It's not just about using AI for attacking. You use AI for defending. So there are two parts to this. You want to make sure you're securing the use of AI, and you also want to make sure that you're using AI to make security better. And at Cisco, we're doing both simultaneously.
So what's the thing that keeps you up at night? Like, I just do think about some of this is happening. Like, we've moved so quickly, it seems like all of a sudden, from generative to agentic AI. And I think people are just catching up to be like, what is this all about? So what is it that kind of worries you as things move so fast?
I think one of the biggest things is, you know, there's always this feeling like we're not moving fast enough, you know, because.
So do you feel the pressure from customers?
I think at this point in time, everybody's feeling the pressure. When you talk to anybody that is in AI, the rate at which AI is moving, everybody's just trying to make sure that they're keeping up with the advances that's happening across the entire ecosystem.
Hey, DJ, I'm curious about the fragmentation in the security market right now, and I'm wondering how you see Cisco potentially playing a role when it comes to consolidating all the features and the functions that are out there.
You know, this is a top of mind issue for a lot of CISOs, you know, Chief Information Security Officers that are looking to consolidate a lot of the different point products that are there inside of their ecosystem. Cisco, as you know, with the acquisition of Splunk, is one of the largest security companies on the planet at this point. And we've taken a very intentional approach to consolidating a lot of these things into a single pane of glass. What we launched earlier this year was.
Hey SM, how you doing, buddy?
And this is a consolidation.
How you doing today?
You know, you don't have to worry about each and every single point product.
You still got your funded account, man?
Bring it all together, and you use AI assistance to be able to manage all of these.
I'm sorry, dude.
You know, we're entering into that AI and agentic era. You gotta have.
You hanging in there?
So that the defenders have the advantage over the attackers that are cloning your voice and doing those phishing attacks. You really need to give the defenders an advantage, and that's really what we're doing at Cisco.
You know, one of the things.
Yeah,
you know,
I get what you're saying, man.
Universe, your competitors as well, and
yeah, I really needed the break from the whole thing. I don't think I've taken a break from watching the screen all day in over a year.
Are there products, DJ?
It was really good for me.
That can kind of change market perception.
I feel like I'm more patient now that I'm back.
Absolutely.
Like, I just opened this one today. I hit my 15. I got another one I'm working on. So I could qualify this one tomorrow if I'm just not too greedy and just take my profit when it's there.
Now, when you take that security and the promise of security that we have and we fuse it into the fabric of the network.
Yeah, man, you just gotta do what you can do to get by. Did you ever do that interview for that one job you were talking about?
40 years. Long time. We've been doing security for a pretty long time too. But when you start to combine those two things in a single place, man, like we're miles ahead of everybody else that's out there.
30 seconds. What's surprising you that you're hearing at this event? Like, we're just blown away, and the conversation's just got about 30 seconds. Like, what are you hearing as kind of a dynamic?
One of the core things that I'm seeing that's really surprising is the number of customers that are implementing AI infrastructure projects inside of their own enterprise environments. They realize that AI cannot be somebody else's AI. AI has to be their own, and they want to run this inside of their own data centers. And that, to me, is very welcome. And I'm very happily surprised by that because we're ready to help them.
So that means a lot of on-site, on-premise, right?
That's exactly right.
It's not all up in the cloud.
Not all up in the cloud because they have lots and lots of this data that's proprietary that's sitting inside of their own environments that they're not quite ready to push it into the cloud.
Which I think is surprising, but like, here, it's happening. DJ, thank you so much. Great way to kick off our coverage here.
Thank you, Carol. Thanks, Tim.
DJ Sampath, Senior Vice President of Cisco's AI Software and Platform Group. Coming up next, we talk tech in the workplace.
You just got to keep applying, man. You just got to keep applying and learn. But I think it'd be good for you to get out, and maybe, work in front of the public and talk to people and stuff. I used to, before I started working my job and I was just trading, trying to get things, when I still was doing cash account and I was trading and not working, I'd go out and drive Uber for a while in my Jeep just to talk to people. I'd get up a little bit and then drive down to the airport and pick up some people, and I'd had, I really kind of enjoyed it, man. I got to really talk to interesting people and have, real conversations. There's something about that environment where people will just talk to you. It's not like you're, it's not like a social setting where you feel like you have to talk to somebody or that you're there with a group of people. It's kind of weird. People would just start talking. It's right, and you run into interesting people. I'd do that for a couple hours and come home. So I wouldn't blow my winnings. But it's a lot different with a cash account, with a good sized one. It's completely psychologically different, but I think that'd be good, man. Just find something close to home. It is scary. It is scary. I scared myself a couple of times, and then I decided to really focus on trying to make the prop firm account stuff work. And I picked up the Intuit job, which is like a fucking score of a lifetime, and I didn't even want nothing like that. Yeah. It's totally different. It's a totally different way of looking at it. See, with the way you're describing it, it's like, well, I'll just blow my, I'll take a chance, and if I blow it, I blow it. You can't be like that with cash. You know what I'm saying? It's like, fuck, I'm green. All right, fuck it. I'm just getting in behind it and taking it. If it takes off without me, I don't care because I have green, because it can fucking rail you hard. And you got to be real careful. You can't be like on the wrong side of the ladder taking your trade and shit like that. Lessons like that get expensive on cash. I think I'm almost ready to try another cash account again, but I wouldn't do it unless I could just sit here all day. I still, like, even this morning, I took a trade on the wrong side of the ladder because I was answering emails and doing chats and stuff. But I think that'd be good, man. And then that way you can kind of like stop thinking about it. Because sometimes if you just get away from a problem or something you're trying to solve, and then you come back to it, the answer's right in front of you. You know what I'm saying? And when I was coming up with how to make all the indicators and the forecast work together, just getting out of here for a while and coming back and knowing a place, as it evolved, there were places I knew that I had to make better, and I didn't know how, and I just had to think about it. Well, that's good. I mean, 40%, as long as your wins are bigger than your losses and you're not moving your stop, I mean, there's nothing wrong with that. Yeah, man, it can't be hard to find something like at a pizza place or something, or maybe somewhere where they serve beers.
Bloomberg,
You know,
the S&P 500 index less than 2% away from a record. Stocks are
at one
pushing
time,
higher.
you're gonna buy
20
7 at
ahead
one
of the
time.
closing
Don't do
bell.
that.
Talks between the U.S. and China have
Well,
been
don't.
extended,
You're not gonna
or
copy trade,
extended
are you?
later into their second day in London. Financial markets keeping an eye
Don't
on
copy
developments
trade, dude.
as the world's largest economy.
Did you get a copy? Okay,
Key
okay.
tech and
Yeah.
industrial exports.
So, like, what's your strategy for that, though? Are you gonna, like, if you get a winning trade, you move to the next or something? Okay, you're gonna trade one each day. Okay, so, well, then why don't you just do 5 and just do Monday, Tuesday, Wednesday, Thursday, Friday? Just do 5. Yeah, there you go. I like it.
The 10-year 4.46%.
I like it.
The 2-year 4.00%. Gold up $7 the ounce, up 0.2%. 33.
But just do 5. Do like a Monday through Friday.
Intermediate crude down 0.8%.
And then full port once you got your setup and take profit.
WTI. So again, recapping.
Do you have your
the
ATM
S&P
set up
Nasdaq
so it takes
all
profit
advancing
auto?
with The S&P 500 index up 0.4%. Bloomberg Business Week Daily continues right now. Once again, your hosts, Carol Masser and Tim Stenovec.
All right, Charlie, thank you so
Okay,
much. Charlie
cool.
Pellet back there.
Shades came on this morning and said he's got a job over in Scotland now. That's during most of his trading time.
Here at
So,
Cisco Live 2025. There's so much happening around.
so he must have got his
we've got a great
immigration
guest to kind of get into
paperwork
some of the
through
enterprise connectivity
for getting
issues,
married.
collaboration, because that's what he oversees.
Yeah, I think that's a good strategy, man. I think that's a good way of trying to do it. You gonna try and like work nights in a restaurant or a bar or something?
Responsible AI initiative, which means we're going to talk a little AI.
Nights and weekends, and then you trade.
You oversee this diverse portfolio of collaboration tools that are all under.
Shit, even if you started work at like 4 o'clock, that would be good. Yeah, that's what I'm saying. Like trade, try and get a shift from like 4:30 to 10 or something,
What's the one solution that can bring them all
And if you can make tips or whatever, that's good.
On the program. So when you think about collaboration, it's more than just the tools you use to meet with people or to call people.
And then, but you got to keep putting
foundational technology, which is the network.
you got to keep putting the resumes out there for the programming jobs or the IT jobs or whatever.
Our definition of the
I forget
workplace is
exactly
quite
what your major
expansive.
was.
We talk about a regular office. We talk about a retail
You're a
store,
or were you a coder or was
or
it
your
like
home or your
IT?
car, wherever you work from is a workplace. And so it starts with foundational elements of connectivity. And then once you're connected, then it's all about delivering the best possible experience. And so one of the things that Cisco's been innovating in is this concept of distance zero. And the idea is very simple. When you're meeting with other people who are not in the same room with you, it should feel like there's no distance between you. And so we've been working on technology, whether that is video conferencing technology, whether that is services that we deliver, to amazing experiences that bring people closer together.
What's the
Coding,
biggest
yeah, that's
hiccup
what I
that
thought.
prevents people from actually
Hey, hold on, I gotta make a
experiencing
call real
distance
quick.
zero?
I'll
Is
be
it
right back, dude.
connectivity issues?
So I think it's a mix of things, right? So first is connectivity has to be rock solid. And, when you're thinking about the diversity of spaces that we're talking about, sometimes you don't have solid Wi-Fi. In a conference like this, it can be very tricky.
The hotel,
as an example.
I don't know, Carol, if you experienced this, I was like just getting dropped on my.
Right.
The computer was fine, the phone wasn't, and it was actually really hard to work.
Yeah, we take connectivity for granted, but it's actually still very complex, and especially for people who build and manage these networks, the complexity is only growing with emergence of AI, agents, and digital workers in the workplace. It's only going to get more complicated. So we're very focused on how do we deliver amazing experiences for people who are connecting, but how do you make it easier for IT to manage it all?
Anurag, are networks generally ready for AI, or would you say no?
I would say they're not ready right now. And here's why I say that. Look, everyone can feel that this is transformative technology, and we are at the beginning of a major technology shift. When you look back at other technology disruptions, the beginning of the internet, mobile devices, cloud computing, it caused us to take a step back and reimagine how networks should be built and managed. And AI is much bigger than that. When you think about the proliferation of AI agents in the workforce, digital workers that are doing human-like work, they're communicating and doing work like us, but at machine speed and scale. So the networks have to really deal with an influx of much bigger traffic patterns and security surface areas that are exploding there.
Well, one thing I want to ask you, I know we're like dying to ask you questions. I am curious about because we keep thinking about the CapEx spend, right? And all that is AI.
Right.
But I'm also thinking about, are they not going to do the spend because they're worried about the power being there for all the AI? And I use the term AI loosely, right? There's a lot going on. But is the power not necessarily there and the systems there? We keep doing some reporting on that front. That's going to slow some of that spend.
Yeah. So I think, first of all, I think this is going to be essential technology. This is almost like if you ask someone today, do you want connection to the internet? Of course, the answer is yes. So this is not going to be optional. Organizations have to enable their workforce with AI tooling. But how do you do that in a scalable fashion? That's really the question.
Yeah, I got this job by accident, and what I did is I just mass applied stuff. So I figured I'd do something part-time if I was going to stop trading cash and work on the brokerage strategy. And I just happened to get this,
You have to make sure that even there,
which is like,
scalable.
you know, so you never know what you're going to run into once you start talking to people is my point.
And
You know
that's
what I'm
we're
saying?
focused on with the number of new product announcements that we made here. These network
The
devices, whether they're
PPL.
switches or routers or wireless access points, they're built to be very efficient. From
What's the PPL?
Because you oversee this portfolio of tools that are
people?
meant for helping collaboration
Oh, okay.
across different areas.
Sorry.
You must have some really cool statistics when it comes to who's working from home, who's returning to the office. We've been talking a lot about this.
This is the only thing I do on like social media stuff. I
Even in
don't
London,
really
for example, many banks are facing a shortage of desks
like
because of a
chat or
real estate
interact,
squeeze, but they're trying to get
except
people
for
to
with
come
you
back to
guys.
the office. So there's
But
tension
so
happening
you
there.
think
What
you
are the
can have your
plans that you're
trading
seeing
stuff
emerge
up while
from
you're
Florida
at
when it
work
comes to return to
in
the
one of
office?
those places?
Yes, I think most companies have settled into.
Or are you going to
that.
work the night
Most
shift there?
companies have people coming back to
Like
the
work the
office
night
at least
shift
half
at a
of the
hotel
week.
or at
Now,
a
it varies
gym or
quite a bit
hotel?
across the globe, and it also depends on the organizational culture. But what we are seeing is most companies are back in the office 2 to 3 days a week at least. In the United States, there is generally a culture of remote work and hybrid work much more than what we see in the rest of the world. But even here, most companies have settled into a rhythm. Now, what's essential is, even if people are in the office, let's say 3 days a week, there are other people who are remote, and you might be working outside of your organization with partners and customers, so there's always going to be people who are remote, who are not in the same room as yourself. And this is why at Cisco we are very focused on how to build the right technology so it feels like there's no distance between you.
So mobility within the enterprise, is it going to impact more the people who are working from home already? Or is it going to be more influential on the people back at the office?
I think it's both, right? I think it is really a hierarchy of needs for employees, right? It starts with, if I'm in the office or in my home office, do I have the tools, the basic tools to get my job done? So that's number one, right? And that's where connectivity and meeting tools and things like that come up. But after that, it's how do I collaborate with my team? How do I get more creative? How do I actually get creative work done when we may or may not be in the same room? And if I get to the office, I want to make sure it's worth my commute to the office, that I can find a desk to sit with my team. I can find a conference room when I need it. The environment has to be very supportive if I'm going to make the trip to the office.
I think about kind of the connectivity that we have as we go from office to office, right? Whether it's printers, I mean, something basic, but we can.
But it works.
But exactly.
Yeah.
We pop into a system.
Despite everything I try to do to make it not work, it's still.
Or remotely at home,
It is
being
actually
able to
foolproof.
remote access. Like, it is pretty amazing,
There's a
right?
reason why they have us practice that
Right.
stuff.
No,
Truly,
seriously.
it's like a requirement. Hey, we don't have a ton of
All
time.
right, we
but I
got 10
wanna talk a
minutes
little
to
bit
close.
about AI,
MOCs in 1
in a couple
minute.
different contexts. One about
Are you?
AI
Did you
embedded
trade any
in
today,
WebEx
dude?
and call center products and sort of the progress that you're making there, if you're able to monetize it.
Right.
And then I want to get to Safe AI in just a second. But first, talk to
course.
WebEx and the collaboration tools.
Right. So WebEx.
Oh, the
really
manager's
has
not going to be there?
One is
Oh, so you know this place already you're trying to get
That's
into?
where AI is really an assistant for you. It can generate meeting summaries. It can take notes for you. It can do things for
Only
you.
trade,
In the
yeah.
contact
No
center
trades
space, in the
today.
customer
Yeah.
experience space,
So you got a
have
place in mind where this
AI
works that way?
agents. These
You're
agents
just
are
assuming.
completely autonomous. They can talk to a human as a human.
Yeah.
That's pretty crazy.
So they're voice enabled. But if you want to chat
Hopefully.
with it, of course, chatbots have been around for a long time.
I don't know, man. I think it would be pretty easy to get like a server job or something, or
And if you say, look, hey, I want to reschedule.
or working at a bar or something. Who knows? That should be easy just to get out there and start talking to people.
Tremendous demand for this technology.
They aren't paying enough, yeah. That's why I'm saying maybe tips might be better because.
My doctor's office and like.
They have it's like the
Yeah,
the
yeah,
Seinfeld where
for
like
sure.
The folder has been flagged already, so you get directly.
I definitely have been flagged.
You've been
Good-
flagged.
in a
Oh,
good
here we
way,
go,
in a good
MOC.
way, publicly. I wanna
See what
ask
kind
you
of
about during
craziness we
COVID,
get.
You mentioned WebEx. I mean, why didn't you guys take better advantage or more advantage during COVID? just talk to us a little bit about during the lockdowns, just like Zoom did.
Yeah, so I think our focus has always been helping large enterprises connect their employees, and we were very successful in that space, and we continue to do that. Cisco never really took this COVID as an opportunity to go into consumers. We did make WebEx available for free to lots of governments, charitable organizations, educational institutes. So we did that, but our focus was very much around being an enterprise product. Now, when you think about where we've come along with the advent of AI, with autonomous agents as part of the WebEx, and all of the stuff that I was talking about earlier about distance zero and conference room, I believe that the product has come a very long way, and it's amazing. And so you actually have to see it to believe it. A lot of people haven't experienced it in a while, so I would encourage anyone to take a look and see how far we've come.
I mentioned that you're founding executive sponsor of Cisco's Responsible AI initiative.
Right.
What is responsible AI, and what's irresponsible AI? And I want you to answer the irresponsible part first.
Yeah, so when we started this journey several years ago, generative AI is obviously the trend right now, but we started this even before people were talking about generative AI. The idea really was, how do you make sure that bias doesn't creep into AI systems? That if AI is starting to make autonomous decisions that are consequential, that those are done in a responsible way, and how do you put guardrails around those systems? When we are building technology, how do we make sure this technology is used more for good than for nefarious reasons? So that's really the genesis of that program, and then we came up with a few principles, and then that translated into development guidelines for our people.
Can you, when you look across the landscape, can you give us examples of AI that's not responsible, something that concerns you out there?
Well, I'll tell you, like, these systems that are starting to show up in workplaces right now, they are not very deterministic. They're powered by language models that can hallucinate, so they can say bad things, they can make things up. So
you're talking about deployment of potentially tools that everybody knows about across enterprises,
right,
and not living up to the expectations that the customers have.
I'll give you, yes, and I'll give you a couple of examples. So imagine if there was an automated system that was approving your mortgage application, and that system just decided to decline your application for reasons that are not even explainable because this algorithm is a black box. Well, that is not very good. So you want to make sure that there's a way to protect against that. Or imagine hate speech creeping into this chatbot that you're interfacing with in a customer service scenario. How do you protect against those things?
You're calling the drop
you haven't systematically thought about
at
being
close.
with these systems.
All right, 7 minutes to close.
What?
I don't know how you feel about
We drop into the View app, or are we going to bust through?
Like people accept answers from LLMs in a way they didn't accept answers
from Google
in the early part of search.
Yeah.
Do you feel that way?
I think yes, and I think there's also emerging research that people are nicer to AI than they are to people, which is interesting.
I think you're right. I think they feel like they have this relationship with this thing. I was talking
I'm
to
constantly
somebody
pushing back on ChatGPT.
Yeah, I'm often cross-referencing, like going somewhere else and checking out things.
But this is why it is really important that we build trustworthy systems, and then we go out of our way to make sure that you can trust the response that you're getting out of these systems, which is why these programs are critical.
And I think about so we Google.
Yeah.
And we do trust our responses.
Right.
And there are there's different ways of kind of checking on it. What will be the gut check on LLMs? Will there be rating systems? Will there be, how does that progress?
Right. So one of the things that we are doing here at Cisco, earlier in the year, we announced a product called AI Defense. And the idea is very simple. First, it starts with observing how people are using these applications. And then second, you can start to put some guardrails. So you can start to sanitize the inputs that people are getting to these large language models. You can also do the same thing in the other way around. So, for example, you wanted to protect people from hate speech, you can put those type of guardrails. You wanted to make sure that these models are not hallucinating and not giving you wrong answers.
Right.
You can start to put guardrails around that. And so you will see a lot of these tools emerge. And the models themselves are getting better with these type of protections. But I think there's always going to be a need to have tools that you can
We go to sync.
that not only comply with the law,
Going to the sync.
but also with your values, with your
we're going to sync. All right, let's see.
So I spent a lot of time.
Got 6 minutes to the close.
Anthropic's Claude, and
I don't know what's holding us up, man. I got to be honest with you. I don't get it.
You're playing with it.
It says that, well, I'm playing with it so I can pull this.
I really honestly felt like we were going to be in the low 3,000s by now, and that was going to about be the bottom. We were going to run sideways and then start grinding up.
With ChatGPT, with Claude, it won't generate images for you.
Are you trading tomorrow?
With even like Google?
Are you still in the game, or are you taking a break?
No, I mean with like normal search.
Or are you just doing sim for a while,
that's
testing
just in
your
our
stuff?
DNA as people who search for things.
I guess.
Like we were
Yeah.
I feel like internet
Yeah, do
culture,
sim for a while,
when you're
test your
talking
stuff,
skeptical of
back
what you find
test
on the
it.
internet.
Yeah,
Yeah.
I've done that
We're
quite a
so
few
taught to be
times,
skeptical
man.
of the answers
Right.
that
Or there
we
was just
know
a
and
piece
it's
I was
not
missing,
wrong.
and I
Well,
And
I
I
think there are different
really now I got to
companies
work on myself. I got to work on, like you called it, I was
So I
being
think there
too
is a need to
aggressive,
drive more
moving my
awareness
stops,
that, you should not buy
taking
any
profit
trust
when I
to get
have
out of
it.
the
If I
system.
just take
You
profit
should
whenever I
always
have
sort of
it,
skeptical,
I'd be
mindset
set.
for these type of things. But
I got it,
companies who are putting these disclaimers, I think they're
you know,
doing
but
the right
doubling,
thing by,
doubling,
making the
adding
users
contracts,
aware of
moving your
those
stuff, that's all
challenges.
nonsense.
Speaking with
Can't do that
Anurag
stuff.
Dhingra,
I
Senior
know
Vice
that.
President and General Manager of the Enterprise Connectivity and Collaboration Group at Cisco.
So I'm just thinking, you know, our audience, it's a smart one. It's an investor audience. I mean, when you think about, you know, when they're looking at companies who are embracing AI and building out their infrastructure, what do they want to see from their companies to make sure that they are doing that well? So, like, what's your thinking about what businesses should be doing to create safe, secure AI infrastructure?
Right. So the first thing I'll say is you want to make sure that your infrastructure is ready to deploy AI at scale. Because this is being the difference. Deploying AI could be the difference between you being a leader in your space and being irrelevant. And so it is very important to start with what do I need in terms of network connectivity? How do I have scalable networks that are not just ready for the traffic that you're running on them today, but the use cases that AI is going to unlock tomorrow? How do you secure it? This is why all the announcements that we made here at Cisco Live are really about AI-ready, secure networking products, scalable devices, security at the core of the network. So that's number one. Second, with applications like AI Defense that I was talking about earlier, those start to put guardrails around safe and secure use of AI. And then if you are in the business of building applications, building products, then I would encourage every company
Just got to pound the pavement, man. Get out there and talk to some people. You know what I'm saying? Maybe you can like sell crack on your corner near your house for a while.
Publicly held companies will be like a whole new section, like when they either report or something, right?
I'm
that
joking.
we will be
Don't do
dealing
that.
with to get an idea of how safe and secure their systems are.
Yeah, I think in some ways it's going to be like security.
Yeah.
And you know, as these challenges become more well known, as companies become more aware, they'll start to demand systems that can provide the visibility on what's happening with the use of these tools.
It's definitely a new world order, but really fascinating. Anurag, thank you so much. Covered so much ground. Thank you.
Thank
Good
you
luck.
for having me.
Good luck at the rest of the event. Anurag Dhingra, Senior Vice President, General Manager, Enterprise Connectivity and Collaboration here at Cisco Live 2025.
We are just off our best levels of the day, but still up half a percentage point on the S&P 500. The Dow up 0.3%. The NASDAQ up about 0.6%.
All right, folks, you are listening and watching Cisco Live 2025. Let's head it back to New York and to Charlie Pellet as we get ready for the closing bell.
I thank you very much, Carol and Tim. Indeed, under 2 minutes to go until we wrap up trading on this Tuesday. We have got the Dow, the S&P, NASDAQ holding on to gains. Right now, the S&P is at 6,039. That is an advance of 33 points, up 0.5%. Investors are closely monitoring those trade discussions in London between the U.S. and China. That's sending stocks higher. Equities did hit session highs after Commerce Secretary Howard Lutnick said negotiations went really well. We'll keep you posted. Any developments, we'll have them for you live on Bloomberg Radio as they happen. And of course,
all right. How's the trip?
Right through the evening. The Dow, the S&P, NASDAQ gaining. S&P up 31 as I
Yeah,
mentioned.
just don't get caught.
It
It was good. You know, I visited my dad for a couple weeks.
NASDAQ Composite Index up 100.
He played a lot of golf.
That is a
He
gain
likes playing the
of
craps
0.6
table down to the
1%.
casino.
Your 10-year
Rode
yield,
around in his old
4.46%,
'68 Camaro,
with
so it was
two-year
all
it's
right.
currently yielding
I hadn't been home in a while.
4.00%. Spot gold now higher by $2.
But it's really
$33.28 the ounce,
economically
up
deprived up there.
West Texas,
Like
India
rural
crude
parts of
down,
New York State,
right
there's
now
just
down
really nothing
0.5%
going on.
64.93 a barrel.
He's retired
Christina
from an
Hooper is
Alcoa
chief
aluminum
market strategist
factory,
at Man
so
Group. She sees
he
just
does.
one Federal
You know,
Reserve rate cut
he
this
retired
year.
well. He retired young. Retired at 55.
And they have a lot of good reasons not to do anything.
Smokes a lot of weed.
And there are a lot of other central
He's a
banks
Vietnam
that
vet.
are communicating the same thing. We just have
It was
no
all right.
idea
It was a
how
good trip.
tariffs
I'm
play
glad I
out.
did it.
We don't know how long
I
they're
need
gonna
to get
last,
up there
the
more, to
impact
be
they're gonna have
honest
on
with
the
you.
economy.
You know
So
what
we
I'd
have to
like
sit
to
on
do
our
is I'd
hands
like
and
to
wait.
get an old
Christina
RV,
Hooper,
and have my whole trading set up in the RV with like Starlink, and you know, be able to remote into my trading computer here, and then just have it mirror, like have all the screens mirror what these screens, and that way I can travel and trade, you know, and be other places.
That is a gain of 0.5%.
You want a gun collection?
NASDAQ up 123, up by 0.6%. The 10-year.
You know, I got my grandfather's shotgun. He let me have it.
LIRR service in and out of Grand
You want like
Central
handguns, or you want shotguns, or what kind of guns you want?
Fire halted Long Island Railroad
like
service.
AR-15s and shit.
100 firefighters had to work for several hours through thick smoke to put out the flames. The New York City Fire Department says the cause of the blaze under investigation, and there were no life-threatening
everything.
injuries.
That's cool.
Again, recapping, S&P up 32 at the close, up 0.5%.
I really need to go get my handgun permit. Or wait, North Carolina, you don't need it. It's constitutional carry.
Bloomberg Business Week Daily, reporting.
I really need to go buy a handgun.
Global leaders stay ahead with insight on the people, companies, and trends.
Well, go take a class. Take a class. You can get one for a few $100, I think. Probably in the pawn shops and shit. I bet they're everywhere down there, or in Chicago. What are the laws in Chicago for a gun?
Television, YouTube, and Bloomberg Originals.
It's dangerous in these
everybody,
streets.
yes, indeed. This is Bloomberg Business Week Daily. I'm Carol Master along with Tim Stenovic. We're live here in San Diego.
Oh, that's about it. So anyone can have a gun in Chicago? Yeah, you just gotta.
Are around us. There's so much going on.
See, I think it's even illegal to have one in New York City.
The Cisco executive team.
Oh,
We're
cool.
talking AI in a big way. What's needed to build it out? What's needed to build it out safely and securely? So we're talking about that. And over the next hour, we have some really
I've got my grandfather's shotgun.
Cisco's incoming CFO is going to be joining us, Mark Patterson.
He used to hunt ducks.
Next month. He's
I'm going to mount it. I'm going to put it on the wall just on display.
In just a few minutes. Also, everybody who listens to us and watches our show knows Fran Katsoudas.
Yep,
I haven't really shot much. I was in the Army out of high school, and since then I haven't really shot much at all.
Workplace, the people, and then how do you do that in an AI environment?
I haven't really been
forward to that,
interested
kind of
in
looking
it.
at all the stakeholders.
But I really do
One
need to
thing
get an
to
AR-15
who's
for the
very
house
key in
and
terms of strategy at
handguns.
Cisco.
There were
We've got, with us,
kids
Jason Patel. He's
driving
the
through our
product
community
officer.
the
He's
other
joining
night
us
looking in
on site.
trash cans and
Thank you
shit.
for your patience.
They even
So
went
what's
up and
going
turned a
on?
door handle on a house. They got them on the Ring camera.
It's pretty cool. It is way, way, way bigger than I thought it would be. And we're just
It
in
was
one
on,
of the...
somebody posted on the
Just one of
Facebook
the
page
rooms.
for
It's
that.
hard
My
to
wife
host
showed me.
22,000 people in a single room, so we have to keep breaking it up.
I'm not afraid to use one, so I've always not really wanted it, because if I'm in a position where I have to use it,
Look, these are our customers, they're our
or even if I
partners,
think
and
I have
they're
to use it, I'll
companies
end
who are
up using it.
considering buying Cisco technology, and one of the things that we want
Yeah,
to make sure
no.
that we're very clear with is
Hey, you know what, dude? Sometimes it is what it
what are the
is.
core problems we're
You know?
solving, and what are the key innovations that we're
It's
making
like
to
selling
make sure
somebody an old
provide
pickup
that
truck, and then you say the next day there's going to be 10 ladders on it.
so that they
Sometimes
can learn
it
about
is
the
what it
products
is.
and, kind of pressure test them while they're here. We're in a
It
really
is what it
interesting
is.
place right now because we're in the next era of AI. So we've the past 2.5 years since ChatGPT came about. Carol, you and Tim know this. We had this kind of seismic shift that happened in the industry, and we had these chatbots that could intelligently answer questions that we had. And we're now going to this next era where there's going to be agents.
All
that
right,
can conduct
4 minutes
tasks and
after
jobs
we
for
didn't
you
get our
autonomously
drop,
on our
dude.
behalf.
Like I've been wanting to short. I'm like a perma bear,
Initially, they
man.
would
I've been
start
wanting to
working by
short
themselves for a couple
for
of
like
hours,
2
and
weeks
over
now,
time,
and
might
it
be
just
a
keeps
couple
going
of
higher.
days, and then a couple of months, and a couple of
And I
quarters.
just when I get to, I'm like, how can it go any
Possibility of the
higher?
kinds
Where's
of
all the
problems
money
we can
coming
solve
from? It
are
just
so
goes
amazing,
higher.
and we want to make sure
We
that
get bad
provide
news, we get a little
infrastructure to
drop
make
for
that
2
happen.
seconds, and
So
it
are you
goes
talking
higher.
about, with the agentic solutions that you're talking about, are you talking about inference specifically?
Correct. So we've been working on, working with people on making sure that we can provide the infrastructure for
I
training.
hope you don't
for
need
the
to use it
past
either.
Couple years.
And that's where a lot of the...
That's where a lot of the spend
So
is
have you actually gone outside to look for a job yet, or are you just talking about it right now?
Of certain companies.
Are you like in the talking
I've been to
stage,
date.
talking yourself
But
into it?
now what you're starting to see is the demand signal for inferencing is going up quite a bit. And if you think about what's happening in inferencing,
Oh,
when
okay,
you
cool.
just had interactive mode where you
Oh,
would
cool.
ask a chatbot a question, what would happen is you would have spikes of
Any
of
calls
peaks
yet?
that you would get on compute usage and on data center usage. When you have an agent, and that agent is fully autonomously and proactively working on
okay.
something, and they're just kind of cranking away,
callbacks.
and there's not just one agent, there's tens of agents working together.
Well, if
What
you don't
see
get
is
it in a few
sustained
days,
demand for inferencing capacity.
just print some resumes and go pound the pavement, man. Sometimes if you're, if you put a resume in somebody's face, there aren't many people willing to do that. They'll hire you just because you're out there looking and you're trying to make something happen, you know?
So right now we're working with a lot of the governments who want to make sure that they have sovereign data centers all throughout the world.
Right.
We are also working with
that's a big demand push right now, isn't it?
huge demand push. I was in the Middle East just a couple of weeks ago, and we announced partnerships with Humane and Saudi Arabia. We announced partnerships with G42, with Stargate UAE. And the reason for this is because there's an insatiable demand right now. If you think about what's the constraint in AI today, it's infrastructure and it's safety and security, where people have to trust these systems, otherwise they're not going to use them. And so those are the two big constraints. And of course, the third one is a skills gap where you have to keep training people up. But the first two are pretty material. And imagine if we had a world where infrastructure was not a constraint. Imagine all the problems we could solve that we're currently not able to solve because of the constraint of infrastructure.
Well, but some of those constraints are serious, G2. And I think about, as you guys are ramping up and building out and providing what customers need, though, whether it's enough power to do it all. We just did a big story at Bloomberg last week about not enough engineers, workers for power plants and so on and so forth. So how are you guys kind of balancing that? You're doing what you need to be doing, but making sure everything else is there to support it.
I mean, if you think about the large constraints, they're compute, they're power, because GPUs are power hungry, and then there's network bandwidth, and then there's safety and security. Like, those are the four kind of high-level buckets. If you think about power, what we are trying to do is make sure that we can have the lowest amount of latency, the highest performance, and the most power efficiency, because how long it takes for a packet to get to the GPU to get processed really matters. And if you have idle time on a GPU, that's actually not a good thing.
I hate customers, man. I want to work at a fancy restaurant.
And so we need to make sure that
well, dude, if somebody says they're looking, just go there with your resume. Maybe they'll hire you on the spot.
Well, so then
like when I was in the car business and I got in a fight with somebody at the dealership over some bullshit and they blew me out, I just go across the street, and by the end of the day, I'd be working somewhere else.
If you don't have the right level of power efficiency, firstly, all of the data centers that are getting built right now, we are running out of data centers to build in certain geographies because you don't have enough power. So you actually tend to go to where the power is, and data centers are getting built where the power is. So it's a very important commodity.
Is that true globally?
Yeah, it's absolutely. You're
the
starting
data
to
set,
see.
like
Just hand them your resume and say, "I'll start now."
Yeah, you just need you need to be not too far from the power so that the entropy is less and how that.
I bet those places have a hard time finding people that will show up on time every day.
It's got a whole list of questions that I want to make sure we get to.
We said we can go as long with G2 as you will give us.
Yes, that is
go as long as you want.
That is the answer. Can you talk a little bit about the relationship that you have with NVIDIA?
Yes.
Because I think a lot of investors are trying to understand from a customer perspective, from just a relationship perspective. What can you tell us?
So we have enjoyed a very meaningful partnership with them for the past 6 years. 6 years ago, we decided that we're going to use the NVIDIA chipsets in our video conferencing devices, and that made those devices very, kind of AI ready. And now what you see is a lot of kind of sophisticated AI capabilities are uploaded on the device itself, so that even if the device integrates with a third party like Microsoft Teams, they can benefit from the AI innovations that we've made. So that's been a great partnership. What we did in the past few months, though, is we have doubled down on the partnership with data centers. And so we had announced that we have a AI factory and secure AI factory, which is basically what NVIDIA has as a reference architecture, which is a suggested mode of how companies should think about building out their infrastructure. And for the very first time, they had a non-NVIDIA silicon provider that was actually part of that reference architecture, who was Cisco.
My LIDR
We were
stock
the
is
first one of
finally
those
starting to
that they
move.
actually incorporated into their architecture. Why is that important? Because customers look to NVIDIA to say, hey, what does your reference architecture
I'm
look
hoping
like?
it.
And now Cisco is part of that reference architecture. So that was the first thing. But what we've also done and what we announced today was our safety and security capabilities are pretty sophisticated. And we want to make sure that we actually...
Hey, are they
tie
doing
that
any
with
riots in
NVIDIA's,
Chicago the way
you know,
they
the
are in Los
efforts around.
Angeles?
If you're
Are they
building
starting that shit there
a
yet?
open source model and an application with the NeMo framework, we can now validate that model with Cisco. And so we aren't just helping with NVIDIA on building a secure AI factory with the infrastructure and a full stack, but we're also
Yeah,
helping with
it's
how do you
the
keep it
over the
safe?
immigration
How
stuff,
do you keep
right?
it safe?
Because
And so,
ICE
because
is
one of the
finally
challenges that you
trying to
have
get
is
those people out of
if
here.
people don't trust their AI
Is that what it's
systems, they're not
about
gonna use them.
for you?
And so we want to make sure
That's
that
what's
people
going
are
on in
trusting them.
We're talking
California.
with Jitu Patel, President and Chief Product Officer at Cisco. We're here at Cisco Live 2025.
It's because the Democrats are trying to protect these criminals that are illegal aliens. Like you and I are like citizens that were born here. They're protecting people who break our laws that just walked across the border. And now we're trying to get them out of here.
Build out. So what's the
Both, actually.
Yeah, or both. Okay.
I
So
mean,
what's
it's crazy.
the mix in terms of how we see this continue to grow?
So
Why
I
would
think
you,
the way
you
that
know, I don't
you
know,
will see
whatever,
this
man.
progress forward
Stay away
is
from that stuff though,
there's
man. You
3 or
get
4
hurt.
different models that'll be out there. Firstly,
If you don't like agree with everything they say, they'll
things is
you know.
hyperscalers are going to grow very rapidly. Private data centers are going to grow very rapidly, and neoclouds, which are actually AI specialists, are going to grow very
Yeah.
rapidly, and so are service providers.
Ullman's
So
trying
when
to get
there's,
them out of here.
You know, kind of a rising tide, all boats rise, and that's what's happening right now. Now,
That's
what
right.
is happening that's unique with
Citizen.
you know, data sovereignty,
Pay your
with,
taxes,
you know,
citizen.
kind of nationalistic behaviors that are kind of progressing
Citizen, you will be safe.
political
Stay in your home, citizen.
is there's more and more of an acceleration of demand of private data centers.
Yeah, we talked about this on-prem.
On-prem.
Yeah.
And
Citizen.
specifically for inferencing. I think for training,
That's interesting.
you know, people might go to the cloud, but on the
Do you see
inferencing
that
side-
as being part of a government regulation, a sovereignty issue, or is it more
Yeah, I
an
mean, how hard
individual-
is
on an
it?
individual company basis?
All you gotta do is catch a few good trades and
there's a sovereignty
find a
issue,
job.
There's also a data proximity issue. There might also be some companies who have enough scale.
That's all you gotta do to be a
where
good
the
citizen.
scale itself might give them an advantage. That they're like, hey, I don't need to go pay someone something. I might want to have some of the workloads on my own premise. And so it's a combination of multiple issues. But what you are seeing is there's this kind of upsurge of demand and acceleration. The good news for
It's
us
tough
is
going
we
back
have
to
the
work
largest
after a couple weeks
hyperscalers
of doing what you
with
want.
intra-cluster communication, you know, on the networking side. We are
It's
also
not like I have a
working
hard
with
job
neocloud
though. I shouldn't
providers.
really complain.
And then we've had relationships with service providers for the past couple decades, and now what you're starting to see is a resurgence of demand on the enterprise that we know really, really well. We've actually been working with.
It's pretty
enterprise
lonely
data
though.
centers
There aren't
for
many
the past
corporate
40 years.
employees left.
And now we are
They're
actually
all in the
starting to
call
see a
center
massive
now.
resurgence because of AI inferencing demand. And the agentic workflows, when every company is starting
Like
to
nobody's
rethink
talking
their
in our
workflows,
Slack
whether
channel
it be
anymore.
a healthcare company or a bank or a financial services or insurance company, every workflow is getting reimagined.
There's only like
Infrastructures are
5
being
of
built
us
out
left.
everywhere, and we want to make sure that we are the common networking substrate and we are the common security and safety kind of provider across the board.
So G2, in an environment where we constantly are talking about an uncertain environment because there's stuff coming at us even today as we kind of continue to watch the negotiations between U.S. and Chinese officials over in London, how would you describe demand, the CapEx spend that you are seeing, whether it's the hyperscalers, whether it's those folks building their enterprise systems, like the different buckets that you play into?
The demand signal is stronger than ever. I've never seen anything stronger on the demand signal side, because you've got trillions of dollars that are going to be flowing in for these data center build out capacities. So the demand signal is very strong. It's actually also happening globally. So it's not just happening in the U.S. You're starting to see demand in the Middle East. You're starting to see it in Europe. You're going to start to see it in Asia. And one of the things that's important for America is we want to make sure that American technologies are being utilized in all these data center build-outs, because that's good for America and that's good for the world, frankly. And so, Cisco and NVIDIA and OpenAI and others and all of our partners, I think AMD, it's extremely important that we all work together to make sure that these kind of data center build-outs happen with our technology.
You know, you're shocking me with the striking magnitude of these investments.
It's
what is not being, where is money not being spent as a result? As budgets get reallocated toward infrastructure, what's not getting money?
I think what you'll find is in the short term, you actually have to take certain amount of dollars from existing projects and move them towards AI. And almost every company is doing that. They're saying, you know, I'm going to take 20% out from my existing projects, move them towards AI. Over time, what you find is AI will get so much productivity that those 20% of the projects will get rehydrated. Because if you think about, like, for example, we're one of the first partners with OpenAI on their Codex project, which is the autonomous software engineer. It's no longer where you just have an autocomplete where you can have an individual developer that gets productive. You can actually now tell an agent or a group of agents, go solve a really hard problem for me and come back to me in a couple weeks. And we'll be able to actually have a world that we're living in relatively short, kind of time horizons, where it'll be able to solve that problem and come back to you. And you'll still have the human in the loop that'll be able to observe and they'll be able to do things. But imagine what that does for the constraint. We have 27,000 engineers. I've never felt more constrained in my life about the ideas I have compared to the resources I have to prosecute those ideas. And we will actually get to a point where we can unlock those ideas in a very different way.
What?
I was just going to say, we could go on forever with G2, but apparently his team is telling us that you have to go speak. There's like even a speaking engagement coming
going.
up. Oh. He doesn't want to do it. He wants to hang out with us instead.
You guys are too fun.
Hey, we're going to get in trouble if we do that.
Well, I mean, I'm going to go.
Go.
I mean, we're just kind of blown away every day, like what we are learning about this and how it's impacting our world. I mean, I don't know, 6 months from now, a year
What do we
from
get
now,
for news
how much
tomorrow?
are we thinking about how dramatically this will impact everything?
I think firstly, your imagination will be challenged quite a bit because humans have a very hard time thinking exponentially for a sustained period of time. And this curve is exponential. And when it's exponential, it's not happening in a single dimension. It's happening across multiple dimensions all at once. And so if you think about it 6 months or 12 months...
Oh, we got news tomorrow.
No longer are you just going to be thinking about this as a more efficient way for getting an answer, but you will have
oil inventory,
companions and sidekicks and a staff of people,
about
that are
it.
digital workers that can get
Might
the
be
job
a-
done that you would have
in the
otherwise
morning
not
might
had the
pick up.
time to do. And one important area to talk about is a lot of people worry about, is AI going to take my job?
Mm-hmm.
I actually worry more about people that use AI really well. There's a higher risk of them taking your job than AI taking your job.
Noted.
You know, and
Yeah.
and the other piece that I also think about is, if you actually have, there's no one that I know that comes home every day and says, you know what, I've gotten everything done on my checklist, right? And so the reality is when there's 80% of the work that we do probably doesn't get checked off because we don't have time to do it. Now AI agents will start doing that. And then the final category that's the most exciting is AI will be able to do things that we were not able to do because it'll have original insights that don't exist in the human corpus of knowledge. And that's the area of AI that I think is the most underhyped.
G2, we got to leave it there. Your crew is about to come on set and pull you away to go and do
I just want you to know I
speech
have
right
a
now.
companion and sidekick,
Yes.
but I'm ready for my AI companion and sidekick.
Thank you so much
Patel,
to both of you for having me.
President
You
and
too,
Chief
thank
Product
you.
Officer at
Good luck.
Cisco here at Cisco Live 2025. Let's get on over to Charlie Pellet for an update on everything happening after hours right now. Hey there, Charlie.
Much indeed, lots of earnings after the bell, but this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in
I
half
missed this.
if you move to Oracle Cloud.
I've been busy.
Infrastructure
I had
for
like
new US
50
customers with
emails I had to
minimum
catch up
financial
on
commitments. See if your
yesterday.
company qualifies at oracle.com/Bloomberg.
Friday, everything
Among the names reporting after the close of trading today, we did hear from GameStop. Shares are lower after ours. GameStop reporting hardware and accessories net sales for the first quarter that did miss the average analyst estimate. Right now, we got shares of GameStop, GME on the ticker. They're down 4% after ours. GameStop also announcing that it did purchase 4,710 Bitcoin between May 3rd and June 10th.
I mean, I've only,
for cash.
like, the
And
last
after
day I
ours,
worked
GameStop
was the
grew
last
by
day
4%.
of the people,
Also reporting after
the
close of
corporate
trading, GitLab,
sales
it's
people.
forecasting revenue for
So
the second
today
quarter.
has
That
been the
guidance
first
did
day.
miss the
So
average
the
analyst
call
estimate.
center's been there for 2 weeks since I've been off, and yesterday was the first day back, and I don't know, there's like nobody, like we talked through Slack, like we got a whole Slack thing. It's like messaging for the company. It's like nothing goes on in there. Leads have been pretty slow. I don't know how the call center people are actually doing.
S&P up 32, up 0.5. Nasdaq up 100.
Kind of hoping they just take a big shit, and that way I don't have to worry about them completely closing.
10-year yield 4.47.
But honestly, I'm okay. You know what, man? I got to be honest with you.
Gold, just about
If they give
flat
me
on
the
day,
package
$33.25 the ounce. West
that they
Texas
gave
Intermediate crude
the other
down
people
0.6%
before me when they let them go,
a barrel. Bitcoin right now up 0.6%, 109,407 on Bitcoin.
I'm kind of okay with it
JM
because
Smucker
I'm going to start my
sank
cash
most
account
in
back
nearly
up,
4
and
decades
I'm
after
going to make a
citing
run at it
tariff-related
again
costs. Shares of Smucker right now, they are
with the
down
whole program, and I'll copy trade the prop firm stuff.
For on-demand news,
I'll build my website. I'll pay the programmer the big money to get all the bugs out and completely clean up. I'll just focus solely on this and try and turn it into a real
All right,
business.
Charlie, thank you so much.
So
Carol
it would be
Master, Tim
okay.
Stanovic, live at
I put so
Cisco
much
Live
time and money into
2025.
it
We're gonna
anyway.
get back to our interviews in just a moment.
It's
Did I
one
say
final
Los
push to finish
No, I don't know
everything
what
and
you said. I
actually
was just
try and
focused on
make
the
it
fact
pay
that
for
we're in San
itself.
Diego.
Well, we do want to mention that we do have some headlines crossing the Bloomberg terminal. The U.S. and Mexico are close to a deal that would remove President
Be a
Trump's
professional
50%
streamer
tariffs
for a
on
while.
steel imports. Up to a certain volume. This is similar to a deal during the president's first term. The agreement would allow U.S. buyers to import Mexican steel duty-free.
I guess professional means you actually have to make money doing it.
Below a level based on historical trade volumes with
I think I would probably. I think my plan is going to be to like expand to Rumble and X and TikTok maybe, and just try and push all the traffic here and get some people to sign up for the subscription
expecting it this week. So again, we've been
to the forecast, and then hang out and learn how to use it. That's probably what I would do.
Yeah, we're going to bring you
just finish everything and try and see if anyone would actually subscribe.
The U.S. and Mexico are near a deal to cut steel duties, and
no, I won't be doing
that.
that.
So let's get to one of our favorite guests. I got to say, when it comes to Cisco,
I don't know what the call center is doing yet.
She's definitely familiar
I don't.
To our regular viewers and listeners. She's often traveling. She comes to New York.
I don't think they know. Like they don't have their numbers next to ours. It's separate.
And how the workplace is changing, and so much more.
So
Frank Masudas is back with us.
I got a meeting with my manager tomorrow. I'll kind of see what he thinks.
She's also on the board of ABP, and she joins us here in San Diego. How are you?
Good. How are you? It's great to see you here.
It's great to be here. I mean, we're just kind of blown away, and just we're talking so much about AI, as you would imagine. Tell us a little bit more about what the conversations you are having around work. We just talked to G2 and just, these concerns that AI is going to replace all the jobs. But as he made this point, it's those people who know how to use AI. Those are the people you're going to have to be worried about because they're going to be a lot more productive and have bigger roles in the workforce.
So it's really interesting. From a broader work perspective, there are stats right now that are being released that tell us we have a lot of work to do, but similar to G2, I see a tremendous amount of upside. So Gallup actually put out a survey recently, and they said that 70% of U.S. workers are not using AI on their jobs today. And they said that 50% do not feel prepared whatsoever for what is coming. And what I think that means from a company perspective is that we have to create these bottoms-up and these top-down motions to really ensure that people can start to experiment. Because what we've seen at Cisco is when people start to play with the technology, they create the use cases. They see some of the opportunities that are there. The other thing that's interesting is that I do believe we'll start to see more and more roles consolidate. And you'll see that the technology will support
I've thought about it.
People will have a broader.
But I think the direction of the company is they're trying to force all the remote people back into the office. So there hasn't been really any remote positions open.
Talk a little bit about where we are in the history.
But I was thinking about it. I've been here long enough to be able to apply for that.
Around 3 decades at this point. So
I'd be good at it. I'd be good.
It was like the dawn of the World Wide Web. A lot of people had dial-up. That was the access.
Yeah. The problem is everybody's in Plano, Texas, and I'm in North Carolina, and I really don't want to move.
contextualize for us how big of a
We're pretty
deal
set up here.
the AI era is.
It's so huge. So listen to this. So
I don't really want to go into the office again anyway. I think if I was forced to do that, then I would cash out my investments and stuff, and I'd give full-time cash trading. I'd go back to full-time cash trading, and I'd build. I'd have everything reprogrammed and build the website before I went back into the office.
What that means is that those people that were doing
Because I'd basically have to abandon everything I've been working on if I did that. There'd be no way I could do both.
What that also means is that if you're someone
No, I'm not going to quit. It's too easy, man.
that entry-level role doesn't
Dude,
exist.
it's too easy.
What that means is
And I
that
make way
we
too
as
much money.
companies have to create more of a bridge now.
Like literally, there's no leads, and I'm fucking around here, like talking to you, watching charts and news and shit.
Entry-level roles. The other thing that I would say is the contact center in particular is one of your best examples of a
The
use case
insurance
that
is like
just
the best
prevalent across
insurance ever.
industries. And the reason for that, knowledge management system, clarity around how calls are answered. It's something
Easy
that
six-figure
is
income. I
measured
just
in every
can't.
single way. And so our
It's the
challenge
easiest
now
I've ever had it.
is how
It's
do you
not the
get them
most I've ever
structured
made,
work
but it's the
to
easiest I've
behave
ever
like a
had it.
contact center, if you will.
So
I understand.
I'm gonna probably play it out until they just eliminate all the remote positions, and hopefully I can get the golden parachute package the other people got. And then that would be a good send off back into full-time trading.
These opportunities for so many businesses to be built.
Honestly though, before that happens, I would really like to have the website up and all the videos made and have the forecast get through licensing so people can subscribe to it if they want
I
to.
think it's bigger because of the
Or you
pace.
can just hang out all day,
And I
whatever.
think what we're going to
But
see is we're going to see an intersection of the technology and all.
if
of
I
it.
could have all
So
that
what's
done
unique now is that you actually have
and then get
roles
the
coming
payout
together
if
in
they
newer
close
ways.
the
You have
department,
ability for
that
us
would be
to
like the best thing
scale
ever.
even
Then I'd
beyond
have
what we
everything
did
set up and I
as we
just
stepped into the internet era.
go
So
to
I
being
think
on
it's
the
much
stream
bigger.
all day.
I'm curious about the macro issues. You're always so gracious and kind of talking
Then
about
if I
the
make a
macro
little bit of
environment.
money,
I'm
I
just
can
thinking
just walk
about the
away from
electronic
it for the
talks that
rest
are
of the day
going
and
on
go
right
do
now,
something I want to do.
Friday. Obviously, it involves
You know, instead of
minerals,
sitting here.
technology. These are things that certainly play into your world. You know, how are you guys thinking about that? How to make sure that Cisco, whether it's their supply chains and so on and so forth, are where they need to be?
That's the dream, my
For
friend.
all
That is
companies, but
the
from a
dream.
Cisco perspective, what we're always thinking about is what are the scenarios that we have to be thinking
And do the
about
Discord.
and, how
I'd
our
have to set
customers
up
consume,
the
how our
website,
employees
create all the
work.
training
To your
videos that
point,
explain
some of
the
the
indicators.
geopolitical
I'd have to have
issues
a video
that
for every
we are not
indicator,
in control of
a video on how to
whatsoever.
set up
And I think for us,
NinjaTrader,
having good
download
people
the
on the
strategy if
ground
you
that
wanted to,
understand running those scenarios so that we know
how to read
we're
the
gonna
indicators,
respond
and then,
as
you
a
know, maybe
company.
general.
And
I'd
then
like to
being
have
clear with
general
what we
information
control.
about
I
how
think
the
one of the
markets
best things
work
that
and
we can
stuff.
do is provide
Maybe I can rip
stability,
off somebody
to
else's
our
videos that are
customer
really
base.
good
So
and
what
just
that
pay
means
somebody
is
to
in an
remake
area
them
like
for me
supply
or
chain,
something
we
through
have to
AI.
have that redundancy.
Just
so
have
that
a
we
nice
can
spread
pivot left
of
or right
general
as we need
information
to,
and
we've done
do
a
a
lot of that
Discord,
over the
have a
last couple of
Discord
decades.
You
where
talk
people can go
scenarios. You know, this was an environment where we were having earnings where companies were saying could be this
and
one
try and
or it
build,
could be this.
you know,
So
build it
not so
up.
great. Good. And I'm just curious, are
That would be
there,
the
more
dream.
scenarios that you have to plan for in this environment, more than usual, or not necessarily?
No, I think there are. I think you're responding.
No, it's just I got to do it. You know what I mean? And the things that are holding me up from just saying fuck it, I'm going to put all my energy and extra time and everything and just work on it all weekends is I need to get an account and get a payout. I need to get an account from Apex, or not Apex, from Top Step, or I need to get the paid account, get a couple payouts, and then pay the big money to have the strategy reprogrammed so it'll get through licensing. If I got to that point, then I would set everything else up.
We haven't spoken to you in a few months.
I'd go all in and set it all up.
That you think about DEI, the way you think about ESG. This is all under your purview at Cisco.
Roblox?
DEI has, I think it's
What's
fair to say this
Roblox?
administration
Oh, is that
has
that
essentially a swear word, and it's something that they're
is that the gaming thing you were doing? You and Snooze were talking about or something?
Changed at all?
Oh, yeah.
So at Cisco, our purpose is to power an inclusive future for all.
So you get people up to a certain level, and then they buy the game from you or whatever, or you do it for them in their name.
which is this element of how do we use our technology to include all? How do we ensure that we can drive a level of accessibility?
Oh,
and
okay.
connection?
Yeah, that'd be cool. So,
That
like,
part
if
of our
people are
purpose
into it, they can
absolutely stays true.
see your updates and
Nothing
stuff.
changes despite
That
everything
sounds
going
like
on.
fun, actually,
From a
if
purpose
you were
perspective
really
and
into
how
it.
we show up to communities, we're
It'd
showing
be like
up
what
in
I'm
the same
doing,
way. And I think
but I'm doing it
everyone
for trading
understands
instead of
that the more
Roblox.
that you can help people connect via technology, they get access to education, healthcare. I think, Carol, that part of it is well understood. I think as a company and as we look at our internal practices, the first thing that I would say is you have to comply, of course, with any administration, and that's within the U.S. and outside of the U.S. as well. And so that's something that we're accustomed to doing. What I would say that's different, Tim, is that we take programs
pay
that
from
are
the Roblox thing
are a little bit more custom to a
for your
particular group,
bots.
and we've opened them up to the entire company. And what we realize is there's a lot of goodness in those programs, and we want everyone to have opportunity and to be successful.
That's what you can make if you let the bots run.
So, you know, potentially, so it sounds like
I think I made.
you've done, you've actually made it more inclusive.
Yeah.
Yes. Yeah. I think the stream, like, because I'm affiliate. I think the stream made like $42 last month.
And we've done that, and some of these programs are amazing.
I'll,
and so
I'll almost pay for one.
Is it fair to say that
One
employees your
one
employees,
reset
you
for
guys are massive,
50K.
like, that they want some of these DEI initiatives, that they do, and they're
I think there's two things going on. Our employees and candidates that are looking at Cisco want to believe that we have a set of values that are aligned to theirs. And we see that all the time.
Can you
in the
scale
interview
that
process.
up?
People have
Your
read
Roblox
our
thing?
purpose report. They know what we stand for. I would say from an employee perspective, they want to know that we still care and that we're still driving a level of inclusion and belonging, and I think we absolutely are.
One last question. I've met some of the senior executive women.
Can you like
at
copy
Cisco,
what
and
it
some of
does
you
to
guys
other?
really
Because you need
prioritize that.
people buying your
I look at
products.
yourself
Oh.
and others. But we continue to have, I think we've had this conversation with you. Why aren't there still more senior women in C-suite positions or C-level?
So people buy your
positions
bot or whatever.
broadly? Why is it still such a struggle?
You know, I think that for many companies, I think we do a really good job of bringing people in from university. And then I think there's a point where we lose women. At Cisco, we see great representation at the executive level and at the incoming levels. And so we have to continue to push through every element. But what we see and what the research tells us is that people want to see role models. And they want to be able to look and see someone that tells them, hey, if you're in this role, that means that I can be too. And so I think we have to continue to work on things like role modeling. I think we have to work on mentorship for all employees, sponsorship. All of these things, I think, create a better environment and provide career goals and pathways as well.
Got to be active about it, right?
That's right.
No doubt about it. Well, you are definitely a role model.
Thank you.
Great to check in with you again. Fran Kasudas, Executive Vice President and Chief People, Policy, and Purpose Officer at Cisco, joining us here at Cisco Live 2025. Hey, let's get back to some of the news after the closing bell. Let's head back to Charlie Pell.
All right, I thank you very much. Earnings news, specifically GameStop. After hours, the stock now tumbling by 4.4%. It reported net sales for the first quarter that did miss the average analyst estimate. GameStop, by the way, also saying it did purchase 4,710 Bitcoin between May 3rd and June 10th for cash. Bitcoin today trading higher by 0.7%, 109,535. Also reporting after the close of trading, we heard from GitLab, shares down 12% after the application software company's second quarter revenue forecast missed estimates. So to be clear, we do have shares of GameStop down 4.4%, GitLab sliding by about 12% after hours. The Dow, the S&P, NASDAQ all advancing today. Investors driving stocks higher after Commerce Secretary Howard Lutnick said U.S.-China trade negotiations in London went really, really well. Stay with Bloomberg for any developments on trade this evening. S&P up 32, gain there of 0.5%. The Dow up 105, up 0.2%. NASDAQ up 123 for NASDAQ, a gain of 0.6%. 10-year 4.47% with the 2-year 4.01%. Gold flat right now at $33.26 the ounce. West Texas Intermediate crude down 0.7%, $84.82 a barrel. And Bitcoin, repeating one more time, above 109,000 now, 109,563. Bitcoin up by 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. It is Bloomberg Business Week Daily. Trail Master Tim Stenovec. We are live from Cisco Live 2025 in San Diego. Highlights on AI, security, tech infrastructure, and more. Let's get to Mark Patterson. He's Executive Vice President and Chief Strategy Officer at Cisco. He's also the company's incoming CFO. He's set to take the helm of Cisco's finances next month. Not exactly a vacation that you're having before.
No pressure.
Taking on. Just fishing and playing golf.
Yeah, exactly.
Nothing going on.
Mark, you've been at Cisco for close to 25 years.
That's right.
You know, one thing that I've talked to other executives about today is sort of contextualizing this moment for us. Fran Katsoudas just said this is bigger than anything in her 30-year career at Cisco when it comes to what's happening with AI. Do you agree with her? Is this the biggest thing to happen during your career?
It is, for sure. And what a great time to actually be coming in as the CFO. And so just really, really excited about it. I think as you saw today at Cisco Live, just the payload of announcements and the kind of innovation that we announced today. I don't know when we've announced that much and seen, you know, that much innovation that we're driving as a company. Certainly in the years that I've been with Cisco. So we're pretty excited about it. There's a lot going on.
So, Mark, is this a time where, as incoming CFO, that you're going to say, go and spend, go experiment, do what you need to do? Or are you going to be like, all right, guys, like how...
You said spend. CFOs don't like hearing
just
that word.
handing out money. Yeah.
But I mean, how do you... It's going to be a competitive landscape. You know it. So, like,
is.
how do you figure out where do you spend, where you don't, as things are evolving so fast?
No, that's exactly right. We have more opportunity today than I can remember at my time at Cisco. So what it really means is we have to prioritize. We have to really focus on what matters most, is what I call it, and make sure that we're investing and fueling for success. And that doesn't mean necessarily that we're going to be looking to spend a whole lot more overall.
So you will say no occasionally.
There's already been a lot of no's. But there, more importantly, I think it's yes, but here's what we need to see, and yes, but this is where we need to prioritize in terms of our spend. And like I said, the opportunities are there. We just have to execute.
One thing that we found is that customers are spending money right now, and I'm wondering if you're hearing from any of your teams about geographic variances when it comes to the way customers in different parts of the world are spending money. Is there any pulling back? We've got our eyes glued to everything happening outside, everything happening in London right now when it comes to trade negotiations between the U.S. and China. We might hear from some of the folks involved in those a little later, who knows? But I'm just curious your view on the macro environment right now and what you're hearing from customers.
Yeah, it's a great question, certainly top of mind for us. We just closed a great quarter, and we saw balanced growth across geographies, every geography growing, every customer market growing, every technology growing for us in terms of technology segments. So, I think one thing is that it really shows the criticality and the importance of our portfolio right now and the technology that we're delivering and the kind of innovation that we're delivering as a company. I also think it shows that, while we're certainly in a time of uncertainty, I think that CEOs and CFOs and CIOs, they're sort of used to operating in a time of uncertainty at this point. We've seen geopolitical tensions, we've seen supply chain crisis, on and on. There's always been something. And so I think that what we're seeing is companies continue to prioritize, the technology that matters and what will make them move faster, smarter, and work better for their customers.
What do you see as you are taking over that CFO spot? Your predecessor really involved in the transition of making Cisco kind of going from hardware to software, and that's a big deal, and that's a big shift. And I'm just curious how you see it as the incoming CFO. Like, what do you see in terms of your shaping of Cisco? Is it an AI company? Is it a platform company? Like, how do you think about it?
Yeah, and again, another great question. I think as you heard today, we're delivering the critical infrastructure for the AI era and the agentic AI era. And so that's going to be a big pivot for the company. I think that we did have a big move to software and subscriptions. You'll see us continue to push that as we move forward. But there's so many opportunities just for growth overall. When you think about AI and how far we've come over the last year. I mean, it was just a year ago, I think, that a lot of folks were just, they were asking themselves, what is Cisco's role in AI, and is there a role to play? And
I think it's fair to say that we too,
Yeah.
as we've seen things move really quickly over the last year and a half, 2 years.
Yeah, and so you fast forward just from a year ago, and the success that we're seeing in the hyperscale space, already beating our $1 billion target that we threw out there a quarter early. You're seeing, the announcements that we made in the Middle East, the sovereign AI build-outs, neo cloud opportunities. Now you're beginning to see the enterprise AI opportunity, which we think is going to be an order of magnitude larger, but is very nascent still.
Talk a little bit about your philosophy when it comes to capital structure, because after the Splunk deal, Cisco took on leverage on the balance sheet for the first time in its history. Are you going to take on more debt to fund deals or to fund buybacks? What's your view?
We're certainly not opposed to that. Our current cash flow, though, will support the buyback as well as the dividend, and we're committed to that for our shareholders. But we're going to look opportunistically at deals. I think one of the things that I love about G2 is, if I'm really candid, I think over the past, I don't know how many years, you've seen us oftentimes sort of fall behind in some places and make an acquisition to catch up. And I think G2 is while he'll always look at acquisitions that are needed and be opportunistic about it, he's got we're going to build first mentality, and wants his team, really driving his team to drive disruptive innovation. So what you're seeing us do with Hypershield, what you're seeing us do with AI Defense, all the announcements that came out today around agentic AI and the campus refresh that we've got out there. I think there's more of a mentality today of, hey, we can innovate faster, and we're really going to push our teams to really think disruptively and not play catch-up, but actually be the leader.
Hey, SM, I'm going to shut it down for today, dude. I'll be back in the morning. Get out there and pound some pavement, man.
People in to just experiment, support them with hardware. They could either
somebody out there is looking for somebody like you.
Go off on their own. How do you guys embrace?
All right, brother. You have a good night. I'll see you tomorrow if you come by.
Be at the forefront of emerging technologies.
Yeah, I guess first and foremost,
sounds good.
Innovation's happening.
Forecast
all over
out.
the company for sure, and at a much different